Yo, there we go. We're live.
Yo, yo, we got there. How are we doing, guys? What is good? Going hey fat choi for those celebrating Chinese New Year. I don't know in Mandarin, but you're gonna get it in Cantonese.
Okay, well, Happy New Year's to everybody who is in the eastern part of the world. Oh, mate, how are you this morning? How was your weekend?
Dude, good man. Yeah, really good. Except a bit funny. So my like the back of my neck's a bit stiff, but man, I'm good. I had a good weekend. I went to the beach. Dude, I haven't been to the beach in years. Like that was super nice. Like it was like a proper beach day. I went to the beach and just took a relax on the beach. So mate, I'll be honest. I had a good weekend, and it's like 30 degrees today. So I put a t-shirt on, and I don't know if you can tell. You know, with like a structure of a t-shirt, you know, it's just lost all structure. It's that hot. So man, it's
weighing
like
you down, my
30.
friend. It's weighing you down.
Yeah, it's probably absorbed all the sweat, man. It's like 30 degrees here. It's stunning.
It seems as
What
though
about you?
you
How's your
are like swapping over in terms of like what the weather's like. So here where we are now, we've had like horrible rain.
Oh,
I like
really?
rain, but like it was like torrential downpour levels of rain, and it was super hot. And now it's cooled down significantly, so I'm enjoying the weather. But it's funny that when
Yeah,
you're
nice.
having like your cold weather, we're having blisteringly hot, and
Yeah,
when
that
we're having like our cold weather, you're having like blisteringly hot. So
dude, that's
we're
really
just
interesting. I was going to say because literally when you were having that blistering heat, I was like, ah, that's not too bad. It's like 15 degrees right now.
yeah,
That's
I
quite
think
funny.
it might be 18, 17 or 18 degrees. The wind is like nice and chilly, but the sun obviously is shining. So yeah.
Yeah, yeah, fair. Yeah, nice. Dude, you can't beat it, man. Like I was speaking to my dad, and I was like, "What's the weather like there?" And he was like, "It's rained every single day in the UK since January the 1st." He said it's
Oof.
been like 40 days, 40 nights of rain, and I was like, "Really?" He was like, "Yeah." I was like, "Wow, that's amazing! It's sunny here." I was like, I was on
Right.
the balcony on like FaceTime to him. Uh-huh.
Yeah. Your dad was like, "Don't be that guy, Will. Don't be the guy that
Yeah,
rocks up
literally.
and be's not a good man to everybody else. Joking about how
Yeah.
hot his weather is, while all of us are drowning." That was a horrible accent.
I,
I'm sorry.
I don't know where my dad's from, but
Anyway,
oh man.
let's jump in and see who's in this morning. First and foremost, MGN is in this morning. Good morning. We've got Judy S. Hey, good morning. Good morning to you as well. We've got Craig in. Hi guys. Good morning, Craig. We've got Ty. Hi guys. We've got Miss K911. Good morning, LJ and all. Well, LJ ain't here yet, so maybe say hello
Hi,
to
mate.
Richard and William first. LJ will be in about an hour and a half, and you
Yeah.
get to have a little bit extra LJ today because LJ is staying on ever so slightly. So yeah, you get about 3 hours of LJ today if
Ooh
you're
la
lucky.
la, got a whole lot of LJ.
Yeah, we've got San in saying hi. We've got Henry in saying good evening, Henry, all the way from Australia. We've got
Australian.
we've got Kumar in saying good evening. Yes, please do us a huge favor and hit that like and subscribe button. And it really helps the channel and ensures that you don't miss a thing. And if
Dude,
we
where are we
ever
at, by the way?
have announcements, you'll see it first and foremost on the YouTube channel. So if you're liked and subscribed, if there's something happening,
Dude, have you seen how many subscribers we got right now?
I have not. How many have we got?
Bro, we got 98.8.
Oh, dude, we're getting
We're
tantalizingly close.
1.2 away. Mate,
98.8, 1.2.
that's it.
Dude, do you think we can get it by tomorrow?
I mean, I can't. Yeah, I can't see why not. Certainly by like the end of the week. I reckon if we really push it and like share this channel, we'll get it by tomorrow.
Yeah, let's do that. Come on, guys, like get us to 100K. It would be amazing if we reach 100K tomorrow, which is the
That
10-year
would be
anniversary.
insane.
That would
That
be cool.
would be insane.
Martin I in good morning, Martin. We've got Shane, good morning, gents. I love the gents because DJ
Degents.
into gents is a kind of guitar riffing where you go genting. It's very low down, very like dun dun dun. dun. Anyway, we've got Ellis in. Good morning, fellas. Good morning, Ellis. We've got Darth Linux. Good morning, all. Oh man, I love this Darth Linux.
Yeah, that's sick, isn't it?
Yeah, that is pretty cool. We've got Derek Tomo in this morning. Good morning, investors. Woo! Investors.
Wow, what a compliment, man! What an awesome thing. We've been called degens. We've been called all sorts. Good morning, investors. I like that. I
Well,
rate that.
let's not call ourselves market investors. Let's call ourselves investors in everybody else's success. We're your success investors. Something like
You
that.
have to sell me a little bit harder on that one.
Trying to find the word, and I was just like, couldn't get it. Smart Risk Trading Hub. Hi guys, good morning from Ghana. Good morning to you. We've got
Yo, good
Naruto.
morning.
We've got Naruto in this morning saying hi. Good morning, Naruto. Whoa. Wonder Japan SL. Good evening from Japan, dude.
Yo, what's good?
We are literally global, literally
Yeah, man, that's sick.
from Japan.
I was nearly.
Yes.
That's sick. I should have been going to Japan this month, I believe, but I decided not to in the end. I was going to go skiing in Japan.
Why not? What have you got against Japan?
Dude, I wish I was in Japan, not here. I prefer Japan.
Let's not have all of your Hong Kong friends hear you say that. We've got Lorraine in. Good morning, Lorraine. How are you? Good morning. We've got Chill Spot. Hey guys. 98.7k. Woo, close. Henry, I've taken the day off on Wednesday to watch the 10th anniversary stream. That is commitment. Told you that you had a site issue, meaning I don't see you going to work on Tuesday or Wednesday morning. So I'm glad that you're going to be with us tomorrow. Yes, on that note, we do have the 10-year anniversary event tomorrow, which starts at 2 o'clock GMT. So how it's going to work is we're going to have a regular stream, like we're doing right now, and this stream is going to end at 2 o'clock tomorrow, so about an hour earlier. And then everybody from this stream, you are all invited to go over to the YouTube stream for the 10-year anniversary. There's a link in the description box below, not just to the site, the Fiverr site, but also to the YouTube channel. So that one I will also post again tomorrow. And tomorrow you can directly just click it and it will immediately take you to the 10-year anniversary event. $2 million worth of giveaways. We have community prizes for people within the community, so awards that we're going to be giving out. We're going to have keynote speeches from Sol, from Mickey, from Gil, who is the founder of the Fivers, and then we're going to do a bunch of announcements, like pretty cool announcements. So, yeah, everybody's been asking for a lot of stuff, and it's going to get announced, yeah, tomorrow. So very, very excited for that, mate. Like super excited. So yeah, be like Henry. Take the day off on Wednesday if you need to, or take both tomorrow and Wednesday off and join us with the live event. It's going to be well worth it, guys. Seriously.
100%.
We've got the Stoic Trader in. Good morning. We've got CM DAX 40 analysis, please. We will get into that immediately, just after we've said hello to everybody. Shane, I've got 7 strings in my hand. Glad you got my gent reference rich.
I didn't realize it was a gent reference.
I play bass, so I got your gent. I got your gent reference, mate. We're anyway. Callum is saying, if the trade goes well, spectacular. Sorry for the caps. Yeah, it's not a problem. If the trade goes well, spectacular. Oh, sorry. English words, mouth brain connect. If the trade goes well, speculator. If the trade goes bad, investor. There we go. Awesome. All right, cool. I think that's good enough for chat right now. Let's hit the market. Will, you're a DAX trader, aren't you?
No, I'm not. I've dabbled with the DAX. I know a bit of the DAX, but let's
Walk us through.
let's have,
Walk us
let's
through.
have a
Walk
look.
us through what you see on the
Let's
DAX.
have a look. Right then, I should have the DAX up here somewhere. No, I don't. Let me go get it for you. Let's go over to the indices. Oh wow, I don't even have it in my arsenal. Okay, I gotta go up and get it. DAX 40, there it is. I hadn't even had it loaded in my arsenal.
That is interesting, mate. Like, I would have thought that DAX, the mighty DAX, that you would want to have a look-see at it.
The DAX, the mighty DAX. Dude, right, let me get my template up. So apparently I'm going to be doing my analysis on MT now instead of TradingView, just because I think I was having a little bit of Wi-Fi issues earlier, and TradingView takes a lot of computing power from me, just because it's got so much pull on it. So therefore I'm going to use something a little bit more, prehistoric. I'm going to use the MetaTrader terminal. So the DAX, beautiful mighty DAX, is right now currently looking like a bit of a ranging market. However, we've got a nice little high here after the bullish movement up. And then we've also got this nice little low down here. Now this is on the 4 hourly time frame. Sorry, do not forget this higher time frame. So this is the current range that we're in. We've got these highs that we can target up here, but we have also got some lows that we can target if we're planning on selling. We've got some nice lows just down here. So now that we've got our potential areas of highs, lows, and consolidation, we can start dropping down timeframes, as now we've got our points of interest, should we call them. So now that we've got our time frame points of interest, we've got this really nice sell-off area just here, which has completely mitigated all this buy move up, and it's even wicked below this this low here. Potentially, if we can close below the low, we would then invalidate the whole theory of higher highs and bullish momentum to the upside. However, we didn't. We wicked it, and then we consolidated around a little bit, so anticipating potential continuation up, which was not true. We didn't get it. We ended up continuing a little bit lower, eventually closing underneath. However, we closed underneath with a lot of wickage. You can see this area here isn't a confident area. However, so therefore, this is still in some way, shape, or form respected in my eyes. So what do we want to see? We want to see some bullish momentum heading up. Do we get the bullish momentum heading up afterwards? No, we get nothing until today. The past 2 hours have finally broken and closed above this local high here. So we can, in theory, okay, are we going to take this one? Yes, we can. So we have, in theory, now got a higher high on the, let's call it microstructure. It is still the 1 hour time frame. It's not microstructure, but let's call it, okay, no, let's not call it micro. Let's call it internal. Because, like I said, we've marked out on the higher highs, or sorry, on the higher time frame on the 4 hour. We have got a consolidation price, and we'd like to see price move a little bit higher. However, we can now say on the 1 hour time frame, we've broken and closed above this consolidation with a really nice bullish hourly candle. However, it got completely mitigated by this second hourly candle here. However, we're seeing a nice little wick to the downside. So let's drop down one more time frame to the 15-minute. The 15-minute is going to be a potentially entry time frame for us if we see something. If not, then we will go down to some microstructure, which will be the 5-minute. So now that we're seeing the 15-minute, we can actually see that price is shaping up really nicely. That being said, we got this consolidation here, really nice consolidation, which is also in line with the 1 hour consolidation. Break and close above, which we have got here, which also shapes up with the higher time frame being the 1 hourly. Pull back into this break and close above. If we actually drag, beg, steal, and borrow from this, there we go, and just try and get a straight line going. Magnifique. Oh, no. Okay, come back. There we go. Oh, come back. There we go. Cool. So then we got this break and retest zone here. We've also got the break and close above the consolidation. If we can hold around this consolidation area here, we've got 1 wick, 2 wick. If we can close relatively, we've got 9 minutes. So if we can close in 9 minutes time, relatively wick high to the downside, then there's going to be a really nice potential that this is going to want to continue moving up. If we do look at the microstructure being the 5 minute, we want to see some form of consolidation here, a break and close above, and then I think we're going to get our potential buy signal to the upside on the DAX. Where would we be targeting on the DAX? Go up to the hourly time frame because it looks nicer. We could potentially look at filling the imbalance of this whole move to the downside here, which would be within this imbalance zone. So I'd like to say around here somewhere. This nice little zone here. Or we can actually target the highs. So we could... There we go. There we go. So we can actually target the highs, which is going to be 25,237.41. So that could be a potential buy area up. But I'd like to see some confirmation on the 5 minute, preferably a consolidation and then a break and close above the consolidation. The 15 minute, however, to me looks really, really nice, especially if we can close in 7 minutes time, open up a new one, move to the downside, wick up, that's a third wick rejection, and then start moving to the high side. I think there's going to be some really nice buying potential in the DAX. I won't be trading it because I don't trade the DAX. I can trade the DAX and I have traded the DAX, but my confluences and my strategy isn't the strongest on the DAX. So therefore, I'm going to be leaving it alone. However, that is what I'm looking at on the German 40 today.
No touching the DAX today.
No touching the DAX.
Where was this? Martin saying probably today is a no trading day. It's a bank holiday. I also didn't see any convicting moves during Asia. So, why are you doing this? There we go. None of my my toolbar at the bottom has decided to freeze. So I couldn't bring up anything that I wanted to. All right, let's do this. Okay. We do have...
I was going to say, do you want me to bring your screen up here?
Yeah, nothing, everything was frozen. I don't know why. We do have... Let me zoom in a little bit so everybody can see it nicely. There we go. We have... Bank holiday today, obviously. It is the Chinese New Year at the moment, and I do believe that it's going to be a fair few days. So let me just zoom out a little bit.
Up until the 18th.
We have today, we have tomorrow, and we have Wednesday, Thursday, Friday. It's a bank holiday the whole week for the Chinese. It's the whole week. So what's that going to mean for gold? I wonder. Anyway, let's just look at this. So bank holiday for the US as well today. So this is what Martin I is referring to predominantly. So as you all know, if you have a bank holiday, like for argument's sake, the USD, the London session is generally going to be the mover for the day. And then the US session or the New York session is going to be slightly subdued. In this case, we have both Canada and the United States being on a bank holiday today. So the New York session is going to be a little uninspiring.
Isn't it Liberation Day or something? It's something to do with the war, I believe.
It is President's Day.
Is it President's Day? Okay, fair. I knew there was something going on in America. I didn't quite know what, though.
Yeah, and in Canada, it is Family Day. Two vastly different things that they're testing, or not testing, but that they're going to celebrate. All right, let's have a look. See, I saw somebody asked for gold. But first of all, Callan saying, do we get a free funded account for your birthday? So there's $2 million worth of accounts that we are going to be giving away for free. Mahala. So you could be one of those lucky people that are going to win accounts. So you have to be here, first and foremost, on the day, which is tomorrow, 2 o'clock GMT, on the Fiverr's YouTube channel, link in the description. All you have to do is just be here. You need to like, you need to subscribe, and there will be a link for the giveaway page that you can just go and select on the day. The link will be in the chat box and in the description for you to go and try and win yourself an account. And it's going to be throughout the day. We're going to have everybody have an opportunity to register for it. And then at the end of the event, we will do the giveaway. So there might be some secret words that you need to watch and log in with. I don't know why my brain is making me say words and sentences like this. Anyway, good morning, guys. Infinity, good morning. Hello, Rich and Will. Wonder Japan SL is saying, wow, it's a pleasure, Willie. Hopefully you'll enjoy Japan. Dude, I would love to go to Japan. Like, seriously, I would love to go to Japan.
Yeah, 100%, man. It's one of those countries that I've always wanted to go to. I just haven't come across to go to it yet. Maybe, I don't know, maybe I'll try and do it either this year or next.
Aman, there we go. Aman was gold view. All right, I will go through goldings for us. All right, so this is the daily chart on gold. I have, as I always do, removed all of the drawings that I had so that whenever I do come to the market, I have a fresh outlook and generally see whether or not I can build a new idea every day that I come to the market. So this area over here, we have, that was the most, not this recent, but the previous, let's call it big sell-off that we had on gold. This was all the way down on the 29th of December. So that whole area pushing all the way through, we have a base area. So this is a daily base, which means that if price were to break out of this area and come back to it, we could potentially see another reaction like we did over here. So what happened was we had the new all-time highs created all the way up over here. Then we had this catastrophically big sell pushing price all the way down back into the most recent big area where price collapsed out of. Let's not say collapse, started selling off aggressively. Price came back into it, and then we started to push a little bit more bullishly. Now, if you just look at the daily, we are still very much bullish. Price is still pushing up, and we're not really breaking downward structure. We're not really breaking this, well, we're not breaking upward structure, let's rather say. We're continuing higher. Even though we had this big sell-off, we had no follow-through. So in general, if you would think of this sell-off that we have here as the initiation of a new move, you would need a new sell-off. You would need a continuation to push lower. So when price did push lower, it attempted to push lower over here on the 5th of February, and it just failed. So to me, we are still not quite in a bearish market on the daily for gold. Right now, we are more in a sideways market. So we're still kind of sitting in this area over here ever so slightly. We still need to break above and close and then start pushing higher, or we need to break below and start pushing lower. So what we want to see is we want to either see price push above, retest, and continue to try and test the all-time highs, and then have a reaction, either break through it or then react off of it, start pushing lower as it had done previously. Or you want to see price start making its way lower to try and test this base area over here where we previously had a singular reaction off of. So I will go into the lower time frame. Let's go to the 4 hourly, and then we'll see how consolidative we have been. So if I just remove this box and I just remove that, and that, because I've already been looking at gold on the lowest time frame, let's just have a look. So here we have a base area over here within that downward spiral. Very first base area for us to come and test, should we be able to break above this consolidation that we have here. We have a consolidation zone which is in line with a high point that we tested on the 4th. So I will just take this whole area basically. This whole section, the last candle before price started pushing or attempted to start pushing lower again, is the one that I'm taking into consideration on the 4 hourly. Price eventually came back into it, slowed, consolidated ever so slightly. It was a very slow upward push. Let me just hide those. It was a slow upward push trying to get back into it, and we made equal highs. Was this equal highs? No, it wasn't. We wicked above. We wicked above, but we didn't close above this whole section. So basically, yeah. So this whole area here is taken into consideration. You can say. So that whole section there, all the way down to, let's say, over there, is taken into consideration. So this whole section here to me is an area of interest, because previously, before we had that massive sell-off, we had this big, large 4-hour attempt to push price lower. So 2 days of not really getting us anywhere. Price started pushing higher, then eventually started tanking lower. When price eventually came back to this area, we reacted by trying to push lower. We failed. We came back down here into this very last bearish candle to try and push price lower. Failed, reacted back off of that, came back into this area of interest. Tried to break above, failed, started pushing lower, and then absolutely slowed down. Now what you can also see is that there's another base area right over there as well. So for those of you who know how I view base areas, this is basically the attempt for price to push lower. We have a reversal and then a volumetric reaction after another attempt to push price lower from here, which if this was a continuation of the downward trend, we would have seen price try and push lower. However, we didn't. Price instead attempted to push higher from this point. So when price does come back to it, I want to see either the same reaction as what we had seen over here, or I want to see a complete disrespect of the zone and absolutely tank lower. So I want to see it push through. Let's move this one. I want to see it push through completely, retest, and then continue lower. But in this case, we came back to this area and we started pushing up. So as it stands right now, this reaction that we've had here has re-established an attempt at a new bullish movement. Even though we still have this higher area up over here in contention, we can make it a little bit more clean, let's rather say. Just, yeah. So we'll take the highs of that whole zone and just a few candles, let's say something like that, just to make the area not as wide as this one up here as an example. So price then is trying to re-establish a new bullish movement from here. However, this volumetric movement that we had last week Thursday, if you draw the fib tool, you'll see that we basically broke above this 0.718 section over here already. So I cannot see that this is just a mere retracement and then continue lower. I think that this is a potential push higher. So first area of test is 5,060, then all the way to the high point of Wednesday, which was 5,120. So this area for me is the first area that needs to be tested today or maybe tomorrow to try and convince me that we're really going to push higher. I think we can come and test it during the day today. Maybe we'll see a breakthrough. I'm not sure. But I think by tomorrow we would definitely have tested this area. And then inversely, the lowest area to come and test is 4,903 down to 4,825 for the low point. But let's just take this last, let's look at Thursday, the 12th lowest point. So 4,903 to 4,878. If we do not reestablish a bullish trend from here and we start pushing bearishly, this is the first area to be tested down here. So 2 base areas. Well, this one is really a break point in my opinion. So if we do break above this retest, we will continue higher, and then we're going to test 5,282 to 5,426, and then from there, if that fails, we will go to all-time highs, which is 5,602 to 5,545. That's what I want to see. If we go down to the 15-minute, you will see that this attempt that we had, where did I put my drawing tool now? There we go. This downward push that we had on Thursday, there was a singular test on Friday the 13th on the candle open, basically on the daily open, to try and push lower, and we failed. So this area down here to me is a very strong area of interest. If price were to come back down to this area, we should see a strong reaction, either pushing off of it again, or we'll see a little bit of slowed momentum and then a continuation up higher. So if we're on the lower time frame already, if we just look at last week Friday's London low, we have yet to test that one. Long before we can even get to the Tokyo low, which is all the way, let's say like that, before we can get to the Tokyo low. We've already tested the New York low once already, and we haven't come to retest it once. So the New York low of Friday. So I think we can definitely see some sort of bullish momentum coming into play here. We do have the highs of last week Friday that is in contention. So 5,039 to 5,046. What I would like to see is price make its way up towards this area, try and react off of it to try and push lower, and then fail, and then try to push through, retest, and then push into that higher area over here on the left. So I'm just going to add another layer right here. So I
like that.
Yeah, this is what I ideally would like to see. And then from this area, obviously that was the last time that we had, let's call it sideways action, and then a volumetric sell down, which we had with the news. So I want to see what happens when we get back to this area. Everything else, all these areas over here, these high points that we have, yes, they can be tested, but this is my highest area of interest that I want to see price come to. So this is my hope for today, that we can have some sort of attempt to push price higher. We do have areas where price can react off of. It might not be today, it might be tomorrow or the day after. But I feel like we can come and test this area at least within the next 2 days, I feel. If we continue bullishly. If we continue bearishly from here, then obviously these lower points are my first areas of interest.
Maybe not the Tokyo low, but I'd love to see gold come down to that London low, consolidate on that London low, and then start moving higher, and then move back up into those highs that you marked up.
Yeah, so technically this area down here is a bit of a base as well.
Mm-hmm.
And we've already had 1-2 reactions. So if I just zoom in, you'll see the full candle body, the last candle before price started pushing higher. meaning that if this were the portion where price started pushing lower, it retests and continue lower, it needs to actually have follow through. And this area here, we had zero follow through to try and push price lower. So to me, this area has already been tested once over there and then a secondary time over there. So it is definitely a higher area of interest should we start pushing bearishly. And this is 4,945 to 4,926. But that's only if this scenario up here does not play out. And then there's the third option. We can literally just consolidate here. We can literally just sit between these 2 points because there is no real market participants today. So New York, Canada, well, US, Canada, no China for the whole week. We may as well just sit here in this area for a few days as well. That's the alternative as well.
Yeah, I especially with the amount of the amount of bank holidays coming out this week, I think that it could just be stagnant price for a bit.
Yeah. So once again, what we want to see and what will happen might not be the same thing. If it consolidates, it's understandable. If it breaks through, it also makes sense. For me, technically, there's a reason to try and break through, but there's also a reason to react off of this area because fair enough, on the left, we've already had a reaction volumetrically pushing it lower. So ideally, I want to see this. I can see this get tested. I can also see it hop between these two areas.
Yeah.
Very much that. We've got In the Wild in. Good morning, gents. The two different bank holidays, US and Canada, says a lot about the two nations. It does. The one celebrating the president and the other one celebrating family.
Yeah, fair.
We've got Goran in this morning. Good morning, Goran. Callan saying, great, I got funded and then I lost it. Dude, that's unfortunate. But you being here tomorrow, you have an opportunity to win yourself another account and become funded once again. Go for
Absolutely.
it. Solomon is saying, I love you guys. Thank you very much, Solomon.
We love you.
I don't know you, but I would venture to say that your love is deserved. We love you too, mate. I'm joking.
So just tell the man we love him, man.
Your love is deserved.
I love you, Solomon.
We're a bunch of lovable people. Anniversary tomorrow. Get ready for some exclusive offers. Yes. We also have some really exclusive offers. We may have we already have the $2 million worth of giveaways, but we may also have discounts on some accounts. You have to be there tomorrow to see whether or not we're going to have any of those things. So tell everybody that you know to come and join us for an opportunity to win some accounts, get some awesome giveaways. It's gonna be fun. It's gonna be so cool. We've got Louis in. Good morning, team. Sandesh is saying we are on the daily sell zone in gold. I bet there will be one sell. I am 100% sure about it. I am just looking for confirmation in 4-hour sell zone with a 30-minute engulfing candle. Interesting. So if I go to the 4-hour, I don't have the 30 minutes, so let's put the 30-minute up here. 4-hour. So you're saying we're in the sell zone currently? Oh, on the daily sell. Sorry. Okay.
Oh, okay. You those highs fair. I was going to say I don't think we are.
Just looking for confirmation on the 4-hour sell zone with an engulfing candle. So the 4-hour sell zone, obviously, I think is a little bit higher than where we are right now. And on the 30-minute, you're looking for an engulfing candle to push lower.
So looking an engulfing of the break of that wick low?
This one down here. Or are you looking for price to come in over here first and then look for an engulfing candle pushing price lower? Unless you're taking this whole section here as a sell zone, sell point.
I think so. Yeah, I think that's what he's hinting at. And then he's looking for a 30-minute engulfing of current price, I believe.
So if this one is bullish, the very next candle to be bearish, and then golfing.
Yeah, and an engulfing.
All right, we'll see what happens with gold.
Interesting.
We've got Pooley in this morning. Good morning, Pooley.
Yeah, really.
What's up, Pooley? We've got Wonder Japan saying, because of the holidays, there is not a healthy move to catch on gold and NQ. I agree. I genuinely agree. I think if we are going to see some sort of movement, it's going to be a very slow upward, maybe a slow downward, then a slow upward again, but across multiple hours. Maybe even we'll see a move tomorrow if we're lucky.
Yeah, I agree. I think that could be the case. Certainly, my tomorrow anyway. You know, maybe later on tonight, late New York session, going into tomorrow, like Asia morning. So maybe my tomorrow, but I can't see anything too exciting happening over the next my couple of hours. You know.
I mean, to be fair, it also depends on how you trade. If you're going to be doing buy and hold for a few days, or if you're going to do intraday, or if you're going to be scalping, there's going to be an opportunity for everybody. That's the nice thing about trading, is that there's an opportunity for everybody. If I don't see anything on the swing trade side, I go intraday, and if I don't see anything on intraday, I can go scalping. Not that I do that, but I'm saying if I have that.
Yeah, I mean, if you have multiple strategies that coincide with multiple time frames and sort of trading styles, then yeah, that would work.
Sandesh is saying, I had bought 100k account. I am on the first phase. My total turnover is 71k. Huh? You're on the first phase, but your total turnover is 71k. My total profit is 36k. My account is 1.5% up. How to deal with this? I don't think I understand what you're saying.
I have no idea what you're on about.
I bought 100k account. I'm on the first phase, all right? So you're supposed to make 10%. My total turnover is 71k. Okay? So you're not up 71k, but your turnover is 71. My total profit is 36k.
So your net up 36k, but your gross 71k.
It doesn't make sense. My account is 1.5% up, which would only be $1,500. How to deal with this? Sandesh, I don't quite understand what you mean when you're saying your total turnover is 71k and your total profit is 36, but your account is 1.5% up. Unless you're saying that it was up to 71k, in which case you should have passed the account already.
I was gonna say you would have definitely passed it.
Your total profit was 36k, which once again you should have already passed first phase. But my account is up 1.5. So I don't know which information you're referring to. I'm a little bit lost, Sandesh. Please give us a little bit more context, mate. Anyan saying, my trade is already running on gold buy side. Can I hold that? What does your strategy tell you?
My strategy personally, I like the idea of some buys on gold. I'll be honest, but that's me. You know, don't take what I have. Like Rich said, you know, just take into consideration that, you know, what's your strategy say. But I personally, if I was to be trading gold right now, I do like the buy side on gold. But don't, like I said, you know, don't take my thing into consideration.
I agree. I like the ideas of buys. If I go down to the 15-minute, we do have the highs of the Tokyo session that we can potentially come and test. And we do have these areas over here where price did try and push lower, and then they were follow-up bullish candles. So even though it could be slowed upward ticks, when we do have these attempts at volumetric pushdowns, it is short-lived, and it acts as a base area for price to react off of again. So price tries to push lower. So you can imagine if this is the high of the day and that's the low of the day, which it is. You don't have to imagine. But what I mean is like, as price is trying to push lower, when price comes back to this area over here, you can already see that it looks like a V-shaped recovery. So if this recent swing point over here was a base area to try and push price lower, so a bearish base, it disrespected that bearish base and turned it into a bullish base to try and push price higher. Because if we did indeed want to push price lower from this point, we would have expected to see price push lower, make a base, continue lower, make another base, and continue even further lower. We would not see this kind of action just replacing it. So it does look like it is more of a V-shaped recovery that we're having. And then if you look at what we were doing from last week with this massive sell-off, we've been trying to recover all of the sell-off. So I think that there is a potential for us to definitely come and test up 5,039 at least. But first and foremost, this 5,031. So if you're in buys, I would say always cautious. Just follow your plan. But I can see us buy up into this area. Just based on the way that price action has been going on the lower time frame. Vinit is asking, how many traders reached at the highest scaled account? Interesting that you should ask this, because tomorrow, during the 10-year anniversary event, somebody is going to be awarded with an award that is going to say that they are the highest funded trader. So stick around for that and you'll get your answer, my friend. Tomorrow, I mean. Navin is saying, congrats on the 10 years past a 250k bootcamp just a few days ago, waiting eagerly for my funded unlocks. Dude, first of all, congratulations. Secondly, it does take some time. It could be a few days, 3 days, 4 days, that kind of like thing. What's happening right now is the risk management team is going through your final phase of your bootcamp, and they're just making sure that everything that you've done there was consistently the same as what you did through your first and your second phase, and they're also making sure that your risk parameters are in line with how's a good way of saying this? Your risk parameters are in line with what would be considered good risk management. And then once they're satisfied with all of that, you will get your funded credentials, and then there you go. Bob's your uncle, mate. Are you muted, Will?
I shouldn't be. Can you hear me okay?
Yeah, I can hear you. It looked like you wanted to talk earlier, and I couldn't hear you at all.
Oh, perhaps. Let me just check my wiring. Perhaps I've got like a loose wire on my mic.
Naveen is saying gold is in the no trade zone. Silver may be bearish. Let's have a look at silver. Yeah, silver is definitely slowing down.
Yeah. It's usually pretty similar to gold, but it's a bit slower and not as volatile. But usually it seems to follow gold quite nicely.
Yeah, the difference is that on the lower time frame, silver is not making higher highs and higher lows. So, if this area down here, you've already tested it once, twice, and then you have this area up over here that was already tested just the once. So, one reaction. Now, if you have a look at gold on the same time frame, you'll notice that there's higher highs and higher lows as from Thursday, basically. If that's the low, there's a high, there's lows, there's highs, and so on and so forth. But if you look at silver, silver is way more consolidative. You have the low, you have a high, you have a higher low, you have a double high over here, and then you're just kind of like getting stuck in this area. So you're making constant double lows and constant double highs right now. So you're going from area of consolidation, going a little bit lower area of consolidation, going a little bit higher area of consolidation. Just overall, it is just a little bit sideways in my opinion, where gold does seem like there is the potential to want to push higher. So the price action is not quite the same.
Yeah, gold definitely looks a lot nicer than silver in my opinion.
Look, we can be completely wrong. I mean, price can literally decide it wants to carry on going lower, because we do have this area over here where price did attempt to push higher and failed, and then you started pushing lower. But I think it can be a little bit higher. I think it can be the highs of Tokyo first that needs to be tested, potentially. Josh saying, hi guys, for me gold at the moment is virtually untradeable. What stop loss size are you using? Thanks. So obviously I'm not in a trade in gold right now, but if I were trading in gold as an example, what I would do is, for argument's sake, I would look at my area of interest down here, which is a base area for me. And then based on this base area, had I had gotten in, I would have preferred to have gotten in on this bullish candle over here. My stop loss would have been slightly below that base area, and I would be targeting this high point up over here for a 1 to 1.5. Okay, 1.5 is a little bit higher. 1.5 is up over there. So I would probably have gone for a 1 to 1 on gold, something like that as an example. Now, generally, I would probably not have my stop loss all that low. I would generally have it just below the most recent swing, so the most recent candle. And then in that case, a 1 to 1.5 would be there. And that's what I would have looked for. So a little bit more scalping instead of holding it long intraday. So that's what my size would, of what my stop loss would have been. And then my lot size would have been 0.5% or 0.25% of my account size. Depending on the account size will then determine the lot size itself. But 0.5%, 0.25%, most probably, because it's a little bit sideways and it's a little bit slowed, and we have the news of the not news events, we have the bank holidays today. So I would rather bring my risk down on days like this than pick it up. So 0.25% risk I think would have been great. And then it really depended on the account. So for, let's go to gold. This is this one over here. So if my stop loss was over there and my entry point, wait, how much was, why? So that would have been 10, give or take $10 per fine ounce movement. So a stop loss, come on, of 10, give or take somewhere over there, would have given me a 0.04 lot size for a 1%, so 0.01 for a 0.25. So basically going absolute minimal risk on a trade like this. So 0.01. 0.01 on a 5K. So then you're risking $12 to try and make $12. Now it doesn't sound like much, but that is how I'm running my risk on this 5K account.
I love how people say as well, what size stop loss are you using? I love that question. It's such a good question because it changes all the time. Like, what size stop loss? 10 pips, 100 pips, 10 pips. It's like, no, my stop loss goes where I'm wrong. Like, where if it's a low and that's my invalidation point, then that's where my stop loss goes. Whether it's 1 pip or 100 pips, it doesn't matter. I'll adjust my lot size and my risk accordingly, but my stop loss will go wherever I am wrong in the trade. So therefore, if the trade, or if price goes underneath an order block or a consolidation zone or a lower low or a higher low, then, and that's where I look at the trade and say, that is where my trade is no longer a valid buy or sell trade. That's where my stop loss goes.
Yeah, fair. I think that's fair. LJ is saying he means aggregate of
profit and loss. Yeah, fair. I realized that as soon as I saw the comment. That was just such a long way of going about it. Yeah, no, fair. So in other words, yeah. So in other words, what he's done is his total profit and loss has equated to that price or that turnover of price. Yeah, of 31k exactly. So therefore, net he's up $1,500, which is 1.5k. So in other words, he's break even. You know, like he's just going around in circles where he's buying, then he's losing, then he's selling, then he's losing, then he's buying, then he's losing, then he's selling, then he's losing, then he's winning, then he's losing, and it's he's buying and selling, winning and losing, and it's just keeping price pretty much where it is. And therefore, right now, as of price, he is at 1.5% up, which is $1,500.
Yeah, it was just a weird way for me to like try and visualize it because I was like, "What are you talking about?"
Yeah, my dude, fair. Same as that, man. Like, the way he worded that, it makes complete sense now that I think about it. But I looked at it and I thought, "What? Huh?" It just completely fried me for a minute. But yeah, thanks guys for you in chat. Please help out.
Yeah, thanks for that. He's talking about total contract sizes turnover. Thank you. So yeah, like I was saying, sometimes like you can ask us questions and we'll be like, yeah, no, this is what I'm thinking. And then sometimes I'll have to like go and think about it afterwards and I'll be like, wow, I was talking a lot of crap. Like let me just think about this thing first properly before I just speak. So in that moment, I was lost, mate. Like my brain was not in line with what that question was asking. Just like, okay.
Yeah, don't forget as well, we're humans. 71 minus 36, profit equals 35k loss also. Yeah, don't forget, guys, we are humans at the end of the day as well. A, we make mistakes, or B, we have times where maybe we've not quite understood the question properly, so we're profitable traders doesn't mean we're geniuses. Just bear that in mind. We need some time.
Total loss is 35k and my profit is 36k. So total turnover is 71 and net profit is 1k. That's what I was saying. Break even loop. Awesome. Thank you for breaking it down. Sometimes we need people to help break it down for us as well because brains don't always brain. Yeah.
But to actually answer your question, how to deal with that, that's not that bad. Like, bro, that's actually amazing. Sandesh, you should be super proud of yourself for being in that loop. And it's an awful loop, man. And it's a loop that traders can be stuck in for years and years and years. Because what that is your last stage of journey before profitability. And it's that, you've done all the hard work, you've been a losing trader, you've shown the commitment, you've been disciplined. And now that you're having a sniff of profitability, like you're not losing, you're not blowing accounts, but you're also not passing them. You're just at that final stage where you've got to try and push past it in order to reach profitability. It is super, super difficult. And it is, in my opinion, hardest stage to be at. It's harder than being a losing trader because it is actually mentally draining to be in that mental loop because you feel like you get nowhere because you're not technically in P&L state. You are not actually going anywhere, which is super frustrating. Best way to deal with that, in my opinion, is pick and choose a little bit more specifically. So look at your trading journal, look at the trades that you have taken and grade them. And be like, right, okay, was this an A plus setup? Was this an A setup? Was this more valid? Did I have more confluences in this? Because what you're doing then is you're able to be a little bit more specific about the trade. You're able to be a little bit more picky about the trade. And therefore, you're able to actually determine, let's say you're taking 3 trades a day, you're actually able to refine that down to 1 or 2 trades a day, where then maybe you're ousting out an unprofitable trade. Or maybe you're being a little bit more picky with your trade, which is allowing you to be a bit more specific, taking a higher value trade okay, yes, you may be cutting your trade volume in half, but what you're also able to do by cutting your trade volume in half, you're also potentially taking out those not necessarily garbage trades because they're still valid. Maybe they're just a little less valid because they're not adding as many confluences, and therefore that may be all it takes for you to go from zero to hero. You know, from break even 1K up to $10,000, passing your phase one, passing your phase two, and then straight into full time or profitable trading. So just bear in mind, it's not necessarily the big changes. Sometimes it really is this really fine tweaking and fine tuning. Think about like a sniper. You know, a sniper, you know, when he's adjusting his sights, won't turn the rifle. He'll just couple of clicks on the scope, and then you know next minute he's moved the direction of target by a couple of meters. You know, so therefore sometimes when it's with your trading, just fine tweak those very specific points. For example, your confluences and your trading what's the word I'm looking for? Validity, and then you may find that that's going to be a massive improvement.
Yeah, sometimes you don't need to do big things. Just small little tweaks can make the world's difference.
Yeah, absolutely.
Gavind is saying, last week I passed my first funded account. Your live program helped me a lot. Thank you very much, team. Thank you very much for those kind words, mate. And congratulations on passing your first or achieving your first funded account.
Yeah, well done.
Yeah. Once again, word of advice, just replicate what it is that you did in order to get past. Just follow the same principles. Don't put this account on a pedestal and make it seem like if I lose this account, it's the end of the world. No, it isn't. Try and remove the stigma from trading a funded account. It is the same as if you were funding or as if you were trading a non-funded account going through evaluation. Approach it with the same mindset. Rude Soupcat is saying, would there be any discounts for tomorrow's event? Yes, we are going to have some special accounts, special discounts on accounts for tomorrow, and we're going to have account giveaways as well. $2 million worth of account giveaways. So you need to be there tomorrow. It's 2 o'clock GMT until 4 o'clock GMT tomorrow, the 17th. In the description box below, there will be a link where you can go and go to the Fiverr's website. There you will see a calendar. It looks like an advent calendar. Click on the one for this month, and it will take you to that event, and you can bookmark it in YouTube tomorrow. There will also be a link in the description box below. It will take you directly to the YouTube video, the YouTube live stream. So we're going to have a regular stream tomorrow, a regular time. We will just close the stream slightly early. This stream that we've got now, the one for tomorrow, will be closing at 2 o'clock GMT, and then everybody from this live stream will go over to that event live stream, which will be at 2 o'clock GMT tomorrow. So if he gets an award, we can assume he is the only one that got the max account. No, not quite. So the assumption is that he is the highest funded person, but he's the highest funded currently. Doesn't mean that he's the one that got the highest ever. We've had people that have reached higher ceilings, but this specific person that's going to receive your award tomorrow is the one that's the highest currently funded person.
Yeah.
Vinit is saying, I have passed my 5K 2 times and got 2 payouts, works $400 combined, and scaled to 7.5K, and also got a 20K bootcamp for free, and I passed the first step. Vinit, congratulations, mate. Like,
That's
carry
awesome.
on doing that. You're going to be a good, profitable trader for a long while if you consistently make gains and consistently try and build slowly on your accounts. So good luck for you.
Absolutely, man. Big congratulations.
I thought you guys will be on holiday given it's US holiday. Well, I mean, We're not in the US, are we?
Unfortunately, not on Bias Trader. Actually, no, technically we are on holiday. Every day's a holiday when you're a full-time trader, I suppose. Because we
Yeah,
do what
but
we love. Yeah.
Spio is saying good morning. Good morning to you, Rootsupcat. We've just answered that one. Do a lot of people make it to the fixed salary? Trading can be really stressful. I'm not sure. I'm really
No,
not sure. I don't have any of that detail available whatsoever.
yeah, I knew a couple. I haven't spoken to them in a while, so I don't know if they're still on salary. But yeah, people definitely make it.
Yeah, there are people that make it. I know there's one person definitely now that is. I know of one person that is there right now. But
Yeah,
like I said,
I knew of two, but I don't know if they're still there now.
hey, Rich and Will. So tomorrow's futures will be launched? Question mark? Question mark? Until infinity? Question mark? That is a good question. It's a very good
Maybe.
question. It will be revealed what this answers. This question's answer will be revealed tomorrow. 100%. It will be revealed. Will the futures be released? Maybe.
Who knows?
What is the position sizer tool? Is it on MT5? Yes, it is on MT5. It is called Position Sizer. It is from earnforex.com. It is a free to use MT5 or MT4. There's an MT5 and an MT4 version that you can use. G Block is saying my entry is at 5,015. My stop loss is tight, 5,018. Okay, so
Wow.
you're going super tight on gold. I wonder why my thing is doing this.
Low risk at 0.05 lot if anyone's interested. Wow, fair one, man. That is so. Let me just go back and gold. So we're 515 and 518. You said, was it?
Yeah, with a
So
0.05 lot, if anyone is interested. So that's very tight. That's $3 per fine ounce movement, which is 30 pips. And that is at a 0.05 movement. So that's what, $15 per $10 of price movement? Or
have
per
you
dollar?
have you entered? Like, have you
So
been
$45
tapped in?
of risk, isn't it?
Is that a one? I'm assuming it's a 1 minute trade in. That is that was very tight. Is that 1 minute trading or 5 minutes? I can't imagine that. Well, in theory, you would have been tapped in by now. Where would you be targeting? Can you imagine if you're targeting the lows? Dude, I remember interviewing this trader on, I think it was in December, I believe it was. I interviewed this trader with the fivers. And can I just say, on gold, if you had have entered in this trade right now with a 518 stop loss and a 515 entry and targeted the lows, you still wouldn't have hit his risk reward ratio trading strategy. You would have halved it. He traded with a 1 to 30 trading strategy with a 12% win rate, I think it was. And he was profitable. Like, he showed me his payouts. In fact, guys, I'll see if I can. I don't know, Remy, if you can get the interview up. I'll try and link the interview into the chat. It was incredible. Like, he was profitable. He's been paid. He's scaled, all with a 12% win rate and a 1 to 30 risk reward ratio. Like, can I just say that's double what this is right now? And like, we're looking at this being like, wow, that's insane. Like, that's super tight.
Dude, that's crazy. Like, genuinely 1 to 30. I don't know if I would
Dude,
be able to.
mate, his psychology was flipping insane. Like his brain was just maths into the max. He was like, yeah, bro, it's all maths. Like, it's just so nonchalant about it. He's just like, yeah, it's all maths. I was like, but how do you feel? He's like, I don't feel it's maths. I was like, wow. I was like, bro, this dude's a genius. I was like, this dude is insane. Like, you're gonna be medicated or something.
Dude, here we are going from 1 to 2s and 1 to 1.5s and stuff like that, and there's a guy going 1 to 30s, and he's just like, yeah, math.
Yeah, he literally, and I think he was trading gold as well. I don't quote me on this. I really can't remember. It's a couple of months ago now. But he was like scrolling through his trading view, and he's like, yeah, loss, 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 loss. Okay, here's a win. Here's a win. And like, bro, it was like, dude,
What was he
it was.
risking? What was he risking per trade?
I don't know. It can't have been much, because he would have fried his account if it was any. I don't know. Well, dude, I can't remember. I'm sure I asked him. Mate, I'll have to
Well,
go back and watch
I
watch
was
the
about to say,
video.
maybe we should go and rewatch your trader's interview with him. Do you remember his name?
Oh my god.
Anyway,
Anu was it?
moving on.
I think it was Anu. I think. But yeah,
Well,
dude, what an amazing trader! Big shout out to you if you're watching right now. In fact, if you're watching right now, like, drop in chat. Yeah, because yeah, we'd love to hear more about that.
so here's a very there's a few other ones I want to get to quickly before we move on. First and foremost, Spio is saying, I have a problem since data is not showing up on the Fiverr's MT5 platform, meaning charts. So what you can do is you can close it, reopen it, and then see whether or not you have your credentials in properly, to see whether or not you're actually logged into your account. Because technically, if you're not logged into your account, you won't see the information. So just make sure you're logged in with the right credentials and that there wasn't an error, basically. Because I have my charts up. This is, let me just hide this. This is my account, one of my accounts with the Fiverr's. This is a stream account, and the data is reflecting. So the problem is probably on your side. It won't be a platform issue. Cool Flicks is saying, I'm from Nepal, and I just withdrew my first $150. Yay. Congratulations.
Also, yeah, nice one, man. Big congrats.
Palio is saying, Rich, have you
Rich.
used the 1 minute for entry? No, I refuse to. I refuse. 1 minute, no. 2 minute, no. 3 minute, no.
What
4
about
minute?
4 minute?
5 minute, yes. 6 minute, no.
Oh, we're not going to do this to 15 minutes, are we?
No, I only use the 5 minute or the 15 minute for my entries. I don't use the 1 minute. I don't have a problem with the 1 minute, apart from the fact that it is not for me. The 1 minute is
It's
too
a
quick.
stupid time frame for stupid people. I'm joking.
Will and I used to have our own little stream, and on Fridays we used to have full margin Fridays, and then we would
Yeah,
trade on the
days.
1 minute, just for fun. Just, get yourself a demo account, and then you just sit there and you just on the 1 minute try and make as much at the end of the stream as you can, and then whomever won would be the winner for that day, and then would be the full margin Friday champion. And then that's when we trade the 1 minute, and that's how I realized that the 1 minute is stressful and it's not for me.
Yeah, yeah, fair.
Andre Labuskachny is saying, so true, William, final stage equals profitability or giving up. Yeah, very much so.
100% does. 100% does. And they say the difference between those who have succeeded and those who have failed is that last stage. and it's often depicted in art as well. Like you usually see like the miners. So you see like a miner, hacking away for a diamond, and then you see underneath there's another miner hacking away for a diamond. One gives up, and then if they carried on just a little bit further, there's just all sorts of diamond in the rock. And then the one above who continues to mine, there's not as much diamond, but there's still diamond nonetheless behind that rock. So therefore, it goes to show that it doesn't matter whether you have a lot of diamond or not a lot of diamond. The point being is consistency, and you keep going, you never give up, because you will get something out of it. The person who doesn't give up got nothing.
Yeah. Polly asking, Rich, how do you mark up your points of interests, order blocks? So, not quite. I know that Victor would not approve of my version of order blocks because it's not the way that he defines them. This is the NASDAQ chart on the hourly. How I mark up my points of interest is very simple. I look at historic data to see if there were areas where price had reacted out of very momentously, like with purpose, like very strongly. So there's two areas already that I can see right here. There's an area over here where price pushed very strongly down lower, and then there's an area over here where price also pushed down strongly from. So what I would do is I would look at the last point before price started to volumetrically push lower. So I would look at the last segments of candles, in this case, these candles over here. I'm going to zoom in a little bit, and then you might be able to see a little bit more. So historically, looking back, you look at areas where price was either trying to push up higher or push lower, and then failed. So in this case over here, we had a little bit of consolidation, and then it was followed by this volumetric pushdown. So I will take the last segment of, in this case, bullish candles, and then I draw it all the way through, and to see whether or not, when price does come back to it, whether or not it reacts in the same way as it did. So as you can notice right here, if I pull this area straight through, you have the last attempt to try and push price higher, which failed, and price then volumetrically started pushing lower, creating new order flow, lower highs, lower lows, lower highs, lower lows, and so on and so forth. And then eventually, when price started pushing back to it, it reacts in a way that is similar to the way that it initially reacted. So I want to see either similar, or I want to see slowed price action in this area, which is what we have here, slowed price action. And then when price pushed lower again, or attempted to push lower, when it came back to it, it reacted a little bit similarly to what it did the first time. And then the follow-up, same thing, same reaction. So that's how I mark up my areas of interest. So what I would do then, if I have an area of interest, is to see if a new trend is formed once it hits this area of interest, or at least once it's reacted off of this area of interest. So I will then go down to the lower time frame. So if this is the hourly, I will go off to the 15-minute to see whether or not there's any sort of reaction in this area that proves to me there's this new downward trend that was initially created all the way over here, this new downward trend. I want to see when price does come back to it, whether or not it's going to react the same way. So this area over here slowed, so no chance for a trade there. Tokyo session, I don't trade, so I exclude the Tokyo session completely. Go back into the London session to see whether or not price is reacting the same way as it did there. So I won't trade anything here when close to this area of interest unless a new downward trend or a new upward trend has been created after breaking above, retesting and continuing, or breaking below, retesting and continuing lower. So no trades to be taken last week Tuesday on this area. Here, there was a trade to be taken right here. So on the 15-minute, this reaction, strong reaction into it, and then a volumetric push down lower. Go down onto the 5-minute, into that area over here, and see whether or not there is a specific reaction that I can take. Very lovely. you can immediately see it. Now imagine you see none of this. My apologies. You see none of this movement here. Price goes into it, into this area of resistance. It tries to push lower, so it breaks lower than the lowest point of the area. It tries to push back into it. Big wick. It pushes lower. Makes a base. And then volumetrically pushes lower from there. So what I would then do is I would enter a trade either on this bullish candle, a bearish candle over here, or this follow-up bearish candle. It was most probably going to be this one. I would probably have my stop loss just above the most recent candle, and then I would look for a 1 to 2. 1 to 2 is over there. That's what I would be looking for. Or if it is the very first candle, so the way that I see this is that this is the high up over here. This was the most recent low swing was over here. That was the most recent low swing. We have a lower high and then a lower low over here. So the moment we make a lower high and we start printing this bearish candle, I would get in on the close of that candle, have my stop loss just above this one, which would be 40. And then I would look for a 1 to 2, which should be 80. That is 1. So these are the two trades that I would be looking for. If I've missed this initial movement and I just see this very strong downward candle, on the close of that one, I would take it with my stop loss just above, looking for a 1 to 2. Now, if I zoomed out, going back up over to the hourly, you won't see the movement in the hourly itself. You have to go down to the lower time frame to see that specific movement, that entry point. But that's how I would A, read, and B, enter on that trade. I hope that that makes sense.
Yeah, I like that. I'm going to answer this question from Oliver, Rich, and then I'm going to give you the next question, because the next question is right up your street, and I couldn't answer it, or couldn't think of anyone better to answer it than you. So,
okay.
Good morning, everyone. Is keeping a journal really that essential? I've always been a little reluctant to do so. What do you think? Is it possible to do it without? Or is it only really beneficial with a journal? Thanks. So, short answer, and I don't know if it's the answer you're looking for, but this is the answer you're going to get. You will not be as optimal as a trader if you do not journal. Simple as that. And I'm not saying you're not going to be profitable, because you can still be profitable as a trader if you don't journal. 100%, of course, 100% you can be. However, if you want to be optimal as a trader and the most efficient and consistent trader you can be, then why wouldn't you journal? You must have a record of your trades to be consistent. How can you be consistent at something if you do not have a record of them? So therefore, journaling, understanding what is going on with your trades over a long period of time, called data, gathering data and collecting data for longevity, is the smartest way to be a profitable trader. So yes, it is essential, but no, it is not necessarily make or break. In my opinion, it is. Simple answer. In my opinion, it is make or break. But there are traders who do trade without having a journal. Are they the best traders? In my opinion, no. Why? Because they can go through drawdown stages. Their strategy may not work, and then how can they change minor fractional increments of the strategy if they don't have solid data to back up that strategy? So therefore, how can they go back and understand what went wrong? How can they improve it? What can they change? Not only that, if there's emotional moments coming into it, and you've journaled that, you can actually say, well, that loss is a bit of a cock up because this, that, and the other, X, Y, Z. If I was to look at that trade and I wasn't going through such an emotional downward spiral, then I would have been able to actually avoid taking this losing trade. I only took it due to heightened emotions. So therefore, journaling is a 110% must. I have spent hours and hours, and I've probably spent longer designing my journal than I have my strategy, because I think it's equally, if not more, important.
Do you know what's funny? My journal is the most simplistic journal I could think of. It's literally just an Excel spreadsheet.
Is it?
That has all of the data that's down here, and then just a comment section where I write, "Man, I hated this trade. I was so emotional. I didn't sleep well." So, like, all of the data that I'm putting in is in that note section, where all of the other stuff is just like entry point, take profit, stop loss, time. That's it, and lot size. That's it.
See, I've gone a little bit sexier with mine. I've tried to make my journal as not automated, but as fluent as possible. I'm really lazy, and I don't like much workload. So therefore, what I like to do when it comes to, like, I journal. It takes me longer to journal than it does to actually execute and hold the trade. So therefore, I trade, I profit, hopefully, or I take stop loss, and then the rest of the time is journaling. So therefore, I got drop downs, I click this, that, and the other. I try and make it all tick boxes. Then I have the comment section at the end, and it also like automatically color coordinates everything.
I do have tick boxes. I do have the conditional formatting on. So if it was a good trade, it's green. If it was a bad trade, it's red.
Yes, same.
The typical things. But
nice.
For me, the action of journaling is more important than how pretty it is.
Yeah, 100%. Yeah, 100%. Either way, though, the point being is I journal, you journal, both successful traders. Dirk, I guarantee journals.
Man, I journal, yeah. But my journal has changed actually over the years. Now that you guys are talking about like color coding and so on, I obviously I have all the trade data in there. Then I have like a comment section like you guys have, which usually can get very emotional for me. So I sometimes write stuff in there. My God, I'm such a FFF idiot. And then what I implemented actually last year, when I like all this vibe coding reached a level where you can actually use it for real world stuff, I implemented like a sentiment. So because I try to cross match, like, is there from the stuff I write a cross match to how the trade outcome was, like, and to my mental state. I don't know if I can like explain this correctly in English, to kind of, look for behavioral patterns that I necessarily don't see, other than me saying, hey, you did great, you were in a good mental state, and oh my God, I was such in a bad mental state, I'm such an idiot on that trade. But I don't have enough data yet. But lately, I must say, I don't know why, like in this February, the columns are more filled with I'm such an idiot than I'm doing great. January was good. February is giving it away again. And that being said, good morning, everybody.
Good morning. What a segue. What's up, LJ?
And LJ, what's good, brother?
How are we doing?
Happy President's Day, everybody. Y'all. Happy President's Day.
The day of the president. Yeah. And then in Canada, it's Family Day.
Oh, that's couldn't be more the opposite.
Very different. Yeah, very different. Hey.
Did we literally just say that the other?
Oh yeah, really?
It really puts to view the differences between the northern portion of the North America region and the southern portion of the North American region. Just they diametrically opposite, diametrically opposing, let's rather say.
Yeah, absolutely. Anyway, guys, I am gonna have to love you and leave you. So
wait. What was the question that you said I needed to?
Yes, yeah, I'm right. Okay, I'm looking for it now, real quick. It was basically, what is the best risk management? There it is. Bosh. Thank you very much. What is the best risk management to pass an account? I'm going to leave you on this fantastic question. Kung Hei Fat Choi to absolutely everyone in Asia or those celebrating Lunar New Year. So Kung Hei Fat Choi to you all. I'm going to be MIA now for the rest of the day because, well, obviously it's Chinese New Year and I've got a lot of very important things coming up tonight. So thank you very much. Take care. Stay safe. Enjoy President's Day. Enjoy Family Day, and enjoy the Chinese New Year. Lots of holidays coming up this week.
He will be busy collecting all the red angbaos. I'm sure of it.
Hopefully, mate. Hopefully. I'm not that lucky, man. All right, peace, people. See you later.
See you, mate.
Don't get too drunk.
Good Chinese New Year.
Yeah.
Yeah.
How awesome is that?
I'm already looking forward tonight. I'm going to have some nice hot pot.
Ooh.
Yeah.
Spicy.
Me
hot
likey
pot.
Your significant other is from China, correct?
Yeah, well, technically she's from Indonesia, but Chinese heritage. So they have their own language, which is in her case called Hokkien, or Medan Hokkien to be more precise, which is like spoken by, I think, 100,000 people or something. Absolutely incomprehensible to me, even after all these years. And but it's the other way around as well. For her German, it's like basically sounds like, why are you guys yelling at each other the whole time?
Why do you sound so angry?
No, actually, she knows quite a bit of German right now, so she can understand the not so fine nuances of a German, beautiful, poetic language, and yeah. So, of course, obviously for her, for our family, a very important day as well to celebrate a bit today.
Well, Dirk, then I hope you have a fantastic Chinese New Year.
Here we go. We have a Indonesian Hokkien viewer. Good to see you,
There
Daniel.
we go.
Awesome.
Nice.
Nice.
So, yeah, that's cool. LJ, are you celebrating the Chinese New Year?
Not specifically, but I mean, we always have a bunch of stuff going on here. Obviously, Australia, big
Very
foreign
large
population
South
from
Asian
across
and
the
Asian.
world. So
Yeah.
so every single one of these holidays, when Southeast Asia, India, China, Japan, all this kind of stuff, there's always something going on. So I think there's a bunch of stuff in the city at the moment, but. I mean, by the time, for me, it's sort of already late. So if I was going to go do something, it's already over.
You have the whole week. The whole week.
Yeah, of course. But
years.
I'll still be here the whole week as well.
Yeah, but I mean, you're off during the day, are you not? Like
I guess.
Daytime,
Yeah, a lot of the stuff sort of kicks off, though, I guess, evening, running into stream time, and then, unfortunately.
It's like one of the things when I was working in Singapore, I also tended to come to the office a bit later, maybe around noon or 1 p.m. and then staying late because usually, with exceptions, obviously, there's just more action going on during the early European phase, with exceptions. Sometimes Asian phase can be quite volatile as well.
Mm.
Yeah, it goes through like seasons where it's really good for a certain period, and then it just it very randomly drops off, and it's just like, okay, all right, never mind. So yeah,
I want to jump in on this question before I jump off. What is the best risk management to pass an account? Now, obviously, LJ and Dirk, you will have your own opinions and own. There's a cat.
There's a cat behind you. Oh my god.
Yeah, there's a kitty cat.
oh god, dude, I thought you were talking about my cat. I was like, how did she get in here? Not this again. We don't need this again. Okay.
Please.
It's like PTSD. yeah, PTSD.
So, in terms of risk management, I don't think that there's a best variant of risk management. I think risk management is very much a personal thing, and you're either going to be comfortable with it or you're not with a specific kind of risk management. And I feel like risk management also has a place to be adjusted and a time to be completely ignored. So it's a little bit nuanced, and I feel like it's a very deep conversation to have. But if I had to go and look at what has been tried and tested for myself, it is what I refer to as my best of three strategy. you can only have one of 4 outcomes in a best of 3, and you're only ever going to risk a set percentage throughout the day, and then that is it. So the way that it works is you have best of 3 is literally 1 out of 3 outcomes. The first one, or 1 out of 4 outcomes, is I can have a win and a win in a row. So 2 wins and then I'm done. Because I've got 2 trades for the day. It's the best of 3. That's it. The follow-up one can be a win, a loss, followed by another win. So loss, win, loss. Simple. Okay. The third one that I can have is I can have a loss followed by a win followed by a loss. And then the last one I can have is 2 losses. That's it. So that's the only outcomes that I can have on a day. 2 wins, 2 losses, loss, win, loss, win, loss, win. And what I do is I only ever risk either 0.5% per trade, which means that if I have 2 winners and I'm either going for a 1-to-1 during London or a 1-to-2 during New York, but the idea is I will always be risking the same amount for the same session. So if it's London, I will always risk 0.5%, and if it's New York, I will risk 1% per trade. So that then means that if I have 2 losses in a row during the London session, I've lost 1%. If I have lost 2 trades during New York session, I would have lost 2%. But if I have 1-2 trades during London session, I have made 2%. And if I have 1%, sorry, and if I've made 1-2 trades during New York session, then I have won 4%. So I know this is sounds crazy complicated. It isn't. It's just expectancy for me. I always risk the same amount so that my expectancy stays the same. But I can only have 1 of 4 outcomes, and I only ever trade a maximum of 3 trades a day. So no more. I can have less, obviously, depending on if I have my 2 wins, 2 losses, whatever. But 3 trades a day maximum. I don't go more than that. It helps me prevent going on tilt. It helps me prevent going into FOMO. I stick to my plan. I can have 1 horrible trade that wasn't well thought out, and then I can follow that trade up with a good, well thought out trade, and both of them can be losses or both of them can be wins, and it would be fine. So that's how I risk manage, and I don't go higher than 1% per trade. But yeah, that's pretty much how I do it. Anyway, I'm going to jump off, guys. I have a little bit of stuff that I need to do in the background. LJ and Dirk, if you don't mind, you can share your idea of what is the best risk management strategy for yourself. And then I'll see everybody a little bit later.
Yeah, for sure.
Wonderful.
Take care, Richard, and see you soon again. And thanks for your explanation. I think it makes a lot of sense what you said. I understood it at least.
Well, if I was staying a little bit longer, I could have given better examples of it. But the gist stays the same: maximum 3 trades a day, best of 3, whatever comes first. 2 wins, 2 losses, whichever is first. And I keep my expectancy the same for every trade. I don't try and jump around with risk all that much, because my whole risk profile is built around the idea of known expectancy, or at least measurable expectancy, and I can only do that if I have set variables, and the set variables are static. So I know exactly how much I'm going to lose today if I were to lose today, and that sets my mind at ease whenever I look at the market and I think, okay, I'm about to lose $1,000. If $1,000 is my 2 trades, then so be it. Then I've got my expectancy in place.
Yeah. I mean, that basically is it. You summarized it in a nutshell. It needs to put my mind at ease. You need to be in what feels comfortable for you in terms of risk management, which is very opposite very often to when you should actually go into a trade or go out of a trade. You often need to be outside of your comfort zone, but when it comes to risk management, I'm also a fan of being within my comfort zone. And we don't want to keep you from doing your
that's
work.
All right, guys. I'll see you in just slightly about 2 hours or so. Close
Yeah.
to.
All right. See you
Have a
then.
good one.
Have a good one.
Cheers.
See you
Bye-bye.
then, man. Ciao.
All right, good. So maybe if we just continue with that, if it's okay for you, LJ, since we are on the topic of risk management, which obviously is the key to success in when it comes to trading. It's not about what's the quality of your signals. If you look at my chart here, Bitcoin chart, how often are we sell or buy signals correct? How do I translate them into trades, for example? Do I trade them at all? It's all about risk management. And for me, there are a couple of different styles I like to take depending on what type of account I trade. So I have some accounts where I like to be a little bit more aggressive, where I also utilize a bit more leverage, not too much. Usually I like, however, to keep my risk somewhere between 0.25%, which I usually is like my comfort zone in terms of risk. When I trade crypto, I might go up to 1% sometimes, especially if it's like an account with a lower balance, so something like 5 or 10K, and I want to have some action. I might do that. And then it really depends. So I might do something like this, for example, that I wait until I see a confluence between where those sell or buy signals paint in relation to how far are we, for example, with a confluence taken by a standard deviation. So last time, for example, this was a pretty good signal, in my opinion, actually one that I traded as well also. And then I go very, very tight with my stops, for example. So I will usually put my stop just one Renko box above that and then try to trail it down a bit. So I want to catch as much as possible off a trend if a signal is correct, but I want to limit my risk. That leads to something that a lot of people probably would not be uncomfortable with. That leads to me being stopped out of supposedly profitable trades very early as well. So with this type of strategy, I have a win rate of about 32%, give or take. This month was a bit worse than January was, but I know like if I catch a winner, it's going to be often a 3 to 1 R, or I even had trades like with a 10 to 15 R on this type. But you need like it kind of suits my mindset. It's something I trained myself on over the years. It's not for everybody. If you're a beginner, you might go for something probably with a higher win rate and then adjust your risk management to that. But usually puts you more in the comfort zone from my own experience, at least. What I also might do, and this is like one upon, I don't want to on systems like this. Now, I should say I do a lot of stuff mechanical when it comes to trading, where I don't interfere at all. However, especially when it comes to crypto, because the market regime can change so crazy fast, when it gets to speed into one direction, it likes to overshoot and doesn't, for example, care about standard deviation sigmas anymore. It's just exploding, and this is something I want to take into account as well. We can very well see that actually, for example, I hope it's like large enough. So this lower left chart, for example, is Solana. And on Friday, we saw it like really going up from around $77 back to 90 within, just a couple of like 24 hours. And if I see like a strong trend like this, I don't want to bet against it. Even if I get like these high and ultra sell signals, I don't want to go against it because that's deadly. So in that case, I really would wait until I see signals again that are more into the trend direction. However, and now comes the complicated part actually. What I sometimes do, like for example, in the cluster you see below here, where we are in an uptrend still and we have kind of returned to what is the 200-day moving average, I like to deviate from this 0.25% per trade, but instead I like to scale into trades. Because I noticed in crypto, when you have this very strong trends and then it comes back, it needs a while, until it gets into the major trend again. So I didn't do that actually because those were like on the weekend and I didn't trade on the weekend. So I might get into this trade. Second one might be this one. Third one might be this one. So I cluster into the trade. And for trades like this, I will have something that I call a global stop loss. meaning like if those trades are, for example, underwater by 1% or 2% or maybe even 3%, again, depending on how aggressive I want to go onto that account, I will go out of them. So there's like the kind of way where I deviate sometimes from my more mechanical approach, because from my experience, like especially like this high volatility run and then coming down again and then going sideways, like compressing and then picking up the trend again, that is in a mechanical way. At least I haven't found out how to really precisely measure that. Like at least the way that I can formulate a more mechanical approach out of this. This goes more to the direction of, okay, I feel like this. I feel like this is happening based on maybe you want to call it subconscious experience. And funny enough, those are are then also usually, like not usually, but sometimes my most profitable trades. Where I don't
same.
go completely mechanical, but where I have this kind of what's the word for that opposite of mechanical? It starts with D, no?
Intuition.
Yeah, it's intuition,
Yeah.
like approach into it. But this works well on crypto for me. When I trade forex, it doesn't work at all. And this shows
Really?
really also, in my opinion, I know you probably think differently about this, like how effective the forex market is. Like on euro dollar,
Yes.
for example, I really always wait for euro dollar. Let me give you maybe the last example. The euro dollar. Here, I think this one. No, that's the wrong one. Sorry. What is it called? Let me check on my other euro dollar. This one. So there, for example, this was the last trade. You remember, I think it was like 2 weeks ago when I took this one when we were live. I was talking about also the same one in cable, opposite way around in dollar yen. So there, I really like to wait for those extremes on the bands in conjunction with from my own indicators, these buy or sell signals to take them then. And here we are talking about also moves that usually take a longer time to develop. So this is not a day trade. This is usually a trade I will hold on for a couple of days until we return to zero sigma again, or even down to the 200 EMA, 200 ring EMA is here. That's very unique. How's it with you?
Yeah, I agree. So, in particular, with the first of all, the intuition type stuff, I think once you've looked at, you've sat here staring at charts and stuff for that long, you do get a feel. Even just you go down to 1 minute, watching the sort of the ticks go through, and you can feel like, okay, this is about to run. Right?
Yeah.
And again, that's it's one of those pattern recognition type things. Once you've spent 10,000 plus hours staring at this thing for however many hours a day over years and years, it tends to very much be like that. And you can sort of throw any chart in front of you, have no idea of the asset, and you'll be able to, find direction, find trades, right? That kind of thing. So yeah, there's definitely that. As far as I guess risk management in total, definitely run it a little bit different on, say, like prop stuff. Obviously, because of the rule sets, they sort of tend to favor typically a bit more active sort of day trading type stuff rather than swing trades. So with personal accounts on swing trades and stuff, there'll be some trades throughout the year, very much in the sense of like the George Soros type element of, when you see the trade, you lever that thing all the way up that you can and really, throw the whole kit at it, right? It's when you've got like a perfect hand in poker and you're like, pot commit, right?
It doesn't mean you will win this hand, but the odds are never going to be more in your favor.
Yeah. And so hence it exactly like that. So it's one of those, again, it's the risk reward thing. You're not just randomly doing that. But this is such a solid trade. And you've got that high of a conviction and confidence in it for whatever the coalescence of variables came together to make it, perfect like that. There are those times. They're not they're very sparse, they're very uncommon, but there are those times where you just push all risk guardrails and just throttle the thing. Outside of that, I guess it tends to flux. Like I don't have a specific like points stop loss or whatever. It tends to be, it's always going to be based on the structure of the chart, the technical structure. Then also a duration component of how long I intend to hold the trade, right? So if it is something that might be over the next 5, 6, 7 hours across sessions or potentially into the next day, they'll be much wider. If I'm trading something real time right now, especially if I want to get in, get out before like news coming up, then that'll be much more compressed. But will tend to be like 0.4%. And then I'll sort of layer them in. Like if the trader's working, it's running, I'll add another 0.4 and then typically another 0.4. And roughly 1.2 is sort of where I cap out on a single trade idea. And then further, depending if the market's very active, moving very quick, you're probably going to miss a lot of it by trying to scale in. Then I'll just go straight to like 0.8% risk, but then have the variability to draw it out another 0.4 to 1.2 total if there's like flux. So that's pretty much how I do it. As far as like strike rate and risk reward and all that kind of stuff, I didn't really ever look at that. When I first started, I did, and then just not at all for 8, 9, 10 years. It's probably only in the past while since sort of the whole prop scene and everyone talks about it all the time and coming on stream that I've even started thinking about it again. At the end of the day, I still more look at like overall P&L, am I net profitable? Yes or no, essentially. But I always have, it's very much, there is like a sort of a baseline of just general loss for certain trades that I'll just keep pretty flat. And then the idea is just to try and rinse the upside profit as much as it's going to be. So in that same sense, I don't have like, I've hit, 2% profit, I'm going to take it now. If it's got 6%, if it's got 8%, 9%, like I'll just let it run. So that's where you get that asymmetry of sort of cap downside with open-ended upside.
Yeah, you want to harvest the fat tail, no? Basically, there. Yeah. And but it's also, I mean, this translate also very well, in my opinion, to how you would start a business. Like if you build up a startup, for example. In the beginning, you need to invest probably a lot of money. You're not going to build up a startup company like using $500. At least I never have. Like at one point, there's always this. Okay, I have a working product, maybe now a prototype. I need to invest like 10 or 20 or 30K into marketing now, and then I'll see how this product is received. Did I have just fantasy? And I'm not saying, by the way, now if you're new to trading, immediately invest or risk 30,000K in it. Luckily, we have like demo accounts, we have prop trading accounts where you can get this. But at one point, you need to make a commitment. And because this is how all successful companies started also. Like everybody knows the story of Bill Gates sitting in the garage for Microsoft, or Mark Zuckerberg with Facebook until they got the VC funding. Same with Google. They all started, Amazon, they all started very, very small. But at one point, they needed to put the chips on the table. The chips can be a large amount of money you invest. The chips are, of course, also your time you invest. Like I have that actually quite often. 8 out of 10 projects I start turn out to be not worthwhile the money or the time I spent in it, but I might already have invested like 200, 300, 400 hours of time into a project like this. And if I, translate that to the hourly rate I normally would charge as a consultant for stuff like this, you're very quickly down 50 or 100K.
Easily.
But that's the thing, in business, as often trading as well, you got to put your money where your mouth is.
Yeah, I think that's a very good point as well, actually. So particularly on smaller accounts and also when I started, there was a point where I'm just like, okay, yeah, I've made 20K, which is like pretty good, especially when you're very young. That's a lot of money. But exactly like you said, at some point you have to be willing to just like punch it, throttle the thing and go, look, okay, either I'm going to blast this thing, it's going to work out, or what's the worst that'll happen? I'm I'm
Yeah.
19, 20. I lost 20K. I go get a job, right? So there's that other component of how quickly could you recover that in dollar terms by some other kind of avenue, right? So you're probably not going to want to do that on 200 or 300 or 400, right? Because it's a lot more difficult to actually reap that back. But depending at what point you are along the way, you might actually have to do that again. Now, typically, if you've gotten to that point of 2, 3, 400, you've probably now got the skill set that if something did go wrong, you could, start fresh and recover that, right? Yeah.
And that will
But
happen.
yeah, so
At least, when you run a business, I had this multiple
Yeah.
times that I was part of either I founded a company myself or I was part of it as co-founder, and we scaled up very quickly. And at one point, due to whatever reason, very often, by the way, if you have multiple founders, it's because one gets slacky, doesn't want to do anymore, or you get like in fights over whatever, is beginning of the end usual then, or the product. Yeah, or your product, is just,
Oh.
especially when it's like AI related, basically can be tomorrow obsolete. What we see right now with many software as a service companies, right?
Yeah.
If you are the CEO of Salesforce, for example, I don't want to be in your shoes right now. It's a very difficult situation, and it's the same with trading. I've seen multiple times over the 26 years I'm doing this that I need to reinvent myself. Actually, right now is a time like this again. I said this on the other streams. So I'm now at the point, for example, where my most profitable strategy, which is options, FX options based, has reached a point where I'm not sure anymore, is this going to generate profit with a good risk adjusted approach anymore, or do I end up in a situation soon where I need to pick up the pennies in front of a semi truck approaching me? And I don't want to be in that situation. So, I need to go back and decide, is it time to call it a quit and start something new? Start something new in terms of trading means like I need to come up with a new trading strategy that actually works, or do I need to do something different, or do I just need to adjust it? Is there something in the data maybe I'm not seeing correctly? And this is something that makes it for me also so rewarding to be a trader, because a lot of people would shy back from something. They think like, oh, this always worked, this is going to work again. If you ever worked in a company, you probably heard a long-time employee saying like, this is how we ever did it, we're not going to change it. Well, okay, then you know what you're dealing with. And in trading, not changing it because you always did it like this is very quickly going to translate into you losing a lot of money. And
Yeah.
a lot of people would shy away from a situation like this, but I like this because I like to be challenged.
I agree. I personally as well. Like, I seek out challenges. But if I get in a situation where everything's too chill and it's just all working, I'm like, oh, this is not good. That's bad.
Disasters around the corner.
Yeah, I'll go and like create something. That's when you need to like step up, go to the next level, try and push the boundaries, and that's how you progress. And you get more and more efficient, more and more skilled, more and more intuitive, all that kind of stuff. And it just snowballs. I will jump up in a sec because I need to turn down my aircon because I'm sweating bullets in here.
Oh my God.
So,
I have my heater here on full power because it's
yeah, I do. It's because of the humidity. Like, we've had this rain. It was meant to be a massive rainstorm. We only had like 1/10 of what they said it was going to be, but it's still very humid. It's been like 3 days of rain. It's we've got to put the thing on. But and then we'll jump back to the charts and some of you guys questions in chat. No problems. We did have some around dollar yen and stuff as well. But yeah, the final thing I did want to say about what you were saying with the crypto versus FX thing, and also hence with the options. Yeah, they are very efficient. Obviously, these markets, they're massive, been around for forever, a bunch of players in there. And obviously, the more efficient markets get over time, they actually become more random.
Yeah.
Which to most people, they're like, what? Confuses them. Because you've squeezed out the alpha. So essentially when something is trending, it's very non-random. That's what that alpha is. Other players come in, compress that alpha, and then it just gets kind of random. So yeah, I can definitely see that. Where obviously crypto has massive opportunity yet, because it's not fully saturated. Obviously, it's gone down a lot since where it used to be, but yeah, definitely not saturated just yet. Unbiased Trader was saying, what is dollar PJY? Tried to find the pair everywhere, but no luck. I don't think PJY is a currency. Is it just meant to be JPY?
I think maybe
And maybe I don't where'd this come from? Were you reading like an article? Maybe they spelt it wrong or something.
Was selling
Because I'm like
pajamas for US dollar.
99.99999% sure there's no PJY. I don't know. Do you know of a PJY currency, Dirk?
I would translate it. Yeah, it's for sure it's a typo, but dollar versus pajamas. I don't know.
The pajama nation.
Sounds kind of compelling, actually. I think I want to live there, running around
Dude,
in my
they'd have-
PJs all day.
They'd have a great like Olympics outfit, right? They just all wear pajamas, just running around the track.
I mean, cannot be worse than the German official outfit for the Olympics, where I don't know if you've seen them. They are wearing these ponchos. Looks like crazy.
Oh, really?
They look like bats. Oh, crazy.
Yeah, I haven't watched too much of the Winter Olympics. I normally do. Like, I love watching like the snowboarding.
You got a
and that
gold
kind of
medal.
stuff.
Australia got its first gold medal, no?
We did.
What
we
was
did.
it?
I did see
Short track or
that.
something?
Yeah, something random. I can't remember.
Yeah, like
But,
ice skating thingy around. No?
Yeah,
Yeah.
something like that. I forget what it was.
The
'cause,
Winter
yeah,
Olympics.
we typically don't have many people. Like it's New Zealand always brings a bunch, but
Yeah.
surprise, surprise, Australia.
I mean, the Winter Olympics are anyway like this event where you suddenly become interested in sports you're not going to watch again for the next 4 years. Something like curling, it's like I never would watch this. And this whole scandal about the Canada person cheating on curling now, which is supposed to be.
Oh, really? Was it?
Yeah, that was like a whole thing supposedly in Canada. Because curling is supposed to be this gentleman sports, where you don't need referees.
Okay, I see. Yeah, I'm not that heavily invested or
me neither.
depth of knowledge in curling.
Me neither.
But yeah, let me jump up just to turn the aircon down. I'll come back.
Sure. So Andre caught some nice sells in Ethereum this weekend. Nice one, man. Yeah, Ethereum tends to have a bit its life out of its own, in my opinion, at the moment. Where do I have Ethereum? This is Bitcoin. Here's my Ethereum. Like I said, I didn't catch anything really there. But yeah, something like this is a good example actually for what I like to trade. So this, I call it high sell signal. And then trying, putting my stop loss just slightly over the last green one here. So you have a pretty tight stop. And then I usually probably would have closed this trade either here directly at the 200 EMA or once it returned to the dotted gray line, which is the 0 Sigma line. Very nice trade. Like I said, I didn't catch it. I tend to not trade on weekends, although I could, of course, and there would be arguments pro trading crypto on the weekend because it likes to move on weekends very much. However, I usually don't do it because I need to attend to my family, obviously, as well. Plus, I thought with this being a US holiday, at least for the stock markets today, the Monday, plus the fact that we have Chinese New Year starting this week today, I was under the impression that maybe volatility probably is going to slow down, especially for crypto a lot. This morning, this has been the case as well, but I'm going to monitor, of course, throughout the day. throughout the next days, actually, if it's going to change. But usually not kind of the setting volatility wise where I want to be. I just said, I don't know if you heard it, LJ, it's like, for me, it's like today we have President's Day, so US stock markets are going to be closed. Plus we have Chinese New Year starting, especially the fact that Chinese New Year starting for crypto is probably going to result in a lot less volatility, although crypto is banned in China. There's a lot of Chinese traders out there.
And
Yeah, exactly. and I assume there's not going to be that much action because everybody's going to be with their families this weekend. So, what do you think about dollar yen?
dollar yen. Let me bring up dollar yen. Hang on. So we've had the sort of rally I was looking for. If I jump over to my chart. So I did take this on a personal for a swing trade. Still running up through there. I'm not sure if we'll get more height. I'm trying to decide right now if we do, or because I can see further upside on the Dixie as well. So I'm thinking we've still got a bit of a recovery to go for dollar yen. So ideally, the first targets be basically up to here, near the spike high, and that sort of collapse through there. That comes in at about 154.40 or so. Then you've got the higher levels up here into that 155.60 and kind of an interim sludge box zone through there around that 155 sort of round number. I'm dubious as to whether we'll fully push through 155. I think if we got this kind of run, we'll start to slow down through there. I'm very hesitant on buying dollar yen overall. Now, after the move down that we had, the move back up, this move down through here, and then we were starting to form, slowing down. The back and forth was expanding, and then we were getting the slightly higher highs, slightly higher lows through there. So that's why I ended up taking that for that near-term trade. The other portion is, however, euro dollar we can see is very much like in stasis right now. And I tend to lean at the moment on the downside for euro dollar. We're really struggling to get that pickup through here. And we are near those record longs, like we've been talking about. I think it's like 26.8 billion now, net longs. So the record is 31 billion from COVID back in 2020. So basically, any further push up from here is going to be difficult. And I'm kind of looking at this 120 break as a bit of a bull trap. And we sort of just linger through here and potentially just, wander off as that long trade doesn't fully form or come back, I should say. So eventually buyers have to turn to sellers. The other one, I did take a small trade on Aussie dollar earlier, just from the tops here, hit resistance. Just looking to take some bites out on this, especially with the Aussie. We do have the RBA minutes tomorrow. Obviously, after hiking rates, they'll probably be more hawkish. The further rhetoric from Michelle Bullock is, she's kept talking about further rate hikes, blah, blah, blah. Everyone's in a bit of an uproar about it, saying, what are you doing? Right? But she keeps doubling down. So I think for the time being, especially with stuff like the minutes, it will probably have a slight hawkish tilt. Obviously, that will be in part sort of already in the price. It's a pretty obvious one. But given that the interest rate differentials right now, commodities still going strong, there's a good sort of floor under the Aussie for the near term. So tomorrow, I wouldn't be surprised if we actually see a return to about 71.20 or so, back up into that zone, 71.20 to 71.30.
Yeah. I mean, you're pretty much stealing the words out of my mouth. It's like in all three pairs, so dollar yen, euro dollar, anything related to the dollar. At the moment, we are at prices where I don't really need to see why I should take any action into any direction. So let me start here with dollar yen. We are right in the middle of a mix. It's like nothing. We have the slow stochastic, if you are into technicals, that is also right in the middle. We have this kind of structure here, which is like typical for the market being indecisive, meaning we're in a kind of compression zone. So I want to wait until either we go up to above 155.50 or lower than, or maybe we touch 150. Then I could maybe decide to, if I get a signal at these prices, to go into a trade. And it's the same for euro dollar, right in the middle. It's the same for cables, right in the middle. For gold, it's pretty much the same also, although I need to adjust here a little bit of the parameter still. And I would say it's like typical for a day like this, which is a public holiday in the USA, that we don't see much movement. And by the way, don't get impatient just because you see a day like this. Don't feel like, "Ooh, I'm getting the jitters. I need to have some clickety-click actions." And very often these are the days where you suddenly, as a beginner, start to make stupid choices that are going to end up costing you money, because you're going to try to scalp something like a pip or two out of euro dollar and do that 100 times per day. Maybe you want to really, enjoy time with your family today and try to sit on your hands. With the exception, of course, maybe that you are some super short-term, hyper latency kind of quant trader. But if you are that, you're probably not watching the stream right now.
Yeah. To be honest, you'd probably be on holiday with everyone else.
Yeah, exactly.
As well, right? Yeah, and especially with the algos just printing in the background.
Yeah.
But yeah, no, to be honest, I think this week will be fairly quiet overall. Obviously, we had the jobs data, we had CPI, everything out.
This is actually something I wanted to talk with you about. The NFP, what the NFP, which were surprising in my opinion, at least.
Yeah, it was weird.
I didn't expect that. Plus, I read this on Twitter this morning. Ignore like who that is coming from. Not a big fan of this one, but that we had a revision of the job numbers for 2025 by minus over 1 million again, and this happened for the years before us. So, and this leads me to things like, especially also in the combination with what Trump posted on his own Truth Social platform with the job numbers, with the NFPs, leads me like to how much can I really trust the data coming out of the US? Or do I always need to wait until it's like revised to a new number? If I'm not mistaken, Paul also gave like hints into that direction, that he doesn't think the last job numbers are really the correct ones. So what do you think about this? It's like how to handle this, like especially if you want to get like a long-term view of where we are going with the economy.
Yeah, I agree. I think there's been some weird model of how they're calculating stuff being adopted across the board, because I've seen this there's a lot of countries with their jobs numbers being kind of weird. Same thing with Australia, how we had unemployment went like 4.1 to 4.2, then up to 4.5, and now it's back to 4.1 in like 3 months or whatever. It's like, huh?
Like a very dynamic job.
Those numbers are fluxing way too hard, and people are not switching jobs or shuffling around like that so much, especially with the housing rent situation. Everyone wants to, like, if you got something good, don't change it. don't mess it up. So those kind of fluctuations are way too large. It doesn't make any sense. And then same with the US jobs numbers. It's also really interesting that everyone's kind of just, with all the revisions, people just don't care.
Yeah, exactly. It's like, I only care, about the next number and how it is in comparison to what was expected.
Because if we were seeing those actual numbers then printing each month on the NFP, on the headline number, everyone would be calling for rates down to 2%. The economy's in the bin. It's all over. We're done.
Yeah. Yeah, at least we should see from the Fed, like in action, like being more into the direction of rate cuts.
Yeah. And so this definitely gives me the tilt that I think they will be cutting rates. And I also think that obviously there's sort of the chatter around Kevin Walsh and him being slightly more hawkish. He's major friends with the Trump family and everything. So I think he's pretty, what's the word, like agnostic to perhaps his prior views, say around the GFC and calling against QE. I think he'll do a full flip and just, cut rates and do whatever, and everyone will be like, oh, okay. I think there's also been chatter of that. I think people are kind of clued on to that probably being the way stuff goes. But yeah, I think definite dollar downside is still massively there. And then particularly with the dollar yen situation, the more the currency actually comes down, it does allow the Bank of Japan to actually start hiking rates,
Yep.
right? Because they've got that currency issue out of the way. They can actually hike rates going in line with the actual bond yields and everything, which then obviously will further accelerate the dollar yen decline, and then kick off that dollar selling. The portion of that gets weird is I can see very much more upside for things like the Aussie dollar. The pound, kind of, I can see more upside, but probably not quite as strong as the Aussie, or at least with a bit more flux, per se. So say we go out to a higher time frame. The Aussie's on absolute tear. We had this kind of channel for the longest time through the tariff situation all last year that we were kind of just bouncing from point to point to point, sort of through that. And then we've had a dip below, massive recovery, and then just stormed higher, and we've cracked some of these highs. And that's the highest level since 2023, and sort of in that mid pocket range of, COVID and post-COVID inflation kind of situation, right? So I think next port of call is about 7150, basically these tops from that 2023 period. And then I can easily see us going up towards 75 on the Aussie. Particularly with the commodities picture, China doing its thing, US being on the back foot, all of that right now. So where it gets weird, though, is stuff like the euro, like I was talking about, where I would see the euro coming off or being pretty stagnant. Obviously, if dollar yen starts to rapidly decline, then we could get another move into 122, right? So if we sort of waft about down through here, get that move up into 122 or so, dollar yen kind of peaks, and then I think we just crash lower. So the euro dollar component obviously makes it odd for me. This is why I haven't liked the Dixie this year at all, as far as an indicator in general for the dollar. As you can see, even this band through here, it's all just a bit of a mess, right? Very much lacking sort of direction and clarity.
Yeah, it's very random at the moment. That's also why I don't know. Is that compression now when we are crashing lower? Euro dollar for sure is on a whole different level in comparison to Aussie dollar, or the whole, let's call it Dixie picture, or the other currencies versus the dollar. I mean, if you look at Europe in terms of GDP growth, with normally Germany being the steam engine, of course, with by far the largest GDP of Europe, and the steam engine basically has run out of coals for a couple of years now. So we're talking about 0, or maybe if we're lucky, 0.2% of GDP growth in 2026. So it's in terms of buying the euro, in my opinion, not very attractive. That's why I agree with you that above 120 things, apart from the longs we are seeing at the moment, where the air's really getting thin there. For me, it's you could argue, of course, there's all this craziness in the US, but still on the FX markets, the state of US dollar is still pretty much the same as it was 10 years ago. It's still the risk-off asset, although it doesn't always react like one anymore now. I'm aware of that, but of course, people are hoping that maybe with the midterms this year in the USA, we are returning to a little bit of more normality again when it comes to geopolitics and so on and so forth. So, yeah, I'm in line with you. I see euro dollar more even down to 115 this year than only something like 118. Apart from me also personally thinking that it would be very nice because I have usually my cash flow in US dollar.
Yeah. See, that's the thing I hate about the Aussie.
Yeah, for you, it's
my income has dropped like 20% just because the thing's gone up. Right?
I love this whole year. What was it, like 2021 when we had this, like the US dollar for the Europe, like dropping all the way down, euro dollar to under one. I was like, oh man, my income is just like up 25% by the currency fluctuation. Well, gave it all back, of course, on the way back to 120 now. But if I have to bet on a side, honestly speaking, and you guys know I'm not a big fan of the US dollar at the moment, at least, I would still prefer it over the euro.
Yeah, definitely. And as far as the ECB, like they're very neutral.
Yeah.
And the inflation's even coming off the boil a bit more.
Administrative regulatory bodies in Europe are always neutral. They are so afraid of, going their own way. It's really like if one country is good at manufacturing mobile phones, then Europe would be good at regulating mobile phones, what is allowed and what not. It's like a friend of mine said, if it comes to manufacturing cars, Europe is good at designing traffic signs and regulating traffic signs. And with this, it's such a joke. Look at AI at the moment, no? It's like a big in the news. France is going to invest $30 million into AI. And I'm sitting here saying, is that really million, or was that like a typo? And in reality, they mean billion or trillion even. If you have on the other side of a pond, companies like Google, who's like 30, 50, 80 billion dollars per year investing right now. It's such a joke.
And like OpenAI going, okay, we're going to pump $1 trillion into it. It's just like, what are we talking about?
Yeah.
I did see that the European countries, a bunch of the nations, they've boycotted like Zoom, Microsoft Teams, all that kind of stuff, at least from a government side for, data privacy stuff, etc. So maybe them wanting to do that starts up some of those things. But again, I don't see it becoming like a massive commercial element or anything.
Because before they do something like this, they are going to work for years on the regulatory environment, like what is allowed, what is not allowed. And once that is done, then they want to implement it. But then everything has changed already again. And they are like 2 years or 3 years late to the game. Kind of a funny side note, I don't know if you read about this morning, the discussion about US fighter planes, I think it was, where they said, Europe said, well, if the US can like deactivate remotely those planes, we are just going to jailbreak the software and deactivate that. No, you're not, because you're not.
Good luck, guys.
And I know I'm like always quite negative when it comes to Europe, especially when it comes to German. That's essentially me being very German, being more on the negative side of things. Germans always like to complain about things, it's really making me more worried. If you ask me where to put my money right now, would be partly USA. It would especially also, if that is possible, China. But that's difficult. You really have to be careful. So that would probably translate into more Australia, especially
I was going to say, this is where I think over the next 20 years, 30 years, Australia is going to be one of the biggest beneficiaries across the board. US wins, we win. China wins, we win.
And
we have all the commodities in between. They want it all.
I think the ingredient you're just missing is like translating this into your own business.
Yeah, I know. We need a much more business-friendly environment. It's mainly for starting businesses. It's not particularly friendly. Particularly with, for instance, like banks and stuff, because we've got our core 4 banks, very centralized, Very big banks. They're now the most expensive in the world, more expensive than any of the banks were during the GFC. So, yeah, but they're just obsessed with housing. That's it. So if you want to start actual business, actual economic activity, it's very, very difficult. You have to. That's why a bunch of people end up going, starting stuff here and then having to go to California, whatever, try and get VC money or something like that, and then there's also all this kind of stuff. It's same reason how there's no like hedge funds and really like there are some, but name a hedge fund that you know from Australia.
Zero.
Which obviously we've got the education, we've got the smarts, we've got the people, we've got everything. We've got the capital, we've got the interest from countries, across the board. But it's because of a bunch of the tax, just also legal regulation stuff, which is very restrictive. It makes it very difficult, that kind of thing. So either way, definitely on that basis. So it was much nicer when we had the tariffs going on, because the Aussie was much cheaper. Got a lot more money. You can see this thing like this year, since the start of Jan. My general income's down like 10%, just for no reason.
But talking about tax, did you read about this, what the Netherlands are going to do now?
Yes, so I actually had this. This was my next point. Yeah. So we'll jump into some of the charts as well in a sec, guys. Like everything's literally not moving right now. Yeah. So we'll sort of wait a little, cover some of this stuff. And then, this is one thing I was going to bring up and see what you thought about this as well.
36.
What's your opinion
on unrealized crypto and investment gains? So also if you invest in stocks. So just to make clear that everybody understands this, what this means. This means, like, for example, on December 31st of any given year, you are sitting on unrealized gains, for example, in Bitcoin of, let's say, 25%. So on these 25%, you will then pay tax already, 36%. Although you haven't realized them, you haven't sold any Bitcoin, which will either force you to sell some to pay the taxes, or to to get the money for taxes out of other pockets if you have those pockets. And this, of course, destroys like the whole culture of, especially not so much on crypto, but when it comes to investing in stocks. One of the major issues, the same in Germany, by the way, is that the government wants to make own private households, employees, more responsible to save up for their own retirement. Specifically, for example, through investing into stocks, be it through ETFs, investment stocks, direct investments. So on a monthly basis, you invest into that. And now imagine you invest out of your already taxed money, by the way, and then you have to pay tax on unrealized gains. And you don't know, like maybe on January 1st, that stock is suddenly going to crash. It's a possibility, no? And then you owe the government money, but you don't have any money anymore because it was all. It doesn't make any sense, and it's like this whole trend, and we see tendencies like this in Germany here, to where the solution of fixing holes in the government budget is always like, how do we get more money from the middle class or
from someone else,
from someone else, basically. And it's I don't know. I don't think this is. I think it still needs to pass like the Senate or something there as well, or the Parliament.
I think they did pass it.
They did pass.
That's what I'm saying. Yeah, they did. They did actually pass it. That was a big thing.
How did they move from being like quite right-sided politicians in the Netherlands to doing stuff that I would consider, a left-wing party doing more?
Honestly, it's mental, because the thing is, like, okay, say you had that compounding growth, because across the globe, right, a bunch of you guys, I'm sure, have whatever respective country you're in, some kind of, tax effective retirement savings fund that you can put into, right? So 401ks, whatever in the US, superannuation here, was it in the UK like an ISA? I don't know what it is in Germany.
Yeah, we have like a finance system where the current working force finances the pensions of the ones that are retired already. Yeah.
So basically, part of your salary, your income goes into this. It's compounded over years. It's meant to be relatively tax efficient with the money going in there, but the idea is you can't take it out or unlock it until basically retirement. And it's meant to fund your retirement so that the government doesn't have to take on that burden. Now, the thing is, with this, if say over 40 years, you then ended up with like a $4 million balance, right? When you hit retirement, it will now be $2 million because of the tax you've had to pay on that throughout the years. And then, so you've got 50% less money, but you also have inflation going up for 40 years. It's essentially worth nothing. Like when you do that math, it's literally like, why would you even bother?
Yeah, and then probably, at least that's
Just
the way in
spend it.
Germany, on the payouts out of his retirement plan, monthly payouts, you have to pay tax again also.
Yeah.
It doesn't make any sense, really. I mean, in Germany, the system is, it's like a financing system. The young generation financing this. The old generations, there are no real investment going into the stock markets from the system. That system doesn't work anymore as well. If you look at the Germany's demographics, we have far more older people than we have young people. So there are like, the party right now who's in charge, the CDU, they're actually proposing why doesn't some of the money that goes into the pension system is invested into the stock market, for example, long term. So kind of like the Norwegian system, yeah, where they have this state pension funds that's like one of the biggest investors in the world. But it's not going to work because the voters, the majority of voters here are above 60 in Germany. So the party is always going to cater for them. They can never take stuff away from them. But it shows like, it's same here, like in Germany, like somehow the parties get very creative in, you know, what is the next kind of pot that we can tap in, that we can tax. Bitcoin for sure is going to be the next one. For the moment, it's still, if you hold on to Bitcoin or cryptos in general for over a year, they are tax-free, the gains, which was nice, which has benefited me a lot in the past, obviously. But it's just a matter of time until they say, no, you're going to pay capital gains tax on this, which is 25%. Which is okay also, you know, I don't mind paying this, but on unrealized stuff, imagine you do this with companies like that, you know, that's like determined.
Imagine you're in NVIDIA and you happen to get lucky and you put in, 20, 50K and towards the bottom, and now you've made like a mil and you got to pay 360K on that.
Also for companies itself, because that is the next step. You start with private persons, but you could as well say, like to the owners of the company, well, you have your own private business, Dirk LJ, limited or whatever. Your company is, according to your taxation and to models, is worth $10 million. Like 31st of December 2005, you have to pay 3.8 million in taxes on this, or even if it's just 2%. But that slowly erodes your stake as an owner or as a shareholder in the whole company. Doesn't make any sense.
Yeah, which then it comes to this thing of like, okay, do we now have to create a full new set of different class of shares which hold ownership, other things are part equity, legal nightmare, right? Costs of legal, framework, everything goes through the roof. Like, it's just mental. It does not make any sense. And also the big part with the Dutch one. So you can see here, real estate and shares of startups will follow different rules. Right. So they are considering sort of the startups thing. It's different though when you have directors of companies later, you come in as CEO and you get shares later, because then that is still taxed sort of that way. But as like shares of like a startup, like you start it from zero, now your company's worth $1 billion, you're not going to pay 360 million on tax because it's impossible, right? But later people stepping in will. Now, the big one, though, why is real estate not included? Like, if anything, obviously it's hard to tax someone on the theoretical value of their home as well. That doesn't work. But you would think you would just get rid of the tax deductions, all that kind of stuff for real estate. It is insane that all these countries still have it. They need to get rid of it in Australia. You shouldn't have capital gains tax where you pay 25%, get deductions or whatever on real estate. Real estate should no longer be a asset class, really. Like, it's just gotten stupid.
But you can see a law like this, whom it is catering for, no?
Yeah, exactly. And that's why, because the majority of people do own a home. It's in most countries, it's roughly 66%, about 30, one third owns it outright and the other third has a mortgage. So it benefits the majority of the voter base for this stuff to keep going. However, we also have an aging population, which eventually they will die. Those houses then have to get sold or inherited by someone. You're just asking for the thing to literally topple over and cause a massive economic crash. It's nuts.
Yeah, but the
Absolutely
massive
bonkers.
economic crash just for the people who cannot afford that anyway already.
Yeah, and yeah, exactly. And the other people are already dead, so it doesn't matter for them, right?
Yeah, it's crazy. Like in Germany, for example, if you buy real estate as a private person, you pay 6.5%, at least in the area where I live, in taxes on the buying price already. So that adds up. If you pay like 500K or a million, that's a lot of money. Obviously, that just goes to the state. But be it as it is, if you do that in a like as a overseas company, buy real estate in Germany under a special holding structure, you don't pay any taxes for buying this. It's insanity. It's always the middle class or the people that are employed that have to pay the price for this. If you're rich, you
Yes,
kind of like hide your money in some holding structures or other legal entities that your tax attorney can explain to you far better than I can. It doesn't make any sense.
yeah. I'm pretty sure I've mentioned before. Like, I think it's like 67% or something of all the state taxes here, and in most states. So I know the one for Queensland at least purely comes from like stamp duty on real estate transactions. And you got 67% of your state tax coming from real estate transactions. What is that? What are we doing here?
You're asking for trouble really long term.
And hence the thing then when Michelle Bullock with the RBA raising rates, this cooks everyone, right? It has such a massive effect that you can't even tackle things like inflation, what monetary policy is actually meant for, because you've got this other stupid housing thing over here, which just trashes the economy. And weirdly enough, they don't quite get it. And like as though housing doesn't exist or something. It's so bonkers. The US is a little bit different because they don't have as much like floating variable rates, right? People can get fixed mortgages for 10, 15, 20, 30 years even. But here it's all, the most you could get is 2 to 3 years. And then that sometimes 5 when they do certain deals or something. But it's always going to be priced, adjusted, higher to make up for it. And so, yeah, it's constantly a floating rate. So anyway,
will you excuse me for 5 minutes? I want to
sure.
my coffee. I'll be back soon.
No worries. All good. When will Fivers collaborate with TradingView so we can trade in TradingView? I think it's a good idea for the Fivers. I have no idea, but I do see it as a good idea. I'm not sure exactly on how, how much friction, how much difficulty there is to get that set up. I have no idea. I know even most like traditional brokers and stuff are only sort of just getting that set up, recently these days. Obviously, since TradingView has become very popular. But yeah, dude, if you guys really want that and there's enough community sort of outreach and vocalization for it, then it would definitely be on the cards for sure. So yeah, throw out some recommendations. I don't know if we have like a recommendations type like a form or something, but I guess maybe in the Discord, you can echo it, see if other people also would find it of value, etc. Just give me 1 second, guys, just to check on my terminal of things. I was just looking at gold. So I am in a gold long right now. I did take the Aussie dollar short before. I also did re-enter on this on a second trade through here. I'm playing it very tentatively though today, given obviously we have all the bank holidays, right? So if we can see Aussie come back down into this kind of area, throw that guy on. Basically, roughly that's what I'd be looking at, just above 70 there for the next trade. That's also going to come in line with looking at the NASDAQ. I'm not too keen on us. Like, I can definitely see the trade for us to run much higher. I would love to see that. That's a big pull right there. I'm not sure we're quite ready, especially with the holidays. And today, the options pricing for the NASDAQ is about 24,710. So we're now, after coming into that 100 moving average on the 30-minute, which will be the 50 moving average on the 1 hour, as you can see there, we're now pulling back down a touch. So that options level is, what was it again? 710, that's right. So 710 pretty much comes into this base here, which was some of the prior sort of support levels. We did ultimately like push through them, and there's some other going way to the left or whatever, just here around that 24,700. So if we get the push to there, purely because there's a lack of trading volume and liquidity today, given the bank holidays, then I might look for some kind of long off that area. Gold, going back to gold, like we were talking about, gold's a bit, it's just a bit soggy overall, right? We did break out of this channel through here. We had the massive drop down there. We have recovered nicely. We've basically come up to where that drop roughly initiated from. Today, we did have a small gap there. I'm not sure if it will, I think it will show on here. Let's have a look. Yeah. So this small gap through there. Jump down. We do have basically the wick running through there, kind of technically closing the gap, but that was also right at the open. So it's kind of partially due to, just spread expansion. So I would like to see us run up through here, approach that gap again. Ideally, I'd like to see another slight move higher to around these tops. That's about somewhere between 5,060, 5,070 if we can push a bit further, pretty much the other side of the channel through there. But at the same time, given the lower activity today, I'll be happy to take it if we get up through here and sort of lose momentum. Do we also trade dollar yen? Yes, definitely. definitely. Love relationship for some time, bit love hate, but this is a dollar yen trade, not on my prop accounts, but on personal brokerage accounts, as a bit of a swing trade that I took through here. Once we reached these lows again, and we weren't quite pushing the lows that we made after the intervention threats. That's too far out. Let's go down to 1 hour. So this was after the threat of potential intervention from Bank of Japan and also from the Fed, getting quotes for currency rates, which they always do with the intent of potentially intervening. They're trying to see how much liquidity, how much volume they can actually put through the market through various prime brokers and such. So that instigated that fall. I did capture part of those drawdowns, but we didn't have true intervention. So some of these trades were still pretty massive, like 158.25 down to 156.60. So I was perfectly happy to TP on them. We then hit these lows down through here, started to recover. We got the higher high, higher lows, higher high. Made that recovery up through here into the prior support. I should say, resistance. So basically, this higher trading block here, the lows through there, formed this channel, broke out of the channel, and collapsed back down going into last week. So hence, since on that collapse, we didn't make a new low, we really struggled to actually meet the prior lows from the initial drop. And then we got some wicks forming there, so I've taken that long. So right now, I am looking for about 154.40 to hold that through as the first target, and potentially see if we can make it the distance to 155.50. Of course, as I was just saying, with the bank holidays, Chinese New Year, everything going on this week, we also had a bunch of the major news last week. We might have a bit slower trading for this third week.
Do you get swap format trade? Do you know that?
Yeah, getting positive swaps for that.
Okay.
So,
because then, I mean, of course, can make sense, to hold on to it through the week. One of the rare pairs, major pairs at least, where you actually get a positive swap.
Yeah, because it's on personal broker. I'm not sure what the swaps are on Fivers.
I have no idea.
What has happened to my
Why?
My taskbar's disappeared.
Maybe you got a message. That happens for me always when I get a WhatsApp or Telegram message and my taskbar disappears.
I think everything's freaking out. It says you can still hear me, but it says my
I think your screen is frozen now.
Is it frozen?
I think so, or it can be due to the. At least I don't see any changing numbers on the dollar-yen chart.
Okay, now everything's frozen. Okay, I might have to restart. I can't even do Control-Alt-Delete right now.
That is so weird. Do a hard restart, maybe better. I'll change.
Yeah, I might have to reset. I think it's basically just errored out. I'm gonna have to reset. I'll be back in a second.
All right. Good. See you soon. In the meantime, good question here. Why do some pairs give positive swaps? Let me quickly answer that question because it's an important mechanism to understand. This all stems from. Let me switch to a better chart here where we can see that. Maybe this one. So swaps basically are not basically, they are depending on the interest rate difference between different currency pairs. And when we look specifically at dollar yen, for example, we see that on the lower end, the current yield, so the amount of yearly interest you get if you buy this bond for a 2-year Japanese bond is at 1.27%, whereas in the US it's at 3.41%. You can basically translate this. It's not as simple as I'm telling you right now, but just to kind of abstract it, you can basically translate that if you buy US dollar and you sell yen, so you go long dollar yen, which translates to nothing else than you buy dollar, so you get a positive amount of US dollars onto your account, and for the conversion rate, you owe Japanese yen because you sell yen. So, of course, you're going to pay on the Japanese yen that you are owing in interest rate, like a credit that you would have taken out or a mortgage or something like this, which, for example, is around 1.27%. Again, I'm simplifying things here. But on the other hand, you get 3.4% for your US dollar deposit. For the US dollar, you have, due to this trade, credited to your account. So you earn more positive interest rate when you are paying a negative interest rate. And this is called a swap, which usually is negative because there are a lot of middlemen and other people, that take a cut, or your broker might purposely adjust those in a negative way for you. But not all brokers do. So for a trade like this, you could have a positive swap, meaning for every day you hold onto this trade, you are going to get a bit couple of pips, in profit already automatically, or you're either directly credited to your account, or it's going to adjust in terms of your position size. And yes, I would have gone to that as well, because the obvious thing here is to ask, is there a strategy that can make passive income with swap? And there is a strategy that can make passive income with swaps, which is called the carry trade. The carry trade really means you buy a currency that has a higher interest rate, you sell S&O, a currency that has a lower interest rate. And this is for a long time was that the thing for dollar yen. So if we look back all the way here for 2021, you can see that the conversion rate between dollar yen increased from 103 basically up to 161, because there was just basically a lot of demand. A lot of people flocked into that trade to we don't have a spread indicator sadly here to kind of harvest the interest rate difference, because the US rates went up from basically 0 to all the way up to 5.25%, whereas the Japanese, who have also lately gone up by a large margin, were very long, even in a negative terrain. So that was a very attractive, one of the rare attractive carry trades out there. But recently, the problem is now that Japanese yields are inclining, meaning you get more and more interest rate paid for the Japanese yen, whereas the US dollar yields are coming down, because we are in an environment where the USA are cutting interest rates. So we came down all the way from around 5.25 to now 3.42. That makes the carry trade more and more unattractive over time. Thus, LJ and I have been talking about this since I think last year, July now already. We are kind of waiting for a momentum or for an event where this whole thing starts at a rapidly rate collapsing, meaning you would see, for example, the exchange rate between dollar yen, because people they are owing yen at the moment, so suddenly they need to buy a lot of yen to kind of close their carry trades, which is going to drive dollar yen then downwards. Of course, it's a very liquid market, but you have to see all the money that's in those trades, and this can happen very quickly. If you look, for example, last year, the first half of July, we came down all the way from up here at 161.80 to we bottomed out at 139. So within just a couple of weeks, that was a move of 14%, which is for a major currency pair really huge, because you have to imagine all the capital flow that is necessary to do something like this. This always happens when you have a lot of people, for example, in this leveraged long dollar yen trade, because you're not only using your own capital, you're going to leverage this, because this is such an interesting trade. And then the banks, when the conversion rate goes against you, will slowly approach you, tell you, your trade a little bit underwater. Can you transfer another 500K or million or 10 million or 100 million so we can keep the trade open for you? Or you cannot, well, then we have to forcibly close it, at least partially. This is not only happening for one entity, this is usually happening for everybody, or almost everybody, at the same time. So you have a lot of demand to buy the yen then, but there's almost no supply anymore, at least not at the prices that we're currently seeing, but at much lower prices. Then you get things like this, cascade of collapses. Yeah. How's everything now? Is back to working?
Yeah, it's better. It was. I think it was just EVMux, Edge, because I've got Chrome with the other stuff, and I've got EVMux on Edge, and it just
no matter what browser I run it, and I eventually get into trouble always with this software.
Yeah, I didn't have to restart PC. I just eventually Control-Delete when Task Manager closed Edge.
Wonderful.
Because it went to 100% CPU and then closed it, dropped back down to 20, and then it was fine. So I don't know. But Yeah, we're running fine now. So but the swaps are that interest rate differential, like Dirk was saying, and then basically you pay the overnight fee because that annual interest is basically split up into like daily components.
Exactly.
Right, so it's divided by every single day. So if you held it for a full year, you get that interest rate differential. Then obviously people also apply leverage on that, so that multiplies that interest difference.
And yes, to answer that question, in
Sorry.
theory, you are allowed to do a trade like this on a platform, at least to my knowledge. Correct me if I'm wrong, LJ. I think you know more about the details of all the programs. However, it's usually not very attractive to do this with prop trading accounts, and it's actually also more dangerous than you might think, because I've seen that a lot of times people who get into carry trades eventually end up looking at something like dollar versus Turkish lira, for example. I mean, we can have a look at that as well. Right now, let me quickly add this. I don't think I have this. Dollar versus new Turkish lira.
I remember when that first started going bonkers, and I did trade the lira for a bit when it first started, but then the volatility just got insane. I was just like, I'm out.
So now bear in mind, like I think the interest rate environment. Let me quickly Google it. I haven't looked at this in a long time. What the interest rate environment in Turkey is right now.
This looks like when you're zooming out on like the stock market, going back to like 1900.
Yeah, really. So right now we just had a cut of 100 basis points end of January in Turkey, but we are sitting at an interest rate of 37%. 37%. So of course, if you buy Turkish lira right now and you owe the dollar, you'll have a massively positive swap. You're not going to get like 30%, but let's say like 15 or 18% per year, which sounds great, no? It's like, oh wow, I get like 18% free money per year. The problem, however, is if you see the currency rate development compared to where we were, for example, in the beginning of 2022, when we were trading at 10, we are up by 300% right now. That means the conversion rate, now you have to pay many, many more liras to get back your dollar. So that eats up more than you get in daily swaps or yearly swaps from a currency pair like this. And this is really like a problem a lot of new traders who want to do a carry trade run into, because on the paper it looks so great, And I agree, normally, I mean, okay, we saw on dollar yen, it was also possible to have like a fluctuation of 14% just within like 2 weeks. But it's a very dangerous trade. So if you want to do a carry trade, I highly advise do it only on very liquid currency pairs, and preferably on major currency pairs, and do not do it with a prop trading firm, because usually the positive swap is not going to be attractive enough to make it worth holding on to something like this for 6 months or 10 months or 12 months.
Yeah.
Risk-adjusted return on this, the guaranteed swap, is not high enough.
Yeah. I was trading lira back when it was between like 8 and 6. And then basically once we started breaking out there and jumped to that like 17, that big spike when we had, further things kicking off with the government there, where what was it at the time? Do they call it a prime minister or a president? I don't know.
President.
Where he was basically trying to run the central bank.
Yeah.
Himself, and then everything imploded. I was like, I'm out. Like,
I remember when I was still working in Singapore, so I must have been somewhere in 2015. There was like this banking guy from Bank Credit Suisse who I sometimes met up for lunch with, and because we were pretty big clients of them, and he told me like, I'm buying Turkish lira bonds right now like crazy because so attractive. I get like 20% interest rate and something like this. Yeah, that didn't work out very well, I assume.
Yeah, reminds me of the Russian bond default as well. Like, what was it, like 98 or whatever?
South Africa, we had stuff like this as well. which was like
Mexican peso
Mexican
carry
peso.
trades as well.
Argentina,
big one.
who made the mistake, of having high inflation but owing debt in US dollar.
Yeah. So, yeah, Vic, if you're talking about my dollar yen trade I had up before, yes, that was a swing trade. They've got running. If I put that back on, oh wait, hang on, we're on the wrong time frame. Yes, so that's the swing trade. But again, yes, that is on a personal account. So this goes back to what Dirk was saying. So typically, can you make? I wouldn't call it passive income. I don't think passive income really exists.
Yeah, thank you.
People
Aim
talk
into
about it.
that, really.
You can maybe call real estate the only true sort of passive income. You still have to look after tenants. You still have to, look after the property. There's heaps of expenses, but that's probably the closest thing you'll get. Maybe outside of like buying a petrochemical stock and getting big dividends and holding it for 20 years. Right? That's probably it, pretty much. But yeah, so as far as this, yes, you can make at least, I wouldn't call it passive, but if you want to talk in terms of getting those swaps regularly, getting them paid in, yes. Doing it on prop doesn't really work. Most prop firms are sort of, they don't tend to have favorable swaps at all because they're sort of leaning more towards a bit more day trading, more active style rather than trying to gain carry. So it's more like the capital gain aspect. Obviously, that comes down to having that many traders across the board. They have to be able to manage the traders on the back end, especially when you become funded and you've shown that you've actually got a good track record over time. You get put the market, that kind of thing. So, like Dirk was saying, the trouble with carry trades, they can have a lot of hidden risk. And the trouble is when like they go really well for a certain amount of time and then they tend to blow up very, very aggressively, very quick. Because like Dirk was explaining before, when people need to get out because the carry trade basically unwinds or the underlying shifts, everyone has to get out at once. So it becomes that cascade domino effect and things just absolutely sink, right? So it is better if you want to try the whole carry trade type thing. You'd be better off doing so on a personal account, like through a personal broker. Another good option outside of currency. The thing you have to realize is that yes, you'll be getting these swaps over time, but you do have the actual capital risk of the currency differential. So, say you could be long, but say hypothetically. Let's just use this as example. You went long through here. Let's hide this stuff for a second. On dollar yen, and you're looking to hold it because you think it's going to go right up through back to 160. Now, in the current environment, we're probably not doing that. But regardless, say you did, it could keep declining down. You would be getting swaps the whole time. You'd be getting paid swaps. But the actual trade is going to be completely underwater. You might be minus, tens and tens of thousands of dollars on the actual trade itself. So the swaps you're getting don't make up for the capital loss of the actual trade. And that's where it becomes really different. That's where it becomes very risky. Another good one can be oil. Right. So this is another carry trade I've got on a personal account, which I've been sitting in now going back to October. And so things like oil, if you go long oil, we get positive swaps. So that can be very nice. And you just sit on it, right? So long as you're buying oil at the right price. Because again, the same deal, oil could go down to $30 and your trade itself is now, the actual asset has lost 50%. So chances are you're going to get margin called, you're going to get wiped out before it even gets down that low, right? So you just have to be very, very careful with them.
You get like 1,000 in interest rates, but your trade is down by 10K. Calling for trouble. Like LJ says, do that on a personal account can be a very good strategy also to incentivize you to stay into a trade that is with a trend, for example. Like I think with oil trade is a very good example of this. And just to make this clear, for most prop trading, or actually all prop trading, to my knowledge, companies out there are not very attractive when it comes to those swaps, because they don't want you to engage in carry trade strategies, not because they are evil or something, or they don't want you to win, but their business model is finding traders that are profitable with trading, not with holding on for eternity in trading pairs. This is what they want to incentivize. Thus, we see that. Just to be clear on that, because that can, of course, be an easy misunderstanding, that they are plotting in the background things to make sure you don't earn money and you keep on buying accounts again and again and again.
Yeah, it depends on the business. The same way that various brokers will be different. And even if you go to like a prime of prime broker to various banks, they'll give you completely different offerings based on their own client book they already have, how much risk they already have on board. They might say, we don't need more of those types of clients because we're already stacked up, right? So they'll actually give you a really, really bad rate because they're actually trying to not get your business because it would be too much risk within the larger complex of what they're already running. Right, so it depends on the. It's a business thing as well. It's not like they're against you or something. So, yeah.
Yeah, exactly that. I have to go through the questions.
I was going to say I haven't.
Yeah,
sorry, you can answer that. I know. I was just going to ask as well. Are you actually in any trades today?
No, I'm not. Not at all.
Not at all.
Because of the combination of, apart from longer term options trades, of course, where I just need to manage the Greeks right now, the hedging part. But like for the week, for the day, I'm not in any trades because of a combination of Chinese New Year and the US markets being off right now. I think we should be pretty flat, actually, except maybe Trump starts tweeting something again on social media, which I hope not. But if he does so, I also not immediately want to be in the market, maybe for the reaction later on.
I'm sure he'll just tweet positive stuff,
of
anything, given it's President's Day, right, or whatever.
Yeah.
Like, I'm awesome. That's what he'll tweet.
It's my President's Day now, the Donald J. Trump Day in the future.
Trump is the best.
Yeah,
self-tweet.
For sure. By the way, before I answer this question, just because we're on the topic right now, did you see the interview with Obama on social media?
Is this like the aliens thing?
Yeah, this is the alien stuff is actually a good reason, like a good example for how things can be misunderstood again. Because he said like, oh yeah, aliens, yeah, they're definitely there because the universe is so vast, there are so many possibilities. But if they exist, they are so far away, we're probably never going to see them. But hey, there are no underground bases in Area 51, to my knowledge. I mean, he doubled down on that to explain that on Instagram yesterday as well. But for me, I watched the whole interview, and for me, it was amazing to see like the way he differences from Donald Trump in how he expresses himself. If I want to say it in a bad way, you can see the difference in IQ there, really. And but
he's definitely
I'm not saying that. Don't get me wrong for all the Trump lovers out there. But
he's definitely much better. What is it like? Orator. Yeah, for sure. He's very well polished.
Yeah,
definitely
polished, and his thought of reasoning, his line of reasoning is much more in line with what a sane human being probably would say as well. Yeah. And
I think the thing with I think though the thing with Trump, I wouldn't say he's not. He's just unpolished. Like Trump has very much clearly the essence of like he's never had a boss type thing. Like he's never had to censor himself or try and think through his words. He just because he's already started from up there. He can just kind of do whatever, and it's you can always tell those types of people. I think Nassim Taleb talks about that in some of his books as well.
I don't like that guy.
Yeah, sorry. Yeah, I know you don't. I know you don't like. I do like his some of the stuff he puts out. Him as a person. He seems
exactly.
Like,
I have to differentiate between his actual work and him as a person.
Yeah, it's like enjoying Kanye's music. versus right? Dude, his music brilliant. Like this guy's genius level, right? This is incredible. The man is unhinged, and yeah, Nassim. Yeah, I don't know. He's definitely very. I don't even know. Like, I could use a couple of words, but I don't know if I should.
He's very convinced of himself.
Yes, yeah, which is weird because he's very, very arrogant in that way, but sort of seems to believe he's not. He's very prickly, put it that way.
Yeah. He loves to point out when other people are wrong, in his opinion,
and hates to take it when someone else proves him wrong. And he's just like, oh no.
There's another guy like this. He's an Italian physicist, and he invented the Bitcoin power law. He didn't invent the power law, but he translated it to Bitcoin. And he had this whole fight going on with Plan B on Bitcoin, who's like coming from a stock to flow valuation model of Bitcoin. And they were like, he was like basically never every day insulting Plan B, calling him stupid. I saw this interview with him where he was like you might, if you think like, oh, this is like typical Italian, like whenever question he would basically explode into the camera. It's like, who is that guy? It was also a good example of, on an intellectual level, being correct, probably. But on a personal level, it's impossible to question or criticize you, to have even a neutral discussion with somebody like this.
Yeah.
But okay.
Yeah, no, I was just going to say, just a final closing with that, and then we can get back to it. That is probably the only thing I like, Twitter and stuff for. I don't really use Twitter ever, but I love watching all the cat fights on there. It's hilarious, dude, because people just lose their nut, right? They just go bonkers, and everyone they're just going psycho. And it's wild as well seeing like very high profile people doing it and just becoming completely unhinged. Like they're just getting triggered.
Yeah.
It's almost like you can tell like they've never played like online games or something, because they just get baited, like just rage baited, like constantly. Yeah, right. But anyone that's spent any time playing Dota or Counter-Strike or anything else, they'd be like, oh yeah, whatever.
Anyway. Blah blah blah. Yeah,
very funny.
You come to my house. Yes, you can do that to my mother. I know. Yeah, really.
It's great to observe. I love just watching that and just eating the popcorn whilst I'm seeing all these guys. It's so funny. But yeah, sorry. Back to this question, which was a good question actually.
Very good question. So Overtake Zone is asking: do you actually need a systematic strategy to be profitable, or can you just analyze the chart and grab the opportunity you see? The short answer to this question is you can do whatever you want, what helps you to find your edge in the market. Yeah, for some that might be a systematic strategy. That for most parts is, for example, true for myself. But you might as well, just analyze. I really want to put this in hyphens. Just analyze the chart, because there's more to it, and then see if you can grab an opportunity there, whatever that looks like. I mean, this is like, I think, more your style actually, LJ. To like look at the chart to see like, well, okay, there's an opportunity that it presents itself right now. And for a good example with gold, good example with the two trades you just were just showing right now, in dollar, yen, and oil, for example. But this is, of course, not just analyzing the charts. There's a lot of, like you said earlier, tens of thousands of hours of looking at charts, of analyzing things going into this, which to the outside world then subsequently makes it, of course, look like very easy. I just need to put 1 and 1 together equals 2. Boom, there's my trade. But the amount of training, like self-training, not outside training that went into this is, of course, huge. So my suggestion is, if you're beginning, try to find something that is at least a little bit semi-systematic. I'm not saying like you need to become an algo trader, for example, which is a whole different story, but something semi-systematic in terms of, hey, I see like this pattern in the chart right now. Seems like whenever this comes, there's a high opportunity X or Y is following. Maybe you back test that one, for example, which is easy today with the AI tools out there. And that way you can find an edge, or you'll quickly disprove your edge, which is the case for most of them. But maybe within this edge, you'll find something else then, which is like more in terms of manual trading. Maybe there's still an edge in what you observed from the chart. And the more often you do that, the more this will happen on a subconscious level, where you don't need to spend hours and hours and hours looking at the chart anymore, but you open a chart, and like you said, LJ, earlier, you just immediately grab what is going on there.
Yeah, so I would say, you definitely can do a bit more of a, per se, like run and gun type situation like that, but it is going to be typically something you build up over years and years of trading, that you actually get that instinctive input, right? Almost like playing a sport or something like that, or, where you're not even thinking, like when you're playing soccer or rugby or something and you kind of make a movement, you didn't really think about it. Your body's done these things so many times, and you can kind of see like the corner of your eye, they're dribbling the ball, and you stick your leg out, boom, great, you've stolen the ball straight through their legs, boom, now you're off towards the goal, right? It becomes this kind of intuitive, natural thing that you're through, synapses wiring and firing again and again and again, it becomes automatic. I do think, though, that obviously, same with that, it comes from the original spot is like structure. So in terms of trading, the way I like to think of it is you can have that run and gun type thing, but it's almost like being on the space station, and you still always want to be kind of tethered to the space station so you don't just end up floating away, right? And sometimes you will be able to feed out more rope, but you don't want to go so far that it just snaps. So if you're just doing random stuff just because you see it and you think it's good, that is random stuff and you think it's good. If it comes from that original structured portion, and then you can intuit like I can see this is actually a big opportunity, or as well, conversely, you'll be able to eliminate risk because you'll see like, I'm in the trade. This is still has kind of the structure. It's not really quite kicking on. Maybe you're in just like a small profit, like $80 profit or $40 profit, but you're like, I can just feel this is wrong. Exit, bang. And then you see, the next half an hour, the asset is just tanked and you got out at the right time, tiny profit, probably just covered commission or whatever, but you saved yourself. So it goes both ways, both in the protective and the offensive position. But it does come from that core base of actually having some kind of structure. It doesn't have to be quite systematic, like some kind of algorithmic type element, but you do have to have core foundational principles that you apply your reasoning from, if that makes sense.
Yeah, and the flip side of this is, of course, also that, especially in the beginning, you tend to get out of trades too early because you're convincing yourself, based on my experience, this is going to stop now. I'm getting out of this trade now. When in reality, maybe it's just the green number you are seeing right now. You like that one, maybe because it's a lot of money for you, maybe because it gives you the good feeling. Like for myself, I always like when the first trade of a week is a positive one, gives me like a good vibe for the rest of the week. So I tend to close it a little bit too early, sometimes not. And this is where we can tie actually into what Richard and William were talking about earlier. When I joined, they were talking about having a trading journal. This is the reason why you have a trading journal, because over time you learn, like, in this situation last time, or the last 10 times, I reacted like this. Was that correct to react like this? Was it not correct? How were my feelings then? And so on and so forth. And the mean thing is, like, trading is so complex, so it's extremely difficult to find a pure mechanical edge nowadays, in my opinion. And it is possible, but it really takes an insane amount of work to get there. And it's also, at the other side, dangerous to surf this wave of it's easy to make profit as a beginner. But when you don't make profit, when you have losses, you are quickly sitting on very large losses. So the incentive and risk of learning a profession like trading is almost diametral, I think. Like, I'm comparing this, like, if you learn, like, you become a bricklayer or whatever, or you learn how to build houses, you'll know eventually the process. After I lay the foundation, I need to do this, then I need to build up the walls. These are the individual steps. But for trading, that's not true, or only true on a higher level.
Yeah.
Like, the process can be much, much more fluid. And I think this is also what makes it so attractive. But at the same time, it makes it very dangerous, because you cannot always say, if I do X, the next thing is going to be Y, the outcome, or the next step I have to take.
Yeah, I'm pretty sure I remember watching a some kind of lecture, professor lecture. I don't know, it was like Harvard or MIT or something, with some clip I saw where it was talking about with comparing trading and like mathematics or physics, and saying trading is way more difficult because the thing with math or physics or whatever, the rules don't change on you.
Yeah.
Right? And in trading, they do. You have this certain set of rules, and it's working, and then all of a sudden it's not. Gravity is always going to be 9.8 meters, squared per second, whatever, and it's just going to stay like that, right? You don't have to worry about it. Just having a random spaz attack that day, right? So that's definitely the thing with trading, where it does change, and sometimes as well, that is part of that intuitive thing where, because you've seen the same thing all the time, and you're like, something's wrong, something's different, right? That sort of back of the brain human instinct, probably built up from hundreds of thousands of years ago, does actually come in effect. And a bunch of the biggest, like, everyone talks about having discrete strats and like quant stuff and math, and that's very much part of trading. But even with a bunch of the biggest well-known traders, hedge fund managers, all that kind of stuff, over the years, same deal. They always say that some of their biggest trades, biggest winners, biggest whatever, or where they save themselves from their biggest loss potentially, was from that sort of monkey brain aspect, where they're just like, this is either really right or really wrong, and they either drop out or they go pot commit. So I think it is good to.
But that's the danger, no? The monkey brain can help you, but it also can be dangerous.
Exactly.
This, fight or flight kind
fight
of
or flight.
situation.
Yeah, fear, greed, that kind of stuff is going to be bad.
I can answer this question here. I know where the NASDAQ is going to head today, because it's going to head nowhere. The US markets are closed, so no NASDAQ up or down today. Sorry, Ben.
Yeah, NASDAQ, I will say, so this is what I was looking at before. I would love to see, basically what I was saying earlier, I would love to see this kind of a move higher to come back up to these highs. I just don't think we'll necessarily get there very quickly. Probably not today. I think we're likely to chop around here and then potentially start to climb higher. Now, the NASDAQ, the options pricing is 24,710. So that's roughly where I've got this guy down here. So I'd be looking for a bit more of a draw back into there, seeing as it's low volume, low liquidity, low activity in the markets with all the holidays. The path of least resistance is most likely to that downside, into support there. And then ultimately we get a drive higher. Now, probably not going to get the drive higher today. It will be more of a down here, chop about and eventually build some structure tomorrow.
But the actual indices, like on the New York Stock Exchange, are not trading today.
Yeah.
So what do you see
the
here
only thing is futures.
Exactly.
So,
Yeah. Exactly. So not the environment I want to trade in, because it's like, probably not going anywhere today. I would be surprised, at least, if it went anywhere.
Exactly. If you wouldn't mind, I might just jump up and just grab some more coffee.
Yeah, sure.
That's right.
So let me change back to my screen. Oh yeah, LJ did already. Thank you. And so that's still Turkish lira we have on there, which obviously we don't want to look at. Let's have a look at gold. Here we are with gold. Today also a bit low liquidity, obviously, for gold today. And trades 2G, very interesting comment. Gold is going through the Wyckoff distribution event. Turn on the 1 hour and pull up the Wyckoff chart. I've been actually experimenting in the past, I'm not going to say a lot, but for some time with Wyckoff wicks and distribution ranges. Never really could find, honestly speaking, an edge with gold for this. So that would be interesting to explore further. How you can apply Wyckoff distributions to actual charts, because I yet have to see something that works well. Yeah, in terms of gold in general, guys, the thing is, we are again here somewhere in the middle of a range. So I want to, for at least swing trades, wait for these events that we drop down to the blue line, to the blue moving average, the 200 exponential moving average, or all the way down to the bull market support band. Always have been a good time to buy in the past. However, when it comes to holding on to swing trades with gold, you have to be a little bit careful because of the swaps. They are going to eat you eventually up if we don't have really a lot of action to the upside. So if we, I think Jonathan had a trade last year, something like this, where he held on like for 2 or 3 weeks in the gold trade and ended up paying like 50% of the profit in swaps. Again, this is the whole thing, on a on a prop trading account. This might be not so attractive to do as on a maybe personal trading account. But for gold long, you're always going to pay swaps. You're not going to get swaps. You're always going to pay actually quite a lot of swap, probably, because for the metal itself, be it gold, be it silver, the interest rate is 0.
Yeah. I was going to say, even for any CFD, even on a broker, you're going to get killed, right?
Yeah.
So the only way to buy it is through like a ETF, low cost ETF or something, if you want to hold long for like a longer term.
ETF on some exchanges, like for example the Xetra, the electronic exchange in Germany, you can buy something called Xetra Gold, which is also physical gold by the end of the day. Then you're not going to encounter this problem.
Fact. Yeah. Whether they actually have the real gold stores, no one knows, but
that's a whole different story. Let's not go into that conspiracy theory better.
No.
All right. Good. Who's going to come after us today, by the way?
I believe Will is out, so I'm going to stay on. I think Rich will be, but I think he's just wrapping up his...
Okay.
He had another meeting or something, so he should be around. If you want to give me company,
because I have a meeting that starts in 5 minutes.
Oh, you do? Okay. If you have to go, then
if you don't mind, that is of course.
That's all right. That's all good.
All right, no good guys. Then have a good week. Remember, tomorrow, maybe you want to share something on that when I'm gone. We have
I was going to. Yeah.
Very interesting going on. So really, I think it's worthwhile staying on with LJ now and listening to how you can profit from a very, very special event tomorrow. I'm going to see you again, and you too, LJ, on Wednesday. So until then, enjoy Chinese New Year. Enjoy the President's Day. See you all. Bye.
Beautiful. See you, Dirk. Alrighty, guys. I'll jump over to my chart. Thank you, Dirk, as ever. So, you guys have me alone for a little bit, so throw me anything you want, and we can go over like any questions, whatever it might be. Throw it at me. Today's bank holiday. What are you doing trading gold? Markets don't even move now. Stupid Phil. Yeah, we've been talking about this. Most of the markets aren't going to be moving today. Even this week will probably be much lower trading volume, liquidity, activity in general. Particularly after last week, we had most of the major news with NFP, CPI, all the rest. So definitely going to be a bit more of a quieter week. Some technical stuff. There will be some assets that will have some movement. So obviously tomorrow, for the Aussie dollar, we've got the RBA minutes, so Reserve Bank. So likely to have a hawkish tilt. So we should have more general upside for Aussie. Today, I'm slightly net short, but we'll be exiting these today, looking for that higher move tomorrow. What else do we have tomorrow? We've got the German business confidence, so the ZOO numbers coming out. We got CPI for Canada. We do have CPI for Germany as well. Wednesday, we got some New Zealand data as well. So labour price index as well as the Reserve Bank of New Zealand. We got CPI for the UK as well as the PPI coming through. CPI for France, durable goods and housing starts for the US. So that will be a mover. Durable goods is always very important. Industrial production later that evening as well. We've got the Fed minutes then after that. That will probably be pretty boring. The last Fed meeting was one of the most, snooze fest of the lot. Thursday, we got employment numbers for Australia. Once again, manufacturing for Japan. I don't know how much that'll actually move the yen though overall. Then we got the typical week-on-week employment claims and trade balance for the US later on Thursday. And then Friday, CPI for Japan. That will actually be important. The guard is speaking. Probably a non-event with that one, really. Retail sales for UK. PMIs for France and Germany on Friday. GDP and PCE for the US on Friday. So PCE will definitely be important. GDP kind of for the US, but less so. But yeah, so there are still a couple, and then we got consumer sentiment as well on the Friday for the US, right? So obviously that's an important one, always is. The majority of the US economy is consumer driven, so it's always got eyes on it. But I think outside of those US dollar components, I think the main mover this week to look at is actually the Aussie as far as trades overall. LJ is a guy. Thanks, brother. I appreciate that, Ron. Long-term view on gold. Okay, we can run down some of that. Why am I looking for longs on NASDAQ? Looks like higher timeframes are extremely bearish and broken. Okay, so first of all, we'll go to NASDAQ. Now, we've had a number of... this actually will tie into the long-term view on gold type situation also. So let's first of all go back to gold. Let's zoom out just a little. Let's go to the 4-hour. This level up here, if you guys, depending if you're around on stream, I don't know, 4, 5. God, actually it's February already. So this goes back to like September, August. So dude, that's almost 6 months now, actually. So I was saying next year, my expectation for tops on gold was 5,500 to 5,600. We did meet that by happenstance perfectly through that basket. And then we've ran off. So we'll see if we actually maintain that throughout the year. Similarly with Eurodollar, Q1 target was up here in that 120 zone, just below 121. And then we should fall off from there. As I've said, Eurodollar has very hard time above 120. It's very thin air. And then similarly with the Aussie dollar, Q1 target was up here at 69.50 or so. Now we've overrun that. I was looking for 70 plus coming towards the end of Q1. Definitely smashed that. The one that was in contention, let me hide all these. I got options prices and everything on there. I got to clear a bunch of that stuff. So the one I am currently still in the biggest quandary about, put it that way, is the US indices. So I think we still will get high movement. We do have the midterms coming out for the US. So the administration is going to be very, on top of that, very compelled to actually see real kind of gains communicate to the US public in that manner. Right now, Trump's entire game is to keep the market up. Both secure, people talk about it being the stock market in particular, but it's more the bond market currently, and by extension, the stock market. We have a huge amount of liquidity to actually come through. The TGA, so the Treasury General Account, is stacked. We've got a bunch of things coming from Trump's big, beautiful bill for dollars to be returned from the tariff profits back to the people. Whether they actually get that through Congress and everything and pay, what was it, like everyone like $2,000 to $3,000 or whatever, that would be a massive injection of stimulus as well. Companies' balance sheets are actually very good. Obviously, we've got some of the worries about AI, and there's this back and forth between it. We had these dips through here with some of the stuff regarding what Anthropic was putting out in terms of the legal side of things and killing SaaS businesses there, and then also going into finance. So we have this push and pull between AI being a bubble, overvalued, or apparently it's so good that it can destroy half the market in terms of their business. Right? So these two things are kind of in conjunction with each other. They're opposing. So either it's overvalued in a bubble and it's rubbish, or it's too powerful that's going to destroy everything else. And we've got these two opposing factors going right here. Now, the third question of that is how much revenue can you actually get from these things? But we're nowhere near what that's actually going to be, right? So with that, you would have to say a bunch of the selling, if you actually look at the broad market, both on S&P as well as like the NASDAQ and these kind of tech companies, we've had super quality companies across the board sold off massively. You'd be insane not to try and pick up some of these companies at these valuations. We've got various companies down 40, 50% plus. We have seen, however, a big rotation into small caps. So that's why we've seen stuff like S&P a bit higher, right? It hasn't been quite as beat down as the NASDAQ. And same with things with the Dow, which obviously the Dow was calculated very different to the other indices. Let's go down on CFD. That's better. So we've seen it breaking out and breaking new highs, whilst things like the NASDAQ, right? So we've got new highs here on the Dow. NASDAQ is still very much suppressed. We're still down in this lower band. So overall, the buying for the NASDAQ would be based on... hang on, sorry. Just reading something. That's all good. So the buying for the NASDAQ would be based on a bunch of this stuff has been oversold. There's no real catalyst to actually draw us down. These companies either have to fail or whatever. We're nowhere near there. These are just kind of scaries coming through the market. So it's a bit of a jostling, bit of a repositioning, bit of a rethinking, recalculation as far as private equity companies. right? Those holding private market debt, which is not public, and then those valuations. And obviously, because they're, private markets, they're not liquid, very different to public. You can't exit so easily, and you can't typically just exit, portions of your position, which you could in a public market. So that's what causes massive drawdown. So at these kind of levels, you're actually looking at some nice discounts overall on some of these companies, and then that would be the reasoning overall for us to go higher. Jobs picture is still stable. Dirk and I talked about that, about the revisions, how we still don't like it, but that's what the market is currently trading. The jobs picture is, just fine. We did have the larger than expected jobs print last week, which was, I got to say, a bit weird, which tells me you can't really believe those numbers so much. We did have some revisions as well, and from that, we did see in that print basically a reversion of the dollar strength as well, right? So everything's very mixed. People are trying to figure out where stuff's going overall now. So hence the long-term views on gold. Back to that as well, just to round this out, and then we'll move on to the next. I think for the time being, we'll probably most likely bounce around in this kind of consolidation area around this 5K, oscillating that between the high 4,000s and this 5K mark. Like very similar to, let's go, I'm going to have to zoom this way out. Back when we hit this 35K peak, right, last year, and then we came down, sort of traded sideways a bit, that slight dip, came up, couldn't meet the tops, traded back down, came back up, and we pretty much oscillated this like midpoint for quite some time, right? So the initial peak was made about April. We oscillated this area long, all the way down to August, right? From April to August, back and forth, and then eventually broke out. So I feel like we're very likely to see a kind of similar aspect here, oscillating this area for some time. And then depending on the broader financial conditions, what Trump's doing, what the Fed is doing, geopolitical risks, Russia, Ukraine gets resolved or doesn't. We have something kick off with Iran or etc. Either see the move higher or finally a drop back down. But overall, long term, I do like gold as investment piece, as a trading piece, as a protective piece to the broader market situation that we're seeing with the NASDAQ, with stocks, risk on, risk off type elements, risk of a potential economic collapse. Most of this buying has come through central banks and governments, not from actual speculative buying overall. So there definitely is that tailwind underneath. But I would just prefer, especially if you're buying long term, since we're talking about a long term view, I look for another dip towards 4,500, 4,600 before really, layering in overall. All right. Let me keep running through. How to stop comparing yourself to others. Easiest first part is don't, I guess. Now, anytime you have this, easier said than done, right? But in trading terms, I would say you're on your own journey, right? There's going to be a bunch of people, especially as well in different countries, came up with they might have started earlier. It depends what age, like when did they start trading? What base did they start trading off? Did they have capital to start? Did they start from zero? Where are they in their life? Where are you in your life? You can't compare yourself to others ever. It's never a good idea, particularly in trading. The other portion of trading is it's irrelevant, such that Your trading is completely independent to other people. Okay, it's completely up to you. And if you nail down the process and you're able to do that day in, day out, do it again and again, you will compound up to levels you couldn't even believe, right? And then these people become essentially irrelevant. You know? So you can look at them as inspiration, but don't take it on a personal level. Their life is completely different. Their friendships, family, their situation, where they grew up, whatever it is, completely different to yours. So you have to take it yourself as your own with where you are. Only thing you can do. Kamal was saying, hi, I wanted to ask, past my 100K account on Top Step last week. 106K in 5 consecutive days with plus 200. When will be eligible for payout? We're not Top Step, brother. You're here with the fivers, my man. Fivers, brother. What are we talking about? What are we talking about? What do I think about silver over the next 9 days? 9 days specifically. That's very, very specific. I wonder why 9 days. Do you have like a options play or something that's got like an specific expiry date that you're looking at? So silver is also a good one. We did layer out this general area. Has to be pretty broad because of the volatility on silver, but it was basically 110 to 116. We did get a slight overshoot towards that 120 there, but this was the idea, to look for some kind of failure at this point. Right now, we got very much almost a bit of a quasi head and shoulders type aspect. That head, yeah, do it. So it's like a distorted head and shoulders. So that's where you put that through there. That's your general expansion of the trade. So minimum target would be down there, which is right into that support, which we did hit that. And then we actually made further lows after that. Probably kind of hard for you guys to see all my drawings here. I would say, though, overall, I don't really like silver. So when we were back through here last week, I was looking for a potential breakout through here, with gold also going higher, which silver just didn't participate. So I've also said to you guys, the 1 year forward futures contract is sitting at about 77, right? Give me 1 sec, actually. I got to pop a trade on here. 1 second, guys, sorry. Just got an alert. Okay, that's cool. Actually, I'm going to close that. Keep that. Probably close that guy as well. Okay, cool. All right, I'm back. Yeah, so overall, I don't really like silver from here. I think it's kind of dead. The trouble with silver, especially from institutional outlets, to be pushing the price this far, it became very speculative. This is not from real silver buying. We can see here, so from at the money volatilities for options, silver has massively dropped. So we're originally printing about 120 before. Gold has come back to a bit more normal kind of levels. It typically trades around 18 to 24. At the peak of the sort of gold silver mania, gold was trading at about 25 for at the money volatilities, and then silver up above 120. So silver has definitely collapsed. Overall, I don't like silver. The margins have increased from the CME. It's pretty much fair value. There's no real reason to short it, no real reason to buy it from here. Any prices above here are clearly excess. Prices below are probably a bit cheap. So it's very much dead in the water. I'd much prefer to trade gold. Much better Option does actually have continued buying from central banks and the rest underlying it overall. So you got to remember, gold is a precious metal, silver is not. So, hey LJ, dude, I will try and catch up on some of these chat questions a bit faster. Hey LJ, can you please explain how expiring options are related to the price movement? Sure. So we'll go back to the NAS. So this is the probability distribution for the options expiring today. So this is the 0 DTE, which means 0 days to expiry options on the NASDAQ. So this gives the average expected price. This is basically where the majority of positioning is clustered. Comes to about 24710. Now, when you have that, and why they're important for price movement, is the options players, like market makers, as the options come closer to expiry, they have to potentially deliver on those options contracts, right? Which means they have to buy up the underlying asset to potentially deliver to the client. So as you get closer to expiry and the price is sort of waffling towards there, right? And say the level for today is 24710. As price gets closer to there, the options market makers basically have to buy more of that asset towards that price. So it tends to bring or inversely offload the asset because price has moved away from that level, right? So you get basically a pull to that level based on them dynamically hedging how much they may have to deliver or not have to deliver at the expiry date. So this is known as spot gamma. So spot gamma tends to draw price to that level from all of those players in the market potentially having to be delivered on. So that's basically what you get. Now, depending on the contract size for the options, it's going to have more pull or less pull. And depending on other events that are going on, like financial news, data, Trump tweeting something, that might skew the actual current market environment, and people just trade the opposite way, and that volume of trading will dwarf the market, the options pull, right? The spot gamma. So sometimes it can just rip away from it, but particularly when you've got days when it's a bit more quiet, maybe there's a bit of activity. So there's a bunch of options, particularly before or just after like a, say, a Fed event or something like that. It will tend to aggregate to that level. Coming into New York, then those options clear the expiry, and then the price will tend to move. So you come down to here, and then either you get a push right up or you get a push right down. But yeah, basically that's why, because the options are basically a derivative contract on the potential if the price moves to that point. So you can kind of think of it like insurance, right? So like you have insurance, like say your house burned down, potentially if it does burn down, the insurance company has to actually pay you out. The same way with an option, if price moves that level, the options provider basically will have to pay you out. Now, there's various types of options, vanilla options. You got knockout barriers, like all sorts of random stuff that would get too complex to go into a in-depth thing on options, but basically that's why. How are we doing, Sniper VWAP? Can we check GU? Yes, we definitely can. Rob's saying GU will explode to the upside this week. Let's have a look. Shall we? Oops. So, GU, as far as the majors, I do like much more than, say, Eurodollar, etc. I did take a euro-dollar trade through here earlier. Same with the Aussie. This has actually started moving much quicker than the Aussie. The Aussie is actually still a little bit dead. Obviously, I took that first one earlier. We did pull down through here, but we've recovered a little bit. So pound, though, I do very much like the pound more so, at least, than the euro. We're basically building this base through here. This is very much looking like we will get a move to the upside, ultimately, probably somewhere towards these tops, or at least a touch below, just below 137, I guess. So that's probably what I've been looking at through there. Stops below recent lows from today, about 136, 34, 35, right? So just below there. So I'd go about 136.30 or so myself. And then that still gives a very nice risk reward for that. I'd be targeting just by 137. I do like the pound as far as longs overall. Potentially, given euro dollar is quite anemic, you could also trade euro pound, which was going to be something I was going to bring up for that same reason, that this cluster through here, if we get a confirmed breakthrough there, you're actually looking at like quite a nice drawdown, or drop lower, I should say. Right. So let's go pull up a short through here. Say even if you just went at spot, stops above today's early high during Asia, run that right down. That's also quite nice. So sometimes when you see that, especially when say, pound dollar has a nice upside, but euro dollar is pretty lacking, it's pretty sluggish, they can also find some of those cross trades to euro and pound overall. What else do I have here? I'm just double checking my trades here. One sec, guys. Okay, that's cool. Got the 25K account. Now futures for the first time. Going to try futures. Yeah, well. You guys, everyone here, turn up tomorrow. Tomorrow, if you guys were here earlier, I think Rich was talking about it. So tomorrow's event, we got the 10-year anniversary event, the first of many. This is, I guess, the major one or the main one or the first one. I think we're going to have many throughout the year. Each month, we're going to have a set of stuff. You guys can find the link in the description box down below. Go through there. Set the reminder in your calendar, on your YouTube, whatever, for tomorrow's event. We're going to have the stream as normal tomorrow, right? But we will finish 1 hour early at the end of the stream. It'll be 1 hour earlier. And then we'll shuffle you guys over to the 10-year anniversary event. So we've got a bunch of awards for a bunch of the community members and everything, like sort of recognition awards and that kind of thing. And we also got, I think it was $2 million worth of accounts to give away for you guys. So definitely smash that. Sign up, put a notification, put a reminder, whatever it is that you need to do for tomorrow, because you guys will have plenty of opportunities for that. I think there will be a bunch of other announcements, maybe some stuff around the futures as well, just maybe, maybe some discounts. See you guys there tomorrow for sure. But yeah, in particular, $2 million worth of accounts being given away. So you guys are going to get a bunch of value for that. That's quite a lot. So turn up. You'll be very happy you did. Let's scroll down. Okay, money glitch NQ. I passed phase 1 in 1 trade. Is it fine? I risk 2%. Maybe fine, depending on how you risk 2%, because there's probably like a difference between risking 2% and then passing the account. Also, what type of account are we on? Are we on a high stakes, hyper growth, or a boot camp? Right? And so if you risk 2% on like a 5-point stop loss or something, it's going to be very different to risking 2% on like, oh, well, we're talking about, you said NQ, I guess, because you're saying your name is Money Glitch NQ. So I assume you were trading the NASDAQ. So say if you had like a 50-point stop on the NAS, it'd be very different to like a 500 or 1,000 or 800 or something point stop on the NAS. Or equivalently, say on FX, very different risking 2% on like 6 pips versus 2% on like 40 pips. Right? These are very, very different things. So you'd have to give me a little bit more information there. Chart Addy, so markets aren't closed today, so why am I on holidays? They're not closed per se, but we do have bank holidays, which means there's going to be less activity, less participants in the market. We've got Canada, was it like Family Day? US, we've got President's Day, and we've got Chinese New Year as well. So we've had less market participation through Asia. London, we've got a bit, but we don't have the crossover of Asia into London. And London going into New York, we're going to have less in New York as well. So we definitely have less participation overall. G-Block Vel Vision saying, I got a gold sell with TP at 49.76. Hopefully it hits before 2:30 your time, I guess. My entry was at 5,015. My stop loss was super tight above the fractal high of 5,018. It held. I'm at break even and took half off the table. Fair, man. So I will say I'm long. I didn't get stopped out on there just, fortunately. Let me double check my terminal. I don't think I did. No, I didn't. So I am still long on gold personally. Where'd you get in? 5,015. That's pretty much. Okay, so basically at the tops here earlier, and targeting 4,976. I mean, that's a good. If you're looking, if you see the short side in gold, that's a very good trade. To be honest, like you've got good coverage through there. You've pretty much entered almost at the tops. Stop loss super tight, 5,018. That is super tight. But it's not bad. That's good. When you find a sort of a top, having a tight stop like that is not a terrible idea. So if that comes through, man, that's pretty good. And you said you took half off the table through this drop. That's fair. Because yeah, I will say I am still long. So, but we'll see. We'll see who wins. Good luck to you, though, I will say. Not sure about bullish dollar pairs right now. The dollar's in a weird space. So I would say, wait, are you saying bullish dollar pairs? Like, are we talking about the majors being bullish? Like, okay, euro dollar? Or are you saying bullish the dollar itself? Because as far as bullish the dollar itself, near term, I would say yes. Longer term, throughout the quarter, going throughout the rest of the year, I think we'll have a net bearish sentiment / bias on the dollar. But for near term, I would be seeing a bit of a recovery into those the wick highs through there for the dollar. So yeah, let me know, what do we mean? Are we talking about like dollar yen, that kind of thing, or what? Rob's saying cable is the best to trade. Cable is good sometimes. Sometimes I like the pound, sometimes I hate it. Right? It's a very love-hate relationship with the pound. I find it very much like gold, where gold is brilliant sometimes, and also other times it's, absolute nightmare. So yeah, ideally gold, I actually want to see a return to these, these highs, either slightly lower high than that wick, just below 5,050, or a push beyond that. But we'll see how far we get with today's slow trading. So I'd have, let's see, through there, there, and then there. So 1, 2, 3 as the rough take profits. So this would be extreme, up to 5,090 odd. Middle point about 5,060, just below there, 5,059. I never take it at the exact point, always a touch below it to make sure you get filled. And then same deal here, about 5,027. So we'll see how much we run, if we run, or we may just get stopped out. Who knows? Look at UK 100. We can do that. Where are the other members? I'm alone right now. FX Darth Vader. I love it. I love the. I love it. I actually like your profile pic there as well. That's pretty cool. Got like this sort of bull with the chart going off. That's actually really cool. I like that. But yeah, I believe, I don't know if anyone else was jumping or it's just me running it. I know Will had some other stuff to do, so I think Rich was going to jump in, but I assume he's busy, or someone else. I forget. Doesn't matter. I'm here. What's up, my dude? Ace 4 High. Love the name as well. What's up, LJ? Thoughts on pound yen? We can definitely have a look at pound yen. So, got some older drawings. Look at this scribble. I haven't looked at pound yen in a little bit since last week. Okay, so I assume this was... I don't even know what this is. Oh, wait. When we zoom out. Okay. I remember now, actually. Last time we were talking about pound yen. So let's get rid of this, let's actually make it a bit more structured. So one of those things when you get these kind of megaphone type patterns, I don't always like them particularly, because you get basically through there or through here. It tends to tell you you've got like a break of the current direction. So in this case, that would be a move back up to some kind of relative support through here, which is basically this higher trading range. Hang on, let me shift the chart just a little. Right. So this block above here, this higher trading range, and then this is a lower band through here, right? So when you tend to get this, that middle point there of the trading range will tend to be the cap, and hence I'd see some kind of a move through here. Obviously last week we were looking for that potentially to hold support or else to break down. Already deleted the other portions. Let's get rid of that, clean it up. So from here, this has come down, met this support area through there. I would like to see a move higher, meeting this underside, and then typically you would see a break of the prior trend when you get that megaphone type aspect and a move lower ultimately. That goes in line with the dollar yen picture. And you'd probably have the move down to that top cluster there. So if we change that up, that would be basically what I'm looking at. Come on, there we go. Beautiful. Picasso, beautiful. Now, I will say that with the caveat of this goes very much in line with the dollar yen picture. And so you would probably need dollar yen to actually accelerate to really push down the other yen crosses, because I generally speaking, am in favor of, same with the AUD yen, for higher pricing. So near term, I think we will get that push back. So this is something I was mapping out on Aussie yen for us to come back into the support around 107.30 or so, then to ultimately continue higher. That will depend on how quickly the yen intervention or Bank of Japan interest rate hikes come through or don't, right? So it's very much a ongoing situation where you got to literally look at it day to day, week to week overall. Right now, aligned with dollar yen, I see the upside. So basically yen depreciation, pound moving up as well, coming into those levels, but then probably from there a bit more downside. I love to see, especially for Aussie yen, for us to go much higher. I think what was Aussie yen at now? I brought it up just before, like 108.5. Love to see it go higher because I want to go to Japan this year. But I think we're kind of reaching some of those highs on the other yen crosses. So that's where we're looking at. I think right now, obviously, we've run into this underside of the prior wick lows through there that we're tackling with. But if we can actually break up beyond that, about 211.70 is going to be your next target from here. All right, let me scroll back up, see where we're at. BTC is moving. BTC is moving a bit. This I did get tapped in on some long-term buys I've been looking for in Bitcoin. So this is not this TP is not actually where I'd take profit of, like, I don't know, 200K. Right, this is a long-term hold that I did actually pick up some BTC when we hit 60K through there. So 60,500, I had the buy-in point. But yeah, Bitcoin's gradually moving up. Again, we do have a nice structure for us to get a bit of a return, probably up to 80K, and then be looking to the underside of that channel that we broke out of and then collapsed from at about 90 or so. But yeah, I always see BTC as a bit more of a longer term hold / swing type situation. Company saying, hey LJ, just joining in. I'm also in cable and gold longs and WTI longs as well. Good luck, mate. I like that. I like that a lot. So pound, I do see that upside. I can also see the downside potentially coming in, though. I will caveat that with being that euro, ultimately, I'm actually looking for us to come down through here and actually meet that that short condition through there. Give me 1 sec. Did I get tapped in the pound short? I don't think I did. I'm still in the euro short, but not the pound short. Yeah. So pound overall with this structure, I do see us going higher on the lower time frame, but the longer time frame with the euro going lower, that's my only caveat. So pound dollar, I think, will hold up a bit better. I don't expect us to actually crash down unless euro fully falls out of bed today below these earlier lows. What else did we have? We had gold longs. I'm in the gold long still. If we don't make progress on this, though, I will potentially just clear it. If we don't make progress very soon, because we're sort of languishing through here, we could see another drop lower from this standpoint. We're kind of this general trend line zone through here, right? So we could see another drop through there, which would get me stopped out, which I'd prefer to just, close it through here. If we don't actually, on the next sort of candle or two, actually pick up, then I'll probably look to exit. I would look to potentially buy again back at about 49.80 with that there. And then WTI, so yeah, oil longs I have liked for some time. This is the long swing trade that I've had. Definitely like that. Oil longs from where we currently are, I do also generally like. Ideally, I'd be getting in by this 200 moving average on the 4 hour. So I think we might have a slight tick up, move down, and then some kind of move up through there. So it just depends on your time frame for oil. I think gold is too slow. Wait for New York session. I see what you're saying. Yeah, kind of agree, kind of don't, in that New York is probably also going to be slow, to be honest. So I'm going to exit gold here. I don't like it. All right, so I'm out of gold. It's just not moving and starting to kick back down. So I got a marginal profit just before this dropped just there. Literally like that. So yeah, I'm out of gold. I'll wait to see if we get a new low to enter from here for the upside. James saying he took a NASDAQ, along NASDAQ, it's moving sideways, maybe down, wondering whether to get out. So going back to NASDAQ. This is pretty much what I was looking for. NASDAQ, obviously, we've got the bank holiday today for the US. So the stock market itself is going to be completely closed, right? So there's not going to be any real trading of actual stock. Any of the price movement you see is literally just on the futures. So the options data for today is 24/7/10. We went over this earlier, which is just down here, just by this sort of general support level, a bit lower. So I'd prefer to see some kind of dip down to there. And then today we'll probably have sideways trading. Maybe tomorrow we actually pick up and get a bit of a rally coming through the board. But for today, it's probably going to be just kind of sideways. I wouldn't expect much at all. So yeah, as far as you're long, it depends on how you size the trade and how long you're willing to hold it. Because if you're in through here, potentially, if you've sized it appropriately, you could be holding this long through tomorrow. And depending where your stop's going to be, if you've got something really tight, you might want to look to get out. If you've got it, spaced out, probably at least below 24,625, then you could even hold that into tomorrow. But I wouldn't expect these kind of moves aggressively today. So we got a bunch of bank holidays with US, Canada, and China. Let me scroll down. What were your confluences whilst taking the odd dollar trade? Okay, so we'll go back to that guy. Let's zoom in through here. Okay, so we go out to the 15, hang on, 1 hour through here. So first of all, this is on the 1 hour, right? So we have basically this top cluster of trading, this higher zone, right? With some of these wick lows, the wick tops through here. So you have a general resistance level through there. You've also got the 100-hour moving average coming in here, and those prior tops before collapsing into the end of the week last week. So that was basically the cluster I was looking at. It's also around that, round number just before 71 cents. So that was the confluence that I took from there. Plus, you have to take into account we're up 0.225% on the day then, which is, in terms of the ATR, is generally going to be the full ATR move on some of those days when you actually have lower liquidity, lower volume because of Chinese New Year, bank holiday in the US and in Canada today. So typically you take whatever the typical ATR is. So if you're looking at potential 0.35 to 0.4% on a just general day without massive news, half that'll tend to be some of your tops through there. And then if we go, hang on, and go down to a longer time frame, we're starting to basically came into that cluster just by the 2 standard diff on the 15-minute, but knowing that coming into that session we'd start to slow down, and then you also had a bit of the cross correlation with some of the other, like the euro, the pound, that kind of stuff topping out. That's why I took it. Rich, welcome back, man. Welcome. I don't know if you can hear me. Wait, hang on, guys. Am I frozen or is Rich frozen? Someone comment in chat. I can't tell if it's me, if my system has crashed again, or if it's Rich. Okay, it looks like it's Rich. Okay, we'll see if he returns. Rich kind of looks like Doctor Strange. Oh, dude, that'd actually be a good outfit. Could do for like next Halloween, for fun. No worries, Miss K. No worries. Good to see you. Okay, so yeah, it is Rich. Yeah, okay, cool. I will say as well, guys, if you guys are not subbed to the stream, please do sub. We're getting very close to 100K. Let me double check what it is now. We're pretty close, aren't we? What is it? 98.9 subs, right? 98.9K. So obviously we've got the big event tomorrow for the 10-year anniversary event. Going to be a bunch of awards and recognition awards to a bunch of guys in the community and everything from the Discord. A bunch of guys that have been around for forever. We're going to have some discounts, going to have some announcements. We've got a bunch of talks from, the founders, everyone else, a bunch of things of what's going on in the future. We've got $2 million worth of giveaways of accounts. So you guys can find the link down below, right there. Sign up, put it in your Google Calendar, the bell, whatever it is on YouTube. I don't even know what it is these days, but you guys can find it there. Turn up tomorrow. We'll have the normal stream as normal. So you guys can catch up on trades on the market, fill you in, all that kind of stuff. Then the stream will end 1 hour early at the end of the stream. We'll shuffle you guys over to the anniversary event stream, of which we'll have all this stuff going on. So definitely put it in your calendar. Turn up tomorrow. Bunch of free giveaways. Like 2 mil is huge, right? Got a mass to give away. Okay, so definitely jump in there. And with the subs, if you guys are not subbed already, please do sub. Because once we get to 100K as well, going to be another massive giveaway. And the idea is to get to the 100K subs within the same time frame of the 10-year anniversary, and we're going to have something huge for you guys. So what you guys like, sub, share the channel. Hopefully you guys are getting value, all that kind of stuff. Ask any questions, anything you want. Here to help you out. And yeah, more gifts, more presents for you guys. It's like Santa every month for this year. So yeah, same with the 10-year anniversary. We'll have a bunch of stuff, obviously tomorrow, a big one, and then we'll have heaps of things going on out throughout the entire year, all the way to the end of the year, with different certain events going on as well. Just let me check one thing. Sorry guys, I'm just sending a message. Okay, cool. How to trade scalping setups, LJ. So let me just have a look at my own trades first of all. Just a check, because I think that Aussie trade is getting a little close to the stop, so I'm going to actually bring that up a bit. So just to profit on the Euro trade through here. So I end up TPing. Hang on. It was just that 52 right there. So with that, I'm going to extend the stop of the second Aussie trade through here. Since I've hit TP on the Euro trade, I'm going to put that up to 70.94 for now, and then just sit on that, see how we go. Now, as far as scalping, how to trade scalping setups. So I would say if you're just starting out with trading, to be honest, I would actually not recommend scalping. It becomes very attractive for a lot of people. Let's go down to like a 1 minute. Scalping, especially when people start trading, it becomes very attractive because it's very quick. It's very now. You get an immediate result. I would not recommend it, because really you need to be a little bit more skilled with scalping. I would try trading intraday overall, first of all. With that said, if you are going to scalp, and say you're already there, then one of my preferred outfits would be to have something like the 2 standard deviation channel. This is something that we've gone on about for quite some time now, both myself and Dirk. Very effective across both scalping, intraday, and swing trading elements across lower time frame, every single time. So 1, 5, 15, 30, an hour, 4 hour, daily, weekly. You do have to take it within its context, but simply within scalping in particular, if we stick to that, basically what you're looking for is between the bottom side, so the -2 and the +2, should roughly encapsulate 95% of all price action. So generally speaking, you can say that when price moves outside of that, this is a less than 5% probability occurrence. So your idea would be to see that as an extension of price and then trade price back down to the other side. Right? So that's pretty much what you're looking for. Then you got to take the larger context. So for instance, like here, you would see that's down by the bottom 2. Now, if you went long through here, ultimately we went further down. But that's where you need to know whether you're just trading into the 1 standard div, the middle point, so the neutral point, or if you're trying to trade higher to the top end. Obviously, the entire channel is moving lower here, however. So you wouldn't want to be trying to pick the bottom to then hit the top side of the channel, because we're clearly in a downtrend overall. But if you can find the top side of the channel, and especially with this, or at a midpoint where you are angling lower and you get the confluence with some of the moving averages, I would say, to be honest, euro dollar right now is probably not a good example. Today's examples across the board are probably not going to be that great because trading has been kind of stagnant overall. You can see, we've got the 10, the 50, 100, 200 all clustered through here. But if you can see that lower downside, since they are clustering, find that confluence of them and then trade that lower until you actually see the lower band hit. So if you took that from the higher band to the lower band, that'd be a great sort of scalp trade, right? So it's from 118.63 down to about 118.50 here on the euro, and that would have been 50 minutes, which technically is often a little bit long for scalp trade, depending. I feel like scalping needs to be at least an hour or less, so it's not too bad. It's going to depend on the day's conditions overall. Give me 1 sec, guys, just to manage one thing. I gotta close that. Close that order. And then I'll take profit on that. Okay, cool. All right. But yeah, so, scalping overall is pretty much just playing this technical structure. It's very technical. Looking for some of these higher lows, lower highs. This is probably a better example on the Aussie just here. Obviously, we got the trades on here. So we just delete these just for the time being. You could see where we've met basically this double low through here on the 1 minute. You're also outside the 2 standard deviation band. Look for that to move higher. We do have an ascending channel, the 2 standard div band. And so you could buy that at the bottom with the cross confluence of a prior low through here. And also roughly comes in with that low. And on top of that, we have low here, higher high, higher low, higher high. And then you've got a neutral low, right? Which is actually still technically a higher low, but it's roughly in line with that. It's just a touch above. So then you would see that move up to these prior tops and up to the +2 standard deviation. So that would be a way to trade scalps. That's how I prefer to do it, at least myself. Otherwise, you can do it a cross combination of moving averages or simply the prior market structure to the left, where you're going from this point up to one of these prior points. And if you're going to do that, though, you just have to be happy to be quick on the trigger figure, say when you fall short of the exact high, right? That's why sometimes having these moving averages is quite good. You can see we tapped right into that and came off. Let me just have a look at a couple of things. Okay. You guys need to work on your server as well. What server issues are you having? What server issues are these? Because you may be talking about some of the MT5 updates that have happened recently, which have caused everyone problems. So that's not to do with the actual server itself. It's to do with the MT5 updates. So a bunch of the scripting has kind of gone wrong. There's been various problems that people have had. Some of them have been people have found certain EAs or indicators that you have, depending on the font style, will lag out your entire terminal, right? And it basically becomes unusable. And the thing is, even if you then try and unwind it to a prior version, it still has problems. But as soon as you change the font style, it actually gets better. So if you're having that that kind of issue, that might be what it is. We've all been having that. I've had it a million times. It's very annoying, but not much you can do. It's like a MetaTrader type problem. how to join the Discord. So, Zara, how to join the Discord is if you have a Fivers account, go into your hub. You should be able to find it through the hub. I'd have to look at, I think you go to community, I'm pretty sure, in the current hub. I haven't had to do this in a long time since we've had the updates. Let me just check, see if I can find the actual spot. Oh, actually, it's right there. Never mind. They have, okay, so if you go into your hub, right at the top, you'll see where there's the Fivers symbol along the top line where you've got like overview, community, academy, my orders, affiliate, that kind of stuff, right? So to the left of that, you'll see there's the Fivers symbol, then a Discord symbol, as well as the YouTube symbol showing when we're live. So I believe if you just click the Discord symbol there through your dashboard, it'll give you the invite to the Discord. Right, so that's how you do it. So it should just be, when you go into your dashboard, to the left, look for the little purple Discord symbol, and then click on that. Then you'll be good. Yes, I can, Rich. Yes.
Awesome. Sorry about that. Power failure. Welcome to South Africa.
Someone steal your copper cables again.
No. Thank goodness. At least this time, they've only decided that the municipality wants to work on live electrical equipment while everybody is at work, quote unquote. So,
see, unfortunately for me, they do work on stuff late at night, and especially with the stuff going on for the Olympics. Trouble is, I'm awake late at night, so for me, it's actually terrible. So I'm in the wrong, time frame.
Yeah, I do apologize if my internet is going to be affected and if it's janky and slowed. Yeah.
No, you're just fine. You're just fine right now.
Okay,
So.
cool. Just in case.
Good.
In case. All right. Cool.
Since you're now stable, would you mind if I just pop up for a minute? Just
Dude, run
just
to
a bio break.
Let me share.
If that's all good. I'll be
my
back.
screen. Yeah, there we go. You can pop out quickly.
Sweet. BRB.
All right. What's up, everybody? My apologies for, first of all, the electricity, and secondly, for leaving you guys alone with LJ. No, I'm pretty sure you guys enjoyed it. We're busy testing the live event for tomorrow, so we were hopping back and forth. So LJ has been gracious enough to hold down the fort. What were we looking at? Let me have a quick little gander at chatty. Doctor Strange, he's either frozen or posting. Yeah. Why my Fiverr's empty got stuck. How to trade, scalping. You guys need to work on your server as well. Well, our servers are fine. The Fiverr stuff is all gravy, baby. It's localized issues, like with the streamers. The Fiverr's is fire. Yeah, Louis, you know it. What do you think about gold? All right, let's have a look at gold. So this morning we were talking about the potential for gold to potentially come and do something like this. Well, that was my hopes, at least. But we also did talk about the potential that gold could just be sitting consolidatively between this area and this area over here, especially since we don't have, I don't have my news up, seeing as we don't have the US and Canadian participation during the New York session. Sorry, there's a lot of stuff going on in the background, and my brain is just all over the place. However, it seems as though we've got this very slowed downward tick now, even though we were looking a little bit more bullish across the day. But this is just going to be this, I think, for gold. It's just going to be sideways. New York session, I don't think there's going to be nearly enough participation to even consider pushing price, I think, down to here or even price up to there on gold. Gold, to me, stay out. Just, I don't know, LJ, if you agree. To me, gold is just... It's going to sit there.
I was long before, and I was, I don't know, 600 or 700 in profit, and then we started dipping down, didn't kick on, and so I just closed it out for like $40 profit, because it's not really getting anywhere. If we get a further pump somehow, then I'd jump in again, or if we get a further dip down, there's another level I'm looking at, which it might be reasonable. But yeah, I don't know, gold I would like to see higher. I think we will ultimately go higher, but it's just very I would have liked to actually see us push on over this past sort of hour. But I am in the euro dollar shorts and Aussie dollar shorts. So euro dollar I did close.
Getting close, yeah.
But Aussie dollar I'm still in. So that's going well.
Yeah, it's got this very lovely area over here, which it had tested previously. Obviously, this wick over here being a news event. But when we tried to come and retest it again, 1, 2, 3 took up a little bit liquidity, pushed higher, took up more liquidity, another reaction. So we're back to it again. So either one of two things. We're either going to respect this area, which I don't think we're going to see today. I think it's going to be slowed. I think it's more going to be like this.
Yeah. I think ultimately we'll see 117.90, but just we won't see it today. Oh, hang on. Give me 1 sec. Sorry, mate. Someone's left the fridge open. I can hear it beeping.
Who's that someone? The person that literally just came from the fridge. What price is this? 118 to 117.85, I think can definitely be tested. And then, oh yeah, no, definitely. This whole section here looks really nice for a potential test point. So something...
There's my housemate.
Somebody left open. Who's this somebody? Yeah, well, 118... 118 to 117.65, I think. If we can come and test this and then decide what we want to do here, that would be awesome. Because we've had establishment, retest, break lower, retest, attempt to push lower, break through, retest, and then consolidation up over here, and then an attempt to try and push price lower. So we could potentially come and sit on this section and then try and rebound off of it, or we can absolutely tank through it and then try and push lower to somewhere down here. Let's see if there is a nice area a little bit closer. Yeah, this doesn't look horrible. This section like this does not look horrible.
Euro's just so anemic, right? And I've talked a number of times about us being near all-time records of net euro dollar longs. We're not quite at the peak, but peak is 31 billion. We're at like 26.8, but typically any other time the next set of sort of peaks have always been around that 24 to 27. Like we're pretty fully valued, right? Trouble being, obviously, I can see every reason to sell the dollar, right?
I mean, if you look at the DXY...
Not right, yeah, DXY not right now. DXY for like today, I'd be going long. Hence, short, that stuff. But
Yeah.
Longer term, yeah. But that's also basically what I'm saying is I don't see the DXY as an actual good indicator of the dollar going forward. Especially as well, you do have the dollar franc component in there, which is now getting a bit weird with the cross component with the dollar yen, where they're being very inverse. But we're seeing dollar franc actually come up now because it's just been so incredibly oversold for a very, very long time. Dollar chef, as we call it.
Dollar chef.
Yeah.
UHD chef. USD chef. Where you from? From the USD chef.
Oh, I did finally watch the final episode of the Korean.
Oh, dude, cool, huh? The culinary
Yeah,
cross.
I was upset. I thought, what's his name? What was his name? Some whatever monster, culinary monster.
Yeah, thought he was gonna win.
Yeah. I thought he should have won.
Yeah, I did too.
And I was like, what? No.
Do you know what? Like at what point I was like, oh man, it's gonna be a white chef. It's gonna be the white coat chef.
It was when he put down the what's it called? Sake? Is it sake? No, not sake. The alcohol, whatever it's called.
Soju.
Soju. Yeah.
Yeah.
I think that sort of sealed it with the.
So when culinary the culinary monster was along with that other white coated chef when they were doing the when he just came back, when the culinary monster came back, when they were pitted against each other, I was like, it's going to be a white chef. It's not going to be a black coated chef that's going to win, because the black coated chef won the previous season. So new season, it's going to be.
Yeah. I mean, that is one of the things I hate with I like, but also hate with the Korean shows. As much as people think they're free flowing, they actually have a full story in mind that they actually run in the background.
Yeah, they do.
It's the same with the physical 100, and then the what was the name of the other one with the multiple countries with Australian stuff? What's the actual name of it?
Physical Asia.
Physical Asia. Yeah, sorry, thank you. Where they do. Hence, why it seems like, oh wow, it just happened to be that both sides of the 4x4 teams are so balanced. It's like, no, it's very intentional. So yeah.
That's
good. But
Australia lost that one, I think, purely on.
That was their own fault, to be honest.
That was their own fault.
I think it's literally the technicality with it hitting the sensors. That's literally it. Because you're watching them going like, bro, they're definitely the ropes themselves were.
You just see the Japanese team, and they're going absolutely spastic, mate. Like, it's their bodies are like so rigid and.
Yeah. But still, you even watch them on the sideline going like, we're cooked. And then they won. They're like, huh? How did they win? What?
The second round, they won convincingly. Anyway, market is a bit slowed at the moment. Unfortunately, I don't think we're going to see much in terms of volatility today. Unfortunately, Darth Vader, it looks like Doctor Strange, please make some magic and volume come to the markets, Richard. Unfortunately, I would love to. But the problem is we are getting closer and closer. What is the time now? My time. It's almost 3:30, so it's 1:30 GMT.
Yeah.
We have an hour. And then the New York session opens up. And unfortunately, I don't think we're going to see much in terms of volume. I think what we will see is that's going to kind of like move the market a little bit up, and then it's going to come down to a little bit, and then it's just going to become stagnant. You don't have Canada, You don't have the whole of US. You have retail traders, yes, but you don't have hedge funds. You don't have banks.
You have them to a degree. You just don't have them to the mass amount, because there will be people at hedge funds that turn up, right? It's
Yeah, fair.
Well,
I mean, who wants
you
to
just don't
celebrate?
have the major workforce, and
Yeah. Who's going to be celebrating President's Day?
yeah.
I don't know. Anyway, the idea is just that I wouldn't hold my breath. I wouldn't hold my breath for crazy amounts of volume, first and foremost. And secondly, I would not buy into the idea that we're going to pick a side. I think we're going to pretty much just consolidate, and it might be a wider range of consolidation, but I think we're going to just consolidate. You can already see it with the NASDAQ as well. We're not going to have this. We're not going to have this. So we're going to have more of this. Or it's going to end up being something like it was yesterday, where we're just kind of like stuck in this area. You can potentially try and get some shorts pushing price lower, but I honestly would not hold my breath. Same thing for gold as well. Gold is already...
Yeah.
This was the move. That I feel like was the move yesterday.
Pretty much. I will say I did re-enter just now. So again, looking to close that gap, basically. Since we did get that candle.
So you want to come up to here, yeah?
Yeah, so we'll see. So I've got the stops below to the left with that wick low candle. That was that 15-minute. Yeah. So my entry point is exactly 4998.2.
98.2. Your stop loss is, I'm assuming, either just below or equal to this low swing over here on the left.
Yeah, so stop loss is 4991.5.
4991.5.
Yeah. And then take profit is 5038.8.
Oh, you're going a lot tighter than I expected. I thought you were going to go all the way down here.
No, forget that. God, no.
Like a 1-to-1. Okay, I see.
Not with. Yeah, so this is a slow day where we got bank holidays. So this is when I'll tend to trade those tighter stops. Just play like the very local structure: 1 minute, 5 minute, 15-minute. And then with some kind of 1 hour recognition, but not directly trading off that. But I'll just be aware of it, right? And then just looking for, because you tend to get those, like it's basically path of least resistance, right? So the same thing with the NASDAQ we were talking about before. Since there's not massive volume, seeing that drop lower. The options price being at 24,710. Since we hit the 200 moving average on the 15-minute, we're pretty much just riding that the way down. And ideally, you'd see that move down into there and buy off that. So same deal.
Yeah. So, do you think that today being a holiday movement, or are we just waiting for those trades that are in limbo, that's waiting for the market to open up to kind of like tank its way down towards this 24,710 zone? Or
what was the start of what you said? You went underwater again.
My
mic has been doing a lot lately. I will say.
I don't know why. I honestly don't know why. This is a really good mic setup and whatnot, and this is a really good mic, and it's just every now and then.
Dude, I actually need to buy a better mic. My mic literally cost $15. It is utter trash. Literal trash.
Can't remember how much I bought mine for. It's been a minute. It's been a while. It's been a fair few years. It's a Scarlet Studio, so it's Focusrite. It's a decent brand.
Yeah. Mine's from Kmart. I don't know if do you guys have Kmart in?
No, we we have our own version of Kmart. It's called Macro.
Yeah, so just like the kind of like
Wholesalers. Yeah.
no, yeah, sort of. It's like really cheap stuff, but not like it's not like a dollar store. It's not like dirt. It's
So
yeah, I
what?
guess
Your
almost
Kmart
like
is like Walmart, correct? It's like it's an all you can eat buffet of whatever consumer products you're looking for. You can
yeah,
pretty much
kind of, except without the supermarket part, I guess, pretty much. Yeah.
Is it
But Walmart has more normal stuff, right? So we have Target here as well, right? Most places have Target, but our Target is like a weird confused level where it isn't quite sure if it's like premium or it's cheap, and it has like a mix of both. And it's kind of like a lot of cheap stuff is priced at premium levels, and then some of the premium stuff is priced only marginally though lower than to the degree that you don't care. It's no difference. So they're very much confused. But
okay, all right.
Kmart here. Anyone? I don't know if any of you Aussies are still in the chat at this point. You've probably gone to bed, but Kmart is great.
Wardy does saying it's similar to Best Buy.
Maybe. Hang on. Let me look at Best Buy.
Okay, so the thing about Macro here in South Africa is that it's a wholesaler. So you can I don't know, you can go buy yourself some underarm there if you want to, but they also have like all of the electronics. You can go and buy yourself, I don't know, like a garden set, you know, with a table and chairs and an umbrella, you know, that kind of like stuff. And in general, it's the same stuff that you can get anywhere in South Africa, but there you can do all of your shopping all in one place, technically. So you literally just need to go to one place and you can get everything. That's what I thought Kmart was for you guys, was like it's your one-stop shop. You can just walk in and everything's available. But now you're saying the grocers section is not really available.
Yeah, there's no... Yeah, exactly. That would be more like a Walmart thing. So we don't have like a place that has that plus groceries, right? The supermarket and groceries are very separated, but they have pretty much everything else. So you got like clothes, normal clothes, athletic wear, sports gear. You can buy like a bike. You can buy terrible furniture, cheap furniture. You can buy towels, kitchenware, knives, forks, plates, whatever. So it's pretty much everything except, like, I don't know. Anyone that is from Australia though will know Kmart. Kmart is basically a cell phone brand. It's like buying stuff from. Yeah, pretty much. Yeah. So it's like that's actually a good description. It's like Temu Premium.
What right? So Temu Premium, mate? Like
no. So it's like Temu is dirt, and this is also dirt, but it's like dirt with some like gold sprinkled on top. Yeah. So it's So you can buy your like general houseware stuff or whatever, and it all looks really nice and really pretty and very aesthetic. Right? They buy some good stuff, and then it's cheap enough that it works for a while, and after a year or something, it breaks, and you don't care because you just go and buy it again. But it was so cheap that it doesn't matter.
Wait, and how long
comparatively
microphone of yours then? How long have you had this microphone of yours there?
I've actually had this like I think like 4 or 5 years. So to be honest, it also lasts a lot longer than you think. Same with the my microwave, my kettle. It's pretty much prime when you first move out as a young person here. You just go to Kmart and buy your whole house.
Okay, that makes a lot of sense. That makes a lot of sense. And it also makes a lot of sense why you feel like your microphone's crap. Because it's been 4 years and it's effectively the Australian version of a TU one.
But I even bought the cheaper one from like they offer a more expensive one, but I bought the cheapest one.
You know, LJ, you're a very successful trader. You're also quite a successful entrepreneur.
I know I got some cheap rubbish.
Spoil yourself a bit. Come on, mate. Like, spoil yourself.
It was because I used to have like a headset, playing games and stuff, which I spent like $500 on with the, good mic, good audio itself, plus the microphone, that kind of stuff. And then it just got crushed. Like I had an ex-girlfriend, ex-partner actually just like stepped on it. I got destroyed. So anyway,
That's generally how my glasses end up. I forget them, and then I sit on them. I'm 90 kgs. I weigh myself every morning. I'm like 90 kgs, and unfortunately, I don't think glasses are made to withstand that level of pressure.
yeah.
So I know how you feel, mate.
Probably not.
I haven't destroyed any like electronics with my physique, but glasses, I've destroyed my wife's glasses with my physique. Same thing. She takes it off because there's something in her eye, so she's cleaning her eye or something. She takes it off, she puts it next to her. I don't see it because I'm not wearing my glasses, and then I just go, and then they're all mangled.
Yeah. It's just look. That's the glasses are never going to survive with that. But yeah, it's some stuff like I've got a bunch of like stuff I've actually paid up for, and then I've got random like cheap $15. Like this keyboard is like I think it was $600, and then I've got a $15 microphone. It's like
I'm not gonna bring my keyboard up. Yeah, I'm not gonna do that. It's got a lot of colors, but it's very dirty. So you can see the corner. And then I have a Logitech G Pro mouse.
I've got a Razer Naga.
So
For the actual buttons.
But I think if I may interject, hello everyone.
Hello,
I think
Victor.
it's a great thing to be able to not be too sensitive with brands and premium stuff. Why? Because it allows you to just live more efficiently money wise. If you're stuck to, I'm only gonna be buying iPhones, or I'm only gonna be because it's this color because whoever is on wherever platform showing it, then guess what? You're gonna do less with your money. I mean, money is always doesn't matter how much you have of it. It's always a determining factor for just about everyone, unless
Yeah.
you're I don't know Elon Musk or so. But so I mean, why not be you go around go about it wisely with it? I'm totally there with you, LJ. I like same as you. I like some things. I really want the best of the best I can get. I don't care if it costs extra double. I don't because that's what I need. That's what I want. But for many things, it can be as cheap as possible as long as it is it does what it needs to do and it makes sense money wise. And it's I'm just like you. I think you're a similar person. I calculate everything, and if sometimes something is twice the price, but is not twice as good, in that case, why pay twice if it's only 30% better? Sometimes not even that. Sometimes it's just 10% better, but you're paying almost twice as much. Does not make sense to me. Does not compute.
I agree.
Exactly.
Like, I can be frugal if I wanted to. There's some stuff that I really don't care about, so it can be as cheap as it needs to be. And then there's certain things where I'm willing to pay premium. I'm willing to go that one step up. So yeah, no, I agree. But the funny thing is just like the fact that he's had one for 4 years and it's like
I
a
know.
$50 Emu-esque microphone. And I was like, dude,
But
you're like using this for your day job. Like, well, a portion
exactly.
of your
That's the thing. It was meant to be my backup, and the other one broke, obviously. So yes, obviously now I do this every day. You would think I should buy. I was looking at like Rode microphones or something else like that to pick up. So I do have it on the list. I just have to go and buy one.
I mean, you don't have to go Rode. You don't have to go that expensive. It's the same with earphones or whatnot. You don't have to go Sennheiser and stuff like that. But you can get like proper good Sonys, or you can get like proper good, like even gaming ones, Corsair and whatnot, that are very good. You know,
I'd probably get like a good one. I'd just go and buy it. So like secondhand, like used. So go to like CEX. Like it's the same thing. It works perfectly fine, but you can get it for like half price. Right. Perfect. Yeah. And then again, it becomes that thing of, again, the like time you have it for.
yeah, what you get out of it and how long you've had it.
Yeah. It's like this chair I've got. This, you guys probably can't see it on stream, but this is nice brown leather chair I've had, God, I think now for 12, 13 years.
Oh, I was about to say, can you imagine the amount of flatulence that has gone through that?
When I bought it, it was very expensive. It was like $800.
Jeez.
But it is such a comfy chair. I sit in it all the time, all day, every day. So it's worth putting that money into it. And the other thing was I was buying like normal chairs for like $100, or 150 or something Australian, obviously. And especially back then with how much when I was like built, they kept breaking. Like the back would just, snap. So eventually I went, okay, I've pretty much spent $400 on chairs because they keep breaking. Might as well buy
$800 holds my
quality. Yeah, and I've still got it now. Now I probably need to replace it. It's kind of dying. The leather's gotten a bit, But it's worth investing in quality.
Yeah, I agree. Certain things definitely worth investing. Like for now, I would not be investing in anything Forex related, CFD related, because right now we unfortunately have some US and Canadian bank holidays. So I agree with this. I would say it's better to just kind of like stick to the sidelines for today. However, I see that we have 357 people currently watching us. First and foremost,
Indeed.
Thank you very much to all of you for joining us. We really appreciate. For those of you who are confused as to what is going on here at the moment, because the market is a little bit slowed at the moment, we're just having a little bit of banter and a little bit of let's say a side discussion that's not just necessarily Forex related. However, now that everybody is here, while we have 373 people plus Victor and LJ and Samir in the background, tomorrow we have the 10-year anniversary event for the Fivers. 10 years. 10 years. Established in 2016 by Gil Ben-Hur. Okay? Tomorrow at 2 o'clock.
You've gone completely underwater, Rich. Not making it.
Yeah, you gotta repeat that last 5 seconds or so.
Yeah.
Can you hear me now?
Yeah, now you better. Yeah,
okay. Let's try this. All right. Let's try again. Where was I? 10-year event tomorrow, 1400 GMT, so 2 o'clock GMT. What will happen is we are going to have a regular stream like we are now with the regular start time, 8:30 GMT, but we are going to stop this stream tomorrow at 2 o'clock. And then everybody that is here with us, join us in the live event stream happening at 2 o'clock GMT. There will be a link in the description box below, and we will also drop the link in the live chat as well for that event. So we've been testing the whole day today. It looks great. You guys are going to enjoy it. Now, why should you be there? You should be there first and foremost to celebrate with us. Come on. Like, celebrate with us. It's our 10th birthday, mate. Come on. We're giving away $2 million worth of prizes. It's going to be all kinds of groovy accounts. On top of the $2 million worth of giveaways, we are also going to have some discounts on some accounts. Some, let's call them first, I don't know, like, let's not call it first come, first serve, because there's going to be more than enough of them, I think. It is that it's from us to you. We want you to have first dibs on a new account, that kind of like thing, if you guys are following what I'm saying. What we will also have is we will have some community awards. We are going to give awards to people in the community that have made an amazing impact on the Fivers in the last 10 years. So please stick around for those things as well. And then we're going to have a fair few announcements. And these announcements that we're going to have, everybody's been waiting for these announcements. Now, I'm not going to say what the announcements are, but you can use your imagination and you can kind of like decide for yourself whether or not this announcement is what you want to hear. It's what everybody thinks, I think. Yes, we're going to have discounts on accounts. We're going to have that. What time in Italy? What is the time zone in Italy? Is it GMT?
It's going to be 3
Standard
p.m.
Time, EST.
It's going to be Italy is going to be 3 p.m.
Okay, so it's GMT plus 1.
Yes.
Yes. So
it's minus one.
minus 1. Okay, well, we're starting 2 o'clock GMT. So I live in South Africa. I don't know what Italy is going to be. It's going to... What will it be? 3 o'clock?
It's going to be 3 o'clock in Italy.
Awesome. 3 o'clock. There we go, Jeff.
So 3 p.m., right?
3 p.m., yeah.
Yes.
So you can all join us there. It is a free event, meaning that anybody that joins the event, watching it on live on YouTube, you will have an opportunity to win accounts, and you all will have an opportunity to purchase the discounted accounts as well. So please join us tomorrow at 2 o'clock GMT time, and come celebrate with us. This isn't the only event that we're doing for this year. This whole year, 2026, is going to be the Fivers 10-year anniversary year. So every month, we're going to have events. So if you want to be a part of that, the first thing that you need to do is you need to subscribe to the channel so that you know when these things are going to happen, because we will make announcements from time to time. That's the first thing. The second thing is you need to like the video. That's the entry criteria. That's all we ask. We're trying to get to 100,000 subscribers now. Imagine if we reach that 100,000 subscribers.
I just checked the viewers. I think this is the max views that I've got, 392.
Well, we're
Hey,
saying
look, I was here holding the fort for now.
it's
right?
LJ. It's
That's
all
amazing.
LJ, man.
That's
We kept
amazing.
this up.
392. That's amazing.
Yeah, it's
It is.
all LJ, mate. So with that, sorry, LJ.
I actually moved the stop, so you gotta reshuffle. We got the final standpoint at what are these? 4987.
4987.
Yeah.
Yeah, I'm sorry, ne?
I'm up big on the Euro trade already today, so I'm fine to see how this goes.
Oh no. Oh no. Adding my 8 long position to gold.
Oy, oy, oy.
If it's an eighth position, that's probably
Lucky
probably
one?
a bit.
0.125% of your account per trade.
Yeah.
Wow, Richard, I didn't know you're my homeboy. I'm also from South Africa. Where? Yeah, I'm South African, guys. This gentleman just below us, LJ, is from Australia. Victor is from all over the world.
Australia.
Australia. And Samir is from India, correct?
Yeah.
So we are literally global. We've had viewers from Japan. We have viewers from America. I saw a few minutes ago. Queen's Nights Live series. I'm in America, but I will try to attend. It's perfect for you guys. Seriously, it's perfect. It's going to be a nice early morning session. I know of some people that have taken leave. Henry has taken leave in order to participate and be a part of it. So you can too. I know
Sweet.
that everybody tomorrow is going to have a sight issue. Everybody. Meaning they won't see themselves going to work because they'll be joining us with our 10-year
Yeah.
event. So,
And there might be some announcements for US traders, I guess, per se. So
Maybe. Who knows? They'll have
maybe.
to attend to find out.
yes, please,
Yeah.
please attend, guys. It is, like I said, it's free for you to attend. All we ask in return is just a like and a subscribe. Once again, so I don't forget to say this, I will post the link tomorrow. It will be in the description box below to the YouTube channel. And then, oh wow, we're 11 subscribers away from 99K. Oh, come on, 11 people subscribe, please. And
That's
then another
easy
1,000.
Very
peasy.
close.
That's gonna happen in no time.
It will be good news. It will be. All right. I'm currently sitting without electricity. I'm sitting on the generator. So I'm going to have to love and leave you guys. LJ, thank you very much for holding the fort while we've been doing our testing of the live stream on the other side. Victor and Samir, welcome. Thank you very much for joining us. Good luck with the market being as quiet as it is right now.
Yeah.
Thank you.
Holiday, bank holiday. Thank you. Thank you so much. And we'll see you tomorrow.
Awesome,
Indeed.
guys. We'll
Tomorrow's
see
a
you all
big day.
tomorrow. Have a lovely day.
See you, Rich.
Thank you, Richard. Thank you for holding
Take care, guys.
for taking care of everything you do in the forefront as well in the background. And I said -1, but everyone, I think those who were awake, it's a +1. Little slip there, but I didn't want to interrupt Richard or LJ as they were flowing so nicely in their conversation. LJ,
Cool.
you took the trade that you were looking you were looking for, that was gold, right?
Yeah, so gold long. So hang on, I'll jump over to mine because I will have to jump out shortly, actually go get some
Okay.
food. So this is the first gold trade initially back here, as
Okay.
you can see, which I took for a very small profit just here, which is about $40. I was looking for
Okay.
this to actually run higher. We just weren't kicking on. It was in about $600-700 profit up at these tops, but then we just weren't really getting anywhere. So I did TP on that. However, I did enter the extra long position. Where was it exactly? Let me double check. Was it 498? It was through here, basically there. And so I've got the stop at what are we looking at? 497. About there, roughly. And then, yeah, so looking for a close of this gap that we had up here. Depending on what broker, what chart you're looking at, we did have that spike higher on the candle because of the spread expansion. But basically, this is what I'm looking for the first minimum target, and then ideally just a bit above there. So I'm willing to see if this actually plays through. I did also clean up on this euro dollar short through here, so I've TP'd on that. I did have one first trade on Aussie dollar through here, which I jumped out of there and then re-entered on this one right now. So
Nice.
still in that trade, and then hence the gold trade I'm happy to sit in Let's see if we actually get this play coming through. But yeah.
Beautiful. And are they equally risking?
Yeah, so let's say, so I've already picked up what on this 1.8% on the euro dollar trade. I picked up what was it, 0.4% on the first Aussie dollar trade there. This would be another 0.8, and so hence the first gold trade I jumped out basically just above flat. It was like $40 profit, so 0.01 something percent profited. So I'm happy to have this risk on board after the other profits I've already made for the day. So if I get stopped on that, not bothered because I've already cleaned up on these prior trades. So
And in R value, are they all the different pairs, are they carrying the same R value?
no, they're all different. So R value, I don't really typically look at. I just look at more
Okay.
what I'm risking, and then whatever the potential take profit is. Whether it's a 2, it's a 1.5, it's a 3. It doesn't really matter. It's more just concerning where the cancel level for the trade is and the potential profit. And as long as they are generally positive, and I weight my personal perceived perception of the success chance of the trade more than 50-50, as long as that risk reward is higher than that, higher than a 1-to-1, then I'll take it. So for instance, this is like 1.9. That's a slightly wider stop, but if I see it as more than 50-50, no problem. Same deal with that euro dollar trade. And then similarly here with the gold trade. And as I said, I'm happy to jump out of a trade when I see it's not quite running.
Mm-hmm.
And I also re-enter. So like for this, I didn't wait for it to hit stop. Right, I exited it beforehand. The original. Oh, no, I can't even draw it.
I
Hang on.
actually, yeah, I actually support your direction in with gold. Um,
Yeah,
Not that I have a signal there. I'm not in a position to manage it, but that would be the direction that I would take as well. And to me, I mean, I'm expecting gold as well to be visiting higher levels more likely than not.
yeah. I think at this point, more likely than not, exactly. So hence, that's what I'm looking for. These high drives, but just like I said with this one, like that's where I was looking for somewhere up here, basically the same sort of TP as this second trade, but wasn't coming through. So I didn't wait for it to hit stop loss. I exited up through here, about $40 profit, and then re-entered
Hmm.
the trade later. So that's the other thing with the risk reward slash, whatever. Often will, if I just see the trade isn't working out, I'll
Hmm.
cancel it early before it actually hits the full risk kind of level.
So you don't put the stop to break even. You manually close it up.
Yeah, because I mean, we haven't for specifically for this trade. Like, obviously, we hadn't ran high enough for it to be. I would say for it to be reasonable to put it to break even, right? So if
Hmm.
we're up somewhere here, and I was potentially looking for that high level, then I would bring the stop to basically zero, right, or even
Hmm.
above that. So it's the stop loss would be. I mean, you can't drag a positive stop on TradingView, but the stop might be here by wherever this prior catalyst or some kind of relevant level here would be. So even if you hit stop, it would still be in profit overall.
Hmm.
But yeah, so that tends to be how I do it. So I'm pretty active with the management of the actual
Okay.
stop loss and TP.
All right.
Yeah.
And you are, it seems to me that you're still on the roll, right? Because you've been all of February, you have been hitting left, right, and center. It seems like you are
Yeah,
definitely on a good streak here.
I have been. So I've been taking stuff slower in general. and just being pretty selective. I've got my personal accounts where I've got some swing trades as well, which are still developing. I've also taken some. I've got like a chop account, is what I call it, like another personal brokerage account where I trade
What
like
do you do with that?
it's pretty much like the trash trading account. So really
Okay.
active times where you get news events trading from here to there, and I'm willing to just like sort of punch it, but it's like a lower capital base, that kind of thing. I'll just be using that to, if I'm making an extra couple of dollars, great, that'll pay a couple of bills, that kind of thing. If not, doesn't matter, and I'll keep working on it. So it's like a bonus type account. And then I've got the
Okay.
sort of more established stuff that I actually rely on, which are
Would you
much more structured and calibrated.
would you call your chop account an H account?
An H account, what is that?
An itch, right? When you have that itch, you gotta be in a trade, but you're not actually. Everything is not aligned. We all know these. We all know as traders. We have these moments. You want to be in the trade, but you're fighting yourself. And some people have an itch account. When their hands, their palms are itchy, they put their whatever itchy trade on those accounts, and it's a smaller, not so important account, and they get rid of their itch by trading on a less important account.
Yeah, sort of. I see what you're saying, but it's like a bit more of just a general high risk kind of account. Okay, so
Okay.
if this chart will actually load, so it's not quite that, but it has a limited amount of capital. So I know the most I can lose is whatever capital is in that account. But it
Mhm.
might be where I'm looking at something like this when you have these extreme events, and I actually want to short the euro, say on these, this
Yes.
massive pop through 120. But
Mhm.
on a prime, account that I rely on, is it going to be 120.40? Is it going to be 120.60, 120.80? Right. So the sort of scratch account will be where I can enter somewhere here, be willing to just take the, say if we had like a short through here, and say I got in like too early. I'm willing to just,
Mhm.
basically punch the whole account for this to then come back with like negative risk reward per se, right? Down to somewhere like that, just
Okay.
take that kind of variability. But it's still defined risk because I know exactly what's in the account, what I can lose, what I can potentially gain, and it's isolated and limited. It's not going to infect anything else, right? So
And,
that's
and
kind of the idea. Now,
it's
I
also
probably
a
wouldn't
good.
make it that much, but it might be like 50 or 60 pips or something, right? In that
Mm.
example, yeah,
It's actually a good feedback account. Because you you know we are constantly getting feedback from the market, but it's difficult to keep track of it, right? Whenever you have a bias, for example, and you want to know like how quantify that bias, how good is it, your timing and all of that. And it's good feedback, because if you're getting a lot of, let's say, on this scratch account, you're getting a lot of drawdowns, you understand you're getting in too early, you're too eager. You need to, on your bigger accounts, you need to be more, you know uh uh, you know waiting for a more confluence, or for a better timing. And if you are getting right at the moment, then it also gives you information.
yeah. And I also use it as a way to become very adept and becoming like climatized to dealing with extreme risk events, right?
Mhm.
Because sometimes you might get, I mean, it's very rare, but sometimes it does happen where you get like a financial market crash, a black swan event, something like
Mhm.
the dollar franc peg, falling out, and that might actually be affecting your like core trading profiles, core trading accounts that you actually rely on, right?
Mhm.
And so by wheeling and dealing in that kind of high velocity, shoot from the hip cowboy type aspect, you become
Mhm.
more comfortable with it, more skilled with it, more just, it's just gaining that ground experience per se.
Mhm.
Um, that if something happens in the other accounts, you can actually, okay, you come to the market clear headed, deal with it and manage it, right? So it's also like almost like a training experience per se. It's like trying to personally, like, intentionally put yourself in like an extreme position, almost like I don't know, an ice bath or something like weird like that, where
Yep.
you're, yeah,
So,
that kind of thing.
sort of a resistance trading, right? You got these, in baseball as well. Before the batter goes to the home plate, to the box, he swings with with some weights on, and that's done. It's done on purpose to kind of trick your, not a mind hack but a body hack, that it would be, thinking, making the bat heavier, and when you're going in there, you trick your mind to thinking that it needs to put on more force, but it's actually lighter, so you hit, you know the ball, you swing harder, faster. And I think it's something similar, not perfect analogy, but it's something like that. You're doing repetitions on, on a different level, with less accuracy, and that helps you on your other accounts where you actually need to be more accurate. You have a more structured plan, but playing along those, playing with the parameters of your views and your entries, also can help you uh, fine tune when it comes to your actual strategy.
Yeah, yeah, definitely perfect. That's exactly it as well. So it has exactly that benefit also of fine tuning those, like, especially when normally you'd be looking at this not on obviously a 4 hour, you'd be on like the 1 minute and
Mhm.
trying to let's see if I can actually go back this far. This is going to be ages, maybe not, but the point is, like, yeah, you'd be right in the, let's just go over here, you'd be right in the trenches of all the small, ups and downs in that moment. So yeah, that's exactly it, and it will help you get that refinement for the longer term trades, etc., as well.
Yeah, it it's uh
Interrupted, maybe.
it's actually,
Here we
after
are.
you explained it, it's not an itch account, then it's actually a helpful account, to fine tune, to um there's a word I'm looking for. Let me check that
It's
word.
the training grounds. Yeah, it's like I'm in the
It's a
dojo before.
calibration. It's a
Yeah,
calibration account. You're basic
yeah,
calibrating your bias and your timing. That's very, very useful.
yeah. So almost like when people playing like Counter Strike or like a FPS game, right? And you do the click point stuff, trying to increase your accuracy. It's kind of like
Hmm.
that. So it's like a preemptive training dojo type element before you actually jump in the UFC cage and fight someone.
Yep.
And you train a lot of like abstract things that might not necessarily come up in the fight, but occasionally
They
there's an
do.
abstract element that does, and then it will help you, and you might now all of a sudden you're UFC champion, right? So it's
Yep.
those like weird acute things that don't seem to really matter, but when they do, they do matter, and they perform for you. So it's that kind of thing
Yeah,
overall.
yeah. It's repetition, right, and muscle memory, and also, neurologically, you're using the pathway more often, so there's less resistance. It's going to be faster whenever the you recognize the pattern again, not literally a chart pattern, but I mean your mind pattern, the process, the confluences,
Mm.
everything. You will be able to react more quickly with less noise. That's what repetition gives us. So it's not an itch account at all.
Yeah. So this is something where I go something like that, but on like the lower time frame thing, you draw up like a fib retracement here. You've had that first drawdown, almost like NFP. You get the first drawdown, you get another kick higher. You see where the candle's starting to fold over on the 1 minute. You've then got the low to the high point. This is a 50% fib, and then you just go something like that, right? And that's
Mhm,
the kind of scrap account. But if in the event that we kept rising up, make new highs,
mhm.
then oh well, it doesn't matter. you know, or potentially you might, depending on the scrap count, you might actually short again from like up here when we've created some kind of new structural high where it goes kind of like that, but then the candle just has a wick on it, and then we're clearly failing and go down, that kind of thing.
Mhm.
Yeah.
Totally get it. Very good. LJ, I'm a bit curious. Have you been sleeping better lately?
Uh, a little bit at the start of the year, yes. This probably since Feb, less so. Um, I've also been a bit ill. I've been back and forth in the hospital and stuff. Uh, right now, I'm actually a little bit sick. My partner was sick
Mm,
today. She took her first day off work in I think 3 years, so
wow.
she never calls it sick. Um, uh, but generally speaking, I would say on average, yes. I guess
I
yes.
think so because I am seeing a bit of
A
uh,
difference.
a difference. Yes, I think you're sleeping better. At least that would be my guess. Something like that. Something that I can see the depth of your thought process, and so it's cool, man.
Yeah, no, definitely. Like, look, I had a bunch of you know, doctor, whatever medical stuff last year as well, and plus
Mhm,
being just swamped with work. So I was just from every single angle I was getting hit. So yeah, definitely this year I tried to make sure I cull a bunch of that and getting more sleep, decreasing the workload overall, or at least the chaos of it all,
mhm.
and trying to get some rest and sort of just nail down on certain things that I need to work on. So it has been good. It has been good for sure. Yeah, and
Good
yeah,
stuff,
good to
LJ.
see you actually noticing it. So I guess clearly it's actually working. But yeah, with that said though, I will have to peace out. Um, been on stream for a long time with you guys today. We'll see you guys tomorrow. Don't forget about the event. Link in description as well. Like Rich was saying before he left, we got a bunch of giveaways, about 2 mil of giveaways, plus a bunch of recognition stuff for you guys in the community, all sorts going on. So we will still be here tomorrow for the normal stream. We'll just finish 1 hour earlier, then shuffle you guys over to the anniversary stream, and then we'll have everything kicking off from there. So see you guys tomorrow. Stay safe today. Market's probably going to be pretty quiet, so don't get too crazy. But I'll hand you over to Victor and Samir for now, and I'll see you guys tomorrow.
Take care,
Take care,
LJ.
LJ.
We
Take care.
appreciate your inputs as always. Very on point and very sharp. Thank you.
Peace out, guys. See you tomorrow.
Bye bye. All
Take
right.
care.
So, Samir, um,
Oh, that's my screen. Yeah,
how
I was buying
is
some. I was buying one account from, of course,
okay?
the Fivers. So I was, entering OTP here and there, downloading MT5, and all these things. That's why, I was checking my phone here and there.
No problem. No problem.
So,
How
so
is everything on your side? You can't wait for the open because there is no open today.
yeah,
Um,
exactly. From my side, trading wise, last week was again, very rocky. I did secure a payout, so I'm not going to be trading on my one of the account, which is of course with the Fivers. So that's why, in the meantime, I bought another account of smaller size, just to be in touch with markets. So again, the week was really rocky last week, but somehow I came up with 1 or 2% in profit. But the last week was really good. I only took one loss. The previous week that just went by, it was a not that good of a week, because on Monday I took a win, Tuesday didn't trade it, Wednesday was a losing day, Thursday was a losing day, on Friday it was a winning day. So it was a break even week for me, but I did increase my risk on Friday 2%, which normally is 1%. So that's why I made 1% on top of all these losses here and there. So why increase my risk? Because my I was my conviction, my confidence was little bit higher, because I already knew that I took two losses. Now third trade can be a win, because the probability of that trade winning is little bit higher based on my data and confidence. So let me explain you guys why I took this trade, and I'm gonna erase everything. First of all, we're gonna draw some levels here and there, which is very simple. We are seeing this as a resistance area, and we are seeing this as a support area, and we have this as a fair value gap. I always mark out my ranges as per the current price action, or whatever impulses we are printing in that particular market. So this is the FEG and this is the resistance. So my game plan was, if we impulse to the upside, then we can wait for some kind of pattern that I normally do. I'm a trend line or pattern trader, and I can short this. But if we impulse to the downside and if we tap this fair value gap, I can take longs at least till these areas. So what happened? We impulse to the downside, and if you see the nature of this price, it was not at all impulsive, printing aggressive lower lows. So I was like, okay, maybe this fair value gap can get respected. So I just aggressively took my trade here based on this trend line retest. I was like, okay, this is the last touch. Maybe again, this can be the last touch, and this is also the fair value gap. And even if see, you draw some Fibonacci from here to here, it is also near the 70% area, which I consider is a very good pullback area for these indices, and of course for gold also. So we have multiple confluences here, and my stop loss placement was really wide, as I don't want to get stopped out because of some deeper pullbacks, because we have multiple areas here. We have this small area which is also untapped. We have this area also which is untapped. So I just safely placed my stop loss at this area, which was the last, which price, this is the last price that I want price to go against me. So again, I go for 1 to 1, and I secured this type of trade. And if you remember, I took a long here. Let me see where it was. I think this session, it was a long day, if I'm not wrong. On the live stream itself, we was with Dave. So yeah, this was the long day. Yeah. So I just took a long here, and if you remember, my stop loss was here. I think I took a long here. I barely got my 1 to 1, and price stopped me out this day, and I was very close to the TP. But that day, I accepted the loss and I just moved on, and we moved to the next day, which is Thursday. Thursday also, I tried to go long here, and my stop loss was here, and my target was something like this. And Thursday also was a losing day. Did anything wrong? Not really. I was following the trend line breakouts and some kind of consolidations. So this day also I was following trend lines, and I was letting the day decide if it wants to be in my favor or not. Again, this was a winning day. And on Monday, let me explain you what I did on Monday. Okay, this is Tuesday. Tuesday I didn't trade it. On Monday, as you can see, this was a small consolidation. I took a trade here. My stop loss was, I think, below this. So this was a very beautiful win. Zero drawdown, just hits the take profit like immediately. So this was my last week. One win, loss, and then another win. So this week, Monday, bank holiday. So we are not expecting any good momentum on indices. So if this was a normal trading day, then I definitely would have looked for longs. Why? Because we have a lot of liquidity area here, and if we break out of this, I can easily squeeze my 1 to 1. So
Mm-hmm.
if this was a normal trading day, I definitely would have drawn my trend line something like this, and price would have closed above this area. I would have taken my trade something like this. But as you know, it's not the uh, it's the bank holiday, so we will not get that impulse that we get on a normal trading sessions or trading days. So this would have been my game plan if again the market would have been there would have been no bank holiday. So you can maybe dive into my mind how I see the markets here and there. I am up on my the Fivers account. Like, it is a decent percentage for me, so I will not be trading that account. So it is a very decent percentage, which is, good for me. So that's why I was purchasing one account to just, be active in the market. I think that is the practice that you guys can follow also. Like, if you are up like 3 4 5%, depending upon your trading or whatever strategy or whatever mindset you have, you can just stop trading that account and you can move on to the other prop firm account, which is, if you have, let's say, 50K with the Fivers, you can buy another smaller account, let's say 10K or 25K, just to be in touch with the market, or just to maybe prove yourself again, like, yes, I know my system works, and all these practices that you can follow as a trader. So yeah, this would have been again my game plan, but just to give you the outlook of other pairs, let's move to the gold. What
How
gold can
before
do?
before we go to gold,
Yeah,
Steve, how important is it for you to be in touch with the market? Because you said this is a practice that you observe. It's something you do whenever you have some good profits on your accounts. You, instead of waiting for your payouts, because that's something you explained to us that you do not keep on trading. You hit a certain,
yeah, yeah.
like a profit target. You stop trading that account until you get the
Okay,
payout, and then. But do you? I assume it is. But how
yeah, yeah.
important is it to you to be in touch
Okay,
like regularly with the market, and what happens when you don't do that?
okay. This is a very good question you asked me. So I consider myself as a I am a profitable trader, but at the same time, I know I am a human and I do make mistakes here and there. And that mistake can be on the live account also. So I am someone, a profitable trader, who knows that mistakes are bound to happen no matter where I am. So this is the thing that I know. Even one mistake can kill my results on the Profirm account. So I want to be as precise as I can when it comes to the live account. So having multiple accounts here and there, as I know the mistakes are going to happen no matter how perfect I am. So I try to make those mistakes in other accounts, like, what can be the mistake? Like, let's say I don't want to trade Tuesdays, that I maybe uh, trade on Tuesdays. What other mistakes that I can repeat? I don't change my trading system. That is not the mistake that I want to do. But these small, mistakes here and there, what other mistakes can be? Let's say I didn't wait it for a perfect candlestick, or these are just the outcome of the trade that I that I am in. And these are the journal type of things that I'm doing with myself. So these type of things I want to do on other accounts. I don't want to risk even 1% on my live account, or the account that I'm already up in. So that's why I do these kind of practices in other accounts, to maybe uh, you know get that confidence to I and at the same time, I know 3 4 losses I can that can happen in my as per my trading system. So I try to take that 3 4 losses in other accounts, not in my main account. So let's say if I hit 2 losses in a row, I know 4 losses I can hit. So if let's say today is my withdraw and I requested it, now I already have 2 losses here. The next trade can be a winning trade, and I know at the same time it can be a losing trade also. But the chances of losing that trade, how many trades that I can lose after that two losses that I have, I know the 2 losses I can have more, and I can take in that live account. I wouldn't be that in pain, you can say. If my live account is 2% down, I can handle that. If it is 4% down, that will be little hard to handle psychologically. So that is the main reason, to shift my drawdown in other accounts, so that I can win in the main account. Let's say if I have 2 losses, let's say if I have 3 losses, the fourth trade, the chances of winning that trade is going to be more. So I try to take that trade in the main account. So this is the practice that you also can follow as per your trading system or whatever data you have. So I think this is the main reason I try to be in sync with the markets, because I know I can have 4 losses in a row, and I try to take those losses in other accounts, as I have 100K with the Fivers. So I don't wanna, start fresh like after my payout. I want to know how many losses I'm hitting, how many wins I'm hitting. So basically, that's why I like to be in touch with the markets with the smaller accounts here and there, because as per my data, I know max losses I can hit fours occasionally, but three losses here and there I can hit month to month, but four probably maybe once in a quarter or something like this. So that is why it is important for me to focus on other accounts as well. And I hope you got my point.
Yes, I do understand what you're saying. Thank you for that, Samir. Very
Yeah.
helpful insights. Because they may seem like trivial, right? You're switching between one account and the other. You're playing with the odds. You know your stats when you have streaks of losses. What is the typical maximum of losing streaks? They can always be longer than what you've measured in the past.
Yeah, exactly.
Typically, if you haven't changed anything, they're likely to continue the same pattern, right? Same way as trends, they tend to they tend to continue. um your stats, if the market conditions are similar to previous periods, you're likely to have the same kind of stats going forward. And you can play with these odds, right? Why the same way you're playing with, the charts, you're looking for those patterns that, it oscillates up and down. Your stats, our performance, the performance of our strategy also performs, oscillates within a certain margin. And if you have enough data, if you're following, if you're collecting data and you're looking back and analyzing, what are my streaks, I mean, you can start playing with, with the expected move that you're going to have on your performance. If I hope I'm making that clear, not on the chart, but on the strategy's performance. You can also, for example, when you can put a moving average on a strategy, and you can pinpoint. Not all strategies are like this, but some strategies, they have edges that, um they for a certain period, it performs better, consistently better, and then other periods it performs consistently poorer,
Yeah,
worse.
exactly.
And so it goes in and out of its edge, so to speak. And you can spot these things. This is actually the next level for any trader. Once you have already optimized the strategy, you can start going to the next level. Next level would be, finding out when this your strategy is, you know on its period, on its edge, on its better time. And um and only trade, or trade more, bigger, when that happens. That's something. You're playing with the odds, you're trading the strategy, but you're actually trying to optimize, or um optimize is correct, but you're actually amplifying the edge that the market has, that the strategy has in the market, by recognizing, when it's in a weak, when it's going to be likely to be performing weak, and when it's likely to be performing better. If you know your strategy inside out, you probably can see these market conditions come, uh, you know, eh, from afar, and you can get prepared, to trade better or more conservatively, to lose less, or to win more, depending on which regime you're in, right? Every same way as with an asset has, certain asset classes, they perform better, like gold or risk assets, or perhaps safe assets. They perform better in a certain economic regime, right? Like central bank. Same way, our strategies, they have a certain regime where they thrive on, and other market conditions that they don't. That it's not favorable. They're still profitable overall, but during that period, it's having difficulty, and it might be even be losing at times. And recognizing, uh, that from your strategy can make a profitable strategy be way more profitable, or a break even strategy make it profitable, or even a losing strategy make it, break even or slightly positive. So can be very impactful for the performance.
Yeah, I think these are the small things that a trader can do. I think first thing is first, which is the capital. You should focus on getting the capital to buy the funded accounts. If you don't have the capital, you cannot buy the multiple accounts so that you can practice this thing. So let's say if you have $1,000. So, and again, at the same time, you should have confidence in your system. If you don't have confidence, I don't know why you will be purchasing the account. I think that is the mistake. If you are you don't have the confidence in your trading system and you are going with the trading. So I think if you are at that point, then you can buy a 2.5k challenge to just test out the system. And once you
Hmm.
have the confidence, I think this practice that I explained, you can buy multiple accounts, and you can make this thing happen for yourself. Let's say if you have 50k with us, and you made, let's say, 3%, which is going to be $1,500. So instead of trading it more, I want you to log that payout and move on to the other account. Let's say you have 10k with us, then you can do the same trading in that. So I think this is the practice that you can do if you want to pursue with the prof firms or with the fivers. Again, I will repeat, if you don't have the confidence in your system, start with the 2.5k, test out the things, test out your system, focus on risk management, your trading plan, all these things. Once it is fixed, then you can move to higher accounts, and then you can do this practice that I have explained. And again, it's bank holiday, we are really doing nothing. Actually, in the morning we did saw an impulse of almost 500 something pips. So no, it is actually, yeah, it is 500, right? 56 points. So, yeah, it is 500 if I'm not wrong. Yeah, as per the other pairs. Okay. Oh, we did saw an impulse on the open, which is 87 points. Let's see what US 30 is doing. We didn't saw that big of an impulse on US 30. Again, why? Because there is bank holiday. Let's see what other pairs are doing. USD JPY. Okay, GBP USD. I was having this area marked, which I wanted to go long from. We just missed by some points here or some pips. This would have been a nice area to go long from, which would have secured like 1 to 2. But this is not my main strategy. I follow trendline breakouts as I explained you, which is, I was having this trend line here. Let's go to the 5 minute, 1 minute. So not that big of an impulse we saw on the open, which clearly indicates no volume is there, no big players. You wanna maybe consider it that way, wanna trade in this particular on this particular day. So I think it will be wise if you just not trade today. If it was me, maybe first year in my trading, I definitely would have placed the trade. No matter if this is bank holiday, NFP, I don't care about anything. I just want to be in the trade. But with time, I think you come to a point where you get to know these days are not the trading days. So I think these days maybe you can see the market here and there. You can do paper trading, I don't know, but still you will not get that good of a volume. So as you can see, this is the usual market open. You get a very decent amount of candle. Let me show you on the previous session, which is this is the market open. You get what, 70 points or something like this. And this is today's open. Let's measure this. You get like 20 points, so you can see the difference here. So
Um,
today again, yeah,
on ES, on S&P, if you look at there was a big move on the S&P, even though there
on
is,
NAS
there
100.
NAS as well. Even though there officially there is no open, right? But apparently,
Yeah,
I'm not sure why. Maybe algos, maybe people being with their accounts. I don't know, but there has been an influx of volume, even though it's still holiday. It's not going to be as normal. But you can see the price moving in a certain direction, breaking out of the previous range and having quite a nice run on the equities, even though there is no open. Spot market is cash market is closed, right? We are observing the President's Day, celebrating George Washington's birthday, if I'm not mistaken. So,
Yep.
someone asking to for us to take a look at the dollar yen. If you want to, I can take a look at that,
Okay, let's see.
or go ahead.
Dollar yen. Yeah, I can give my views. I'll just take 2 minutes. Okay, I have this candle here that is a range for me, and above this we have a fair value gap, and if we see below this we have this support area, which of course can be treated as a liquidity point. So if I go to the lower time frame now, as we have some areas, now we can focus on how price is, printing itself, or what kind of impulses or what kind of price action we are getting on the smaller time frame. First thing is, first you can draw your areas, maybe support and resistance, order blocks, FVG, whatever you wanna, whatever strategy you have. And second thing is, notice how the price is behaving, or what price is doing. On the 4 hour we are consolidating. Let's go to the 2 hour, again the same thing, going to the 1 hour. Okay, 1 hour, this is a big wick. I think maybe it is yeah, this is because of some news. So right now we are ranging, as you can see. So we don't know if price is going to break to the upside or to the downside. But as of the market structure, we are printing lower lows. I can say, okay, there is a higher chance market can go to the downside. If we was here, I would have told you to, go short, or there is high probability we can come to the downside. As we are ranging now, so right now, what price is telling you? It is 50-50, right? So there are no buyers or no sellers who wants to take over. So how will we know? By just seeing some kind of impulses. So I think we have to wait for some kind of impulse so that we can classify, okay, buyers are taking over, then you can trade this pair. But if we see the weekly, maybe we can identify where the market can go. Let's go to the weekly candle. Okay, we closed with a very big bearish candle last week. So definitely sellers may can take over this particular week also, and we can take out this low. So I think the probability of price coming to the downside will be a little bit more, based on some weekly candles and the momentum which is going on in the current market condition. But again, as of the entries, I think this will be a good entry if you want to go short on this pair. I think this will be a good entry because the weekly candle is way too bearish. Even if it has to go to the upside, I think the liquidity will be taken first, and then maybe we can go to the upside. But definitely you can capitalize this move also. To capitalize this move, I think this will be a better entry point, and you will also have a decent risk to reward, and you can have a logical stop which is there. If you try to enter in between the logical stop loss, if you put it here, I think this is not the logical stop loss, because this is the last area where price just printed a high here as a lower high. So this will be a safer place to place your stop loss. So I trade this way, I just place my stop losses at very safer place. If price invalidate that area, it means my analysis is completely wrong, and I don't want to get involved in that market now. So for me, I think this is the invalidation point for shorts. Again, if you get the impulse first to the downside, then definitely you can go for longs by seeing some kind of market structure shift. So this is my point of view on USD JPY, this area for short. But again, if price didn't came here, price just impulse to the downside, then you can wait for a market structure shift, and then you can take the opportunities for longs, and you can classify this as liquidity point. So this is my view on this particular pair.
All right, let's visit the same pair, or shall we go to perhaps gold? Let me show my screen. Let's take a look at. Let me switch mine. All right. So let's go to dollar yen. Let's take a look at what we have on the higher time frames. We are actually, this is perhaps what this is the reason why you want to start from the monthly all the time. Even though it sounds boring, it sounds repetitive, it doesn't really change. The reading doesn't change very often. It takes a long time to switch from one side to the other. But with the reaction, if we know that we are reacting, right, of a fresh order block on the monthly, and we had a retest, an immediate retest right there, and the whole order block is actually retesting of another structure on a higher time frame, from to the left, you we can that opens the door and actually it lets us adjust the probability of what is likely to be happening. If we have the monthly structures, the market reacting to these structures, what is likely uh, to happen, you know, depending on depending on the trend, and in this case there's an uptrend. You can see the market has been making higher highs and higher lows, so you may not expect price to go all the way to the opposing structure in the same time frame, but that would be what we would expect if it would be rangy, right? If it would be rangy. um However, you would, if not the monthly, maybe the weekly, right? Because that's the next level. When we are ranging, it typically goes, it needs something of the same time frame to respond more often than not. And if it's trending, right, if it's against the trend being market on this time frame being making higher lows consistently and higher highs, then you want to be a bit more less ambitious with your targets, or understanding where the market wants to go. And if you're talking from the monthly, then the next would be a weekly structure, would make sense. There's just one scenario, one idea, one opinion, or not opinion, but one reading on the market. That means that, given that it wouldn't be, it's actually very reasonable to expect price to be um, going for another structure lower than what we are before we go back and retest these levels. Okay, so that already tells me that, I have a slight inclination, right, a slight bias to the downside based on the monthly. If we go to the weekly, we can see that the market has, where who is in control, right? We created a bearish order block, we created another one, and even, yes, we there is a bullish structure that is being tested right now. The fact is that, we are just looking at the size of the candle, looking at the fact that it was a outside bar, right? Telling us sellers are actually really taking control on the weekly time frame. And if we go to the daily, you can start looking for, the daily doesn't really tell us a lot. It hasn't told us a lot yet. There is a structure there, although it's not fresh, it's not part of a quasi, but it's still holding. And depending whether or not we can close bullish today, and if that were to happen, and what the next question that I would have is, what does the market does with this area, right? The area, the structure that would have been created then. If that is, if market comes back to that area, that would be the line in the sand for me, for the telling us if we're going to that weekly structure, which I think we will eventually, or we're going to have a little pop before we go to that structure. Eventually, I think it's likely that we're going to be making lower lows because of that higher time frame perspective that I just gave. So that's one thing. So one thing is to wait for the market to close today, and then see if the market, what it does when it gets back, if it gets back to that order block, and see if it has a reaction. If it does, then you can, ride that to at least these highs, and perhaps eventually all the way to the next structure, maybe on the daily, not on the weekly, because this is not a weekly structure. So maybe something that makes sense on the daily. There isn't anything else, so you'd have to go to the 4 hour perhaps. But you get the point, right? You can drive, you can ride that wave to something that makes sense between the current level, current price action, and the following or the next structure we have above us. That's one thing. And on the other sides, it's going to be very clear as well. If the market comes back and does not react favorably to that demand zone, then we already know that we're going to be breaking down from here, going where? To that level. That's another trade. We still have to wait for the market to actually come there and start interacting with that demand zone to understand what we want to be doing. But there's opportunity for both sides. So let's look at the H4. On the side of the H4, there is a reversal pattern that is at play, which is this. It's a nice one. It's a valid one. It's a quasi, and price has come to the first order block and had a reaction. You can see it here. Dug deeper into the second one and kind of had a somewhat of a reaction, but you can already see it. It's weak, right? This area is supposed to be the last entry order block on the H4 for the quasi, that big structure that I just drew. What are we getting from the market as it came back into this area? We came back, it makes a lower high, and yes, it's making higher lows, so that's promising, but it's still making lower highs as we speak, right? All of these are lower, and as long as that's the case, it tells us that the market isn't really breaking it. The buyers aren't really taking over. Yes, they're making attempts for 3 candles, 4 candles, but that's it, and that's not enough. So I think on the lower time frame for the intraday traders, would you want to be watching whether or not we're able to break this level or not? Because if we are, then I would say short term, the likelihood for prices to actually, because that would be the first time we make a higher high, right? That's the market shift that we're talking about. That's the break of structure. If we do get that to happen, maybe today, maybe tomorrow, I don't know, then we can start looking for the market to be pushing a little bit higher, with or without testing that daily order block that I'm talking about. This daily order block, which is not created yet, but by that time would be already printed. So I would be still, even if the market doesn't break this high, let me mark it for you guys. If it doesn't break this high, I would be inclined to expect that the price would eventually retesting and likely break that structure eventually. Maybe there's a little pop, but eventually break it, because that's what the market structure is telling us. Conversely, if we are able to break this, that gives me a little bit of more, tells me a little bit that the market is, actually attempting and somewhat succeeding in breaking structure, and I would expect then for price to come back to some area of demand, and then I'll still have to read the market structure, but I'm a bit more willing to believe, or to get in, put on some risk, because I understand that the market has broken structure before and is now getting in at a great, is looking for demand for that next push up. So it's gotta take this strategically. This isn't about predicting where the market is going next. It's about what needs to happen if we're gonna go, short term going up. What structure needs to be broken, and if it doesn't get broken today, tomorrow, what does that mean for our next level that we're gonna be visiting later? And depending on how it reacts there, what does that mean for a bit more longer term going forward, right? Maybe a week, next week, 2 weeks, and so on. So it's that's on dollar yen. There is let me see, this is a fresh order block. I'm not talking about uh there is, to me, there wasn't any setup here to go short. Actually, now that we talk about it, this is an area that I would go short from, because the H4 is fresh, and within that we got a fresh order block here. So that means that per my strategy, I don't trade dollar yen, but it doesn't really matter, because the strategy is not pair dependent. Is the strategy of order blocks. It fluctuates in its performance when I change from one pair to the other, but it's still catching, is still telling me the same thing. Where are the buyers or sellers taking control? So I would be interested in going short from this level. If anyone is trading today, which the market is slow and quiet, but can still make, because of that low liquidity, can still make some great moves. So we do have a little here, a little quasi, as you can see here. That's the neckline. And as we are breaking down the market, I would like to remind all of you that I think I saw a person in the chat asking how they can participate in tomorrow's event. In the description box below this stream, in the description box, you can find, the links where you can to the event. Tomorrow is it's an amazing day tomorrow. We're gonna be celebrating the 10-year anniversary of the Fivers. 10 years ago, the Fivers started as a pioneer in the industry, and it's gonna be massive. 2 million worth of accounts being given away. We have leadership in keynotes. We, explaining what 2026 is going to be happening in terms of the Fivers. We're going to be releasing a new program. There's going to be discounts. I know a lot of people in the chat and all year long are waiting for these moments. When you have a premium product, as the Fiverr does, you don't give discount that often, right? Because it's premium. You don't need to be, play with your price, because you got a good product, a product of quality. So, but now is the moment, right? There are moments that the Fiverr picks out and gives discount, as a token of appreciation to everyone who has been actively in our community, and giving back to the community, to the traders. So, and that opportunity is tomorrow. It's going to be a huge opportunity for everyone who have been waiting for getting new accounts. Maybe that account you've been eyeing for some time, you've been saving up. Tomorrow is your chance. So coming back to the strategy, let's see here. So in the description box, everyone, that's where you find the links to the event. It's going to start tomorrow, 2 p.m. GMT, right? You got to convert that into your local time zone, 2 p.m. GMT. Right after our stream, we're going to be, closing our stream 1 hour earlier, and we'll be directing everyone to that event, which is going to be amazing. All right, so let's go back to the strategy. So you do have the area of right here, the area of interest, and this is the order block that I would be looking for to go short. If it reacts to it, then I want to be. Let me mark the fib, so you guys know there isn't anything. There's only one structure, at least in this time frame, that I would be waiting for price to come back, and I'll start reading what it does when it gets here. Does it just continue higher? I don't want to be part of it. Does it start to get there and then slow down? Then I know that maybe, and it starts breaking structure, maybe there is a push down, and then we can take that trade down to perhaps that low, or maybe something lower. Depends on how it behaves and what time of the day is. Taking into account that it is a holiday, I'm gonna be keeping my targets. I'm not gonna be trading this, or maybe I will. I don't know. If I'm watching it and I see it signaled, then I will take it. But typically, if I were to take this, then I would want to keep my targets not too ambitious. I would like to, the very next level, the very first trouble area, and get out with whatever profit I can get out of the market. All right, that's the dollar yen. Let's take a look at yes, it was Abba Boo who was asking about how to join. My friend, it's in the description box. Just look below and you'll find all the information, the link. You click it, you'll see what the Fivers is about. We are giving back to the community. We're celebrating with you, this 10-year anniversary. It's also a celebration for you as the community, right? I mean, Of course, the Fivers is a commercial company, right? It's a company. However, you know, do you know what a blessing it is to have a proper, honest, transparent, helpful company who's trying to help traders like you and I, who are, at the beginning of a trading, you don't have capital, right? And you got to have a good company that is willing and puts out education, does these events, gives away accounts that's helping you to and putting making these streams. That's another example of how good, what a blessing the Fivers is for the traders all around the world. All right, let's take a look at EU. That's I'll do it very quickly. Today is the market has been going quite sideways, quite a lot. So we have on the higher time frames, the market has been so very strong. I must say, we did hit a monthly structure, and after that, actually, there was another monthly to the left, which I took away. And even though we are creating these bearish order blocks on that time frame, the market is still strong and still creates bullish structures that are not even retested so far. So that tells us a lot of good things. That's very bullish for EU. You can see that the market is still creating bullish order blocks. I mean, look at that big move, big candle we had not too long ago on the weekly time frame. That big move is still standing, right? It actually had, yes, it did have a huge a large pin bar, but the initial move is still standing. The market is just, even though it created a bearish order block here, I understand it, which is after it hitting the weekly. Fact is, as long as this move is still standing, even though it went up and back down during that candle, fact is it's still holding. And if it keeps on creating these bullish structures, it's inevitable, it's likely to be going higher. At least that's what the market is telling us. So we have there you have the weekly order block as well that is being retested as we speak, right? There we go. Look at that. Look at that little wick there on the daily time frame. Now you can understand why the market has been, having all these wicks here. Why? It's because of the weekly. Very simple. Weekly order block at play here. Other than that, there isn't anything else. There's that weekly, but there is no daily currently for the alignment. You'll have to wait for the market to actually reach the level below us to react to that structure. And let's take a look on the H4. And I do have a couple of structures waiting for price whenever price comes back. For that quasi that we're seeing here, this being the head, the left shoulder, the neckline. And I would be very, very interested in looking for what price does when it gets to this level. So far, it looks like the market looks very weak. We'll have to see if it actually has followed through, but it looks like the market needs something of a support, a demand, and either it's going to get it from the weekly structure we are seeing here, right? uh, or not. And then that means that it's going to be needing something else, something like the daily structure below, and likely, well, we don't know that, but likely we'll see some support coming in, and hopefully seeing price bouncing off of that, and we can get the next leg using a bullish quasi into at least this level, and eventually taking out these highs as well. That's on EU. All right, so I would like to, before we finish, because we only have a few minutes left, like to request you guys. I mean, the only thing you have to do, the only thing we expect from you is to hit the like button, subscribe to the channel. That's it. That's the only thing we ask from you.
Let's go,
Mir,
guys. Yeah.
let me check the chat while I was. We have
Actually,
one
we are
question.
seeing some momentum here. We do have bank holiday,
Uh huh.
but we are starting to see some impulses on US 30. So as you can see here, we are starting to see some kind of candlesticks which is impulsive on US 30, and the stop loss placement is also decent if I try to take this short here, which is I think 150 points. Yeah, 150. As I have multiple accounts, I might can risk some amount here. And we do have a targeting range also. As you can see, this support is never tested. So I'll try to take a chance here, which is 150 point stop loss. Let's say I'll try to risk. Okay,
You're taking a trade?
so we are ending the stream, but I do really want to take this trade. If we close below this EMA, I think my entry will be something like this. So yeah, I'm not risking this on my main account, and I don't even know if we close below, we can also push to the upside. So again, then my bias will be long here. So that's how I'm planning this trade. So we are, I know, almost at the end of the stream, so I'm just giving you my plan. I know we are at the bank holiday, but as it's Monday, tomorrow I'm not going to be trading, so I do want to take trade. I might can my trade might can I can hold over the day, and maybe TP stop loss is gonna get triggered tomorrow if we see no volume. So this is my game plan. I do want to take sell below this area, but if we break this trend line, then my bias is bullish. So as you know, we are price, as you can see, going to the upside. So let's see where we break, and yeah, that's it. And as Victor mentioned, tomorrow a big day, guys. $2 million in giveaway, and 400 stream views we got today. I'm really happy to see you guys. You guys are finding value here, and of course we are here to provide you value. Can be psychology, trade breakdowns, how we did it, all the things. We are open here. You guys just ask whatever you want to know regarding trading, and we are we are ready to answer all of your questions where you are struggling here and there. So this stream is again for you guys only, and tomorrow again a big day, guys. Let's go, guys, and we will see you tomorrow. $2 million in giveaway. Let's go, guys. I'm really excited. Let's go.
Yes, there are a couple of questions in the chat that we sadly have not been able to answer. Please come
Yeah,
back with those questions, and we will. We are, of course, limited to the time that we have, on live, and there's only so many minutes and so many things you can do in those hours we are live. So please come back, ask those questions. I have a lot of desire to answer them, about consistency, about losing the account when you pass all the phases. Um, it must be very, very hard because, when you're starting out, getting those phases done, passing those phases is, it's quite a feat, I must say. And when you're starting out, it looks very, very difficult. And getting them, passing those milestones, and still losing the account afterwards, that's a sore. That's a that feels hard. I know your pain, my friend. So, but keep those questions coming, and we will be answering them on our next episode. Remember tomorrow's event, 10 years anniversary of the Fivers, the best prop firm. I know this is me from the Fiver saying it, but check the facts, and you'll see that
yeah,
I'm not
exactly. Do your
exaggerating.
research, and you will know
Yes,
that whatever Victor
exactly.
is saying is actually true. Do your own research, you will know.
It's we are the best platform. The
Yeah,
Fibers is
exactly.
the platform in the industry, and that's something we are celebrating with you tomorrow, so you don't want to miss that. We also have a session on this Discord community where you can get in and we can continue this chat and spend some time together with like-minded people. So you are all invited to the Discord community as well. If you don't know what I'm talking about, go to your dashboard, left upper corner. If you don't have a dashboard, then you have to buy an account. Buy an account, get your dashboard, and get into the Discord community. If you're thinking about buying that account, tomorrow is your day. You have a lot of discount coming your way. Discount for buying accounts. So, all right. So that's it for me. I hope you guys have a wonderful day, and I'll see you tomorrow. Bye bye.
Take care, guys.